Yahoo Finance's Julia LaRoche, whom you will know from this show, Wi-Fi AM, and our other live shows, she's out in San Francisco right now at the Dreamforce conference that is put on every year by Salesforce, and she had a chance to sit down with Salesforce's co-CEO Keith Block yesterday. He discussed artificial intelligence and ethical use of technology.
When people talk about artificial intelligence, sometimes it seems like there are two camps. Some that say it's going to be, the next electricity, it's going to be the greatest thing, and others who say this could be worse than nuclear warfare. Where do you stand on the whole AI debate?
I think technology is a force for good. But I will say this, I think if it really starts with policy and cultural values and trust, and that starts at the top. I think it's very, very important for technology companies to understand the implication of technologies like AI, which is very powerful. By the way, we're at the tip of the iceberg as it relates to artificial intelligence. But it also means that the government has to be very educated. Mm-hmm. And the government is great, but it can't do it alone. Technology companies, they can't do it alone. So that has to be that partnership, that private-public handshake to drive the right policy for ethical use.
And one final question.
Sure.
Going back 20 years ago, Salesforce was really a disruptor. They were a pioneer for software as a service, cloud. When you think about the next wave or next act or what it is, what do you think is the next disruption out there? How do you all disrupt yourselves?
Well, at Salesforce, we try to disrupt ourselves every day. We have something we call the beginner's mind. And so there is nothing sacred. We review everything. It's a culture of continuous innovation, and I think that's what drives our country, our company, and that's why we've been so successful. But when you think about technologies, you think about things like artificial intelligence, you think about blockchain technologies, not in our strike zone or in our industry, but certainly some of our customers, like 3D printing. You can think about quantum computing. So there's a lot of really interesting technologies that are out there, but I'll go back to what I said earlier. Innovation creates innovation. So there is innovation out there that we're not even aware of that will be coming next week or next month or 12 months from now. So it's a very exciting time.
Retail earnings are in the spotlight all this week. Target, Urban Outfitters, L Brands, which is the parent co of Victoria's Secret, and Macy's are some of the names that are in focus. And joining us now to discuss is Lioness Group CEO Melissa Gonzalez. Hi, Melissa.
Good morning.
Thanks for coming back on.
Thanks for having me.
Let's start with Target. Big beat on basically every metric. So what is Target doing right? I feel like it's been a while now, many quarters in a row that we've heard, yes, brick and mortar, so much is dying, but man, Target is doing great.
I think they're doing a really good job of understanding how to utilize their physical footprint and how to rethink it, which is really what's needed today in retail. And so they're creating really kind of that 360 approach of how all channels are going to support each other, and that's working well for them. So really thinking, how do we rethink our store to also be a fulfillment center in addition to being a retail experience, and how does one drive traffic to the other? And you saw a lot of strength in their investments that they made in same-day pickup, same-day delivery, really driving more traffic to the store. And then now it's really going to see how do they convert those people, kind of like what we saw with not happening as strong with Kohl's.
Right.
How is Target making that happen and getting people to shop new categories that they didn't in the past?
We were discussing here on the couches yesterday, the three of us, Heidi was in your seat as the retail expert, the idea that it seems like the chains that are in the middle are getting pushed out. I mean, Target and TJ Maxx is doing great, the low-cost places, and then some high-end premium stuff, some premium brands are still doing okay, but then the Kohl's and
the Urban,
Macy, we're going to talk about Urban Outfitters,
right.
Is that what's happening, that the middle ground stores are struggling?
Yeah, I think they are, and it could be a little bit indicative, you think, too, of how just the economy is working as a whole. Middle class is kind of getting squeezed. So I think it could be correlated to that. But people are value-oriented, and brands like Target and Walmart really still lean into that, and they have, strong relationships with those customers.
I want to get your thoughts on what we're going to see when we see Macy's Nordstrom report, because the department stores, as we know, the theme has just been that they can't keep up with these big box retailers, as well as some of, like Dan mentioned, luxury brands. So in terms of growth, do you think that these companies are well positioned to sort of take on this holiday season, and what kind of commentary are you expecting from management?
I think that they are. I think that the two that you mentioned in particular are taking, innovative approaches to how they're thinking the physical footprint as well. Nordstrom just had a tremendous opening here in New York City with their tower, and I think that they're doing a lot to think through how do we create an environment that's different and exciting and drives traffic, and they're having a fresh approach to pop-in shops, and they're leaning into buy online, pick up in store, and so they're kind of thinking holistically about the strategies, and a lot of those decisions promotions are helping drive traffic, helping drive margins. So as long as they continue to have that approach, I think it'll be positive for them.
I want to make sure we bring up L Brands, the Victoria's Secret parent co. We've talked so much, a number of quarters in a row, they've missed expectations, and we talk about how the brand really needs reinventing, but clearly it doesn't want to do that. In fact, just last night I went to a show in Midtown, so I had to be up in Midtown, went to see a play, and I passed a Victoria's Secret store, and one full window display is a photo. I wish I'd taken a photo of my phone, but it's very old school Victoria's Secret, and I just looked at it and I was struck by they're not changing the brand at all. You know, it's a model lying down on the bed with a very revealing, see-through sheen bra, and it's like they don't want to change the brand. And didn't one of the models just recently come out and say, I don't identify, the brand isn't very empowering? I think Bella Hadid or Gigi Hadid. So what do you expect from L Brands earnings?
Yeah, it's interesting to me that they're kind of not evolving as much as they should and really understanding what consumers are looking for today. And all these fast-growing digital natives are coming in and kind of kicking their butt, and they're being more inclusive. And when they think about the fabrics and the materials and the size and the fit and just the body messaging, and the people really care about that today. And also just the in-store experience is kind of, it's messy, it's brutal. They kind of really haven't leaned into how do we make it a customer experience again. I think they've relied a lot on the heritage of the brand, and it's not keeping up with the changes, the expectations that consumers have today.
So I know you touched a little bit on this holiday shopping season. It's actually shorter than some previous seasons that we've had in the past. I'm wondering what you're expecting from the holiday season this year. Are some of those winners going to, win big this holiday season? Are some of those losers going to continue to lose big this holiday season? And how is online shopping, do you think, going to impact it?
Yeah, I mean, I think that the condensed season will work well for those who have good logistics plans. So, like a Target, for example, where they've really invested in kind of that same-day shipping, same-day pickup, because you're always going to have those last-minute people, and I think you're going to have that even more now. So those that really lean into good assortment but also convenience, I think are going to be well-positioned for the holiday season.
All right. We will see what happens in the holiday season. Where are you going to shop?
Amazon.
I'm most likely Target.
I've already bought some things via targeted Instagram ads. Pathetic.
You love
They
those.
work. They work.
Yeah, I think Target's going to be in a good position partnering with Disney and Toys R Us. I mean, that's a gap. So
Wait.
toys are big.
So wait, I want to ask you this really quickly. How many, because there's a study about work shopping, how many people are actually shopping online while they're at work? With a shorter holiday season this year, do you think that's actually going to increase at all? I will admit I have done it. I know Heidi has.
No, I have
Why
not.
are you creeping on me, first of all?
We're next to each other.
People shopping online at work?
I think people are shopping online at work. I peep it from my desk. But also commuting. I think people are doing it online and, on their way to work, on their way home from work. So that's why everybody who has a mobile interface are going to be best positioned.
I'd rather they read books.
Okay. Dan.
All right.
All right, Melissa Gonzalez, thanks so much.
Thanks
Really
for
good stuff. We'll have you
having
back on soon.
Salesforce's annual conference, Dreamforce, kicked off this week. Yahoo Finance's Julia LaRoche is live there. And Julia, you had the chance to sit down with the company's co-CEO, Keith Block. What are some of the takeaways you can share with us?
Yeah, that's right, Adam. Well, right now we're going through what is known as the fourth industrial revolution, where technology is literally changing how we live, work, and connect with each other. And key to that fourth industrial revolution is digital transformation. A lot of companies are going through this transformation, and who is the go-to guy that CEOs are calling? That is Salesforce's co-CEO, Keith Block, and he has an interesting take on how technology is transforming business, but also how companies can apply these technologies and do it with humanity. So take a listen.
Well, every company in the world is expressing this opportunity for digital transformation. And I think of digital transformation in three ways. Number one is the technology transformation. So when you think about cloud, mobile, social, data science, artificial intelligence, all these technologies coming together, a CEO has to sift through, how do I apply that technology to my business? What does it mean? How can I bring products to market? So there are so many challenges absorbing that technology. The second wave is a cultural transformation. What are the ethical uses of that technology? What does it mean to my workforce? How do I absorb that technology? And then the third is a business model technology, like the example I gave you with Marriott. Or today we highlighted in our keynote State Farm and how they're reinventing the agent desktop experience for their customers. Or you think about a company like Barclays Bank, somebody like Jess Daly, their CEO, who wants to completely reinvent the experience that you would have walking into a bank, or you could be a corporate banking customer, you could be an investment banking customer, but it's a uniform, consistent experience. The most important thing that we'd like to do is to advise these CEOs around how to embrace this digital transformation. And what we tell them is, if it's important, then you become the chief transformation officer for your company. And that's what we're seeing, and that's how we advise our clients.
You know, it's really interesting. You're just mentioning those three pillars. It seems like there's this human element to it. And when you talk about technology, sometimes that brings up, fears or just the application of technology. There could be internal politics, things are siloed. A lot of concern around that. So it seems like you have to get that human side right. Is that the hardest part of digital transformation, is getting the humanity right when it comes to it?
Well, I think you're hitting on something that's very, very important. I was recently at a partner conference and I challenged the partner community that was in the audience, and I said, look, we're all doing amazing transformation work for our mutual customers, but what are we doing to help them through the downstream implications of that technology? Again, the ethical use, the workforce implications. So it is very, very important. People get scary about it, but if they get educated, if they understand, and we think about what's important, which is really values-based companies, and how we think about the importance of values. Salesforce has 4 core values. Trust is the number 1 value. So if you have a trusted relationship with a customer, this is going to help. Number 2 is customer success, focusing on the customer success and making sure that they adopt the technology in an ethical way, in a good way. Number 3 is innovation, the importance of innovation, because we want to innovate with our customers. We want to co-create with our customers. And the last one is equality. I think you understand that we take very, very strong positions on equality. We think everybody should be paid, men and women should be paid the same, for the same amount, the same type of work. And everybody should have the same opportunity. So it really boils down to trust and culture and these core values.
And yeah, guys, I asked him if digital transformation has a beginning and an end, and he says no, that innovation continues to come in concussive waves. And we're talking about innovation that we don't even know exists yet. But speaking of innovation, I'm here at the Dreamforce campground, and as you can see, we have a lot of different Salesforce vendors, partners, showcasing the latest technologies, the latest innovations. There are 171,000 attendees here going to these various keynotes. We still have President Barack Obama this week to deliver a keynote, a lot of athletes, big CEOs, people who are in entertainment. Also, we have a Fleetwood Mac concert coming up, so there's a lot of excitement here at Dreamforce.
Commission-free trading platform Robinhood is launching in the United Kingdom. It was founded back in 2013 here in the United States. It is now valued. It's $7.6 billion. Vlad Tenev, Robinhood co-founder and co-CEO, is joining us from our London bureau. And there's a bit of a delay through the transmission. Just want to let the audience know. And Vlad, Robinhood UK will launch overseas in early 2020. So how does Robinhood UK differ, if it differs, from what you can do here in the United States? Because your team pioneered no-fee, trading, and now everyone's doing it.
Thank you very much for having me again on your show. So Yes, today we announced Robinhood in the UK. So starting today, customers can sign up for early access to our commission-free investing platform. And in the UK, starting early 2020, we'll be allowing customers to invest commission-free in over 3,500 US listed equities and over 1,000 global stocks as well. And we're bringing a number of features, the best of Robinhood really, to the UK, including personalized news, Robinhood Gold, Robinhood Snacks, our podcast, and we're just very excited to make this our first live international market outside of the US.
So what kind of demand have you seen there thus far? Have you had any kind of pre-signups or any indication of what demand is going to look like? And post-UK, what's the plan in terms of international rollout?
Yes, absolutely. Prior to announcing this morning, we had done extensive customer research, spending a ton of time in the UK talking to customers directly, and we saw sort of the groundswell of excitement. So we had early indications that there was really a need for a product like this in this market and a lot of latent demand. And since we've released the waitlist and opened up signups earlier this morning, just a few hours ago, the demand has been very strong and has exceeded our expectations.
Hey Vlad, Scott Gam here. You mentioned podcasts earlier. Talk about the importance of having financial content within the platform to keep users engaged, aside from the core stock trading component.
Of course, it's very important for us. Our mission is to democratize access to the financial system. And in the UK, which is predominantly more of a saving culture than an investing culture like we have more of in the US, people need education, especially young people who may be investing in the markets for the first time.
Hey, Vlad, it's David Nelson. I'm going to bring up the elephant in the room. Adam referred to it just before. Ameritrade, Schwab, and others are now offering free trading. How much is that a challenge for you? I believe on your last funding round, you're valued at $7.6 billion, if I have my data correct. But it seems like everybody's doing this now. How are you going to keep ahead of the pack?
Well, let me take it back to our mission. Our mission is to democratize the financial system, and in order to actually execute on that, it's not enough for our customers to have the best value and the best pricing, but actually it's important for customers industry-wide, for us to actually create a change industry-wide that makes everyone pay lower fees and have access to great value investment products. So this was a huge step in that direction, where literally practically overnight, tens of millions of customers of other brokerages had a better pricing.
Absolutely, you have brought about this revolution, but what do you offer a potential investor or someone who wants to trade some stocks that they can't do at the larger platforms now? Because they've caught up, haven't they?
I would say, it's really the combination of pricing and customer experience, especially with our mobile products, that has always made Robinhood successful. Clearly, the pricing is easy to understand and easy to talk about, that Robinhood has commission-free investing across multiple assets, but it's never been just the pricing. And I think Robinhood still offers significant value and a superior customer experience.
Hey, Vlad, your latest valuation puts you guys at $7.6 billion after the latest funding round. It's been kind of a tough year for unicorns coming public. Is that coming in the future for you all? What are your plans on that front?
We don't have anything to share about IPO timeline at this time.
We hope when you do have something to share about it, you'll consider making that announcement here on The Move. Vlad Tenev, Robinhood co-founder and co-CEO.
No doubt.
We wish you the best. Happy investing.
Joining us, Dan Howley, of course. Shares for messaging service Slack are in the red, falling by some 10% from earlier today, now down just about 9.3%. All comes after Microsoft announced its rival workplace messaging service saw an increase of millions of daily active users over the past few months. Dan, I have not used Microsoft Teams, so sometimes I think maybe we're not very good at this story because we're all trapped in Slack.
Yeah.
So we think like, oh, of course Slack's gonna be huge because that's what I use all day.
I mean, like,
turns out other people are using something else.
Yeah, when Slack actually IPO'd, I kept bringing this up as, cool, Slack is hot right now, but it's not going to be hot for a long time.
Look at the big brain on this guy.
I got, it's like, it's all up in here, all up in here. I called the iPhone doing well, I'm calling this. The issue with Slack and Teams is that Teams comes with Office 365, and a lot of companies already use that.
Forced install base.
Yeah.
It's like Apple Music.
Exactly.
Yeah.
So why wouldn't they then use Teams instead of going out and subscribing to Slack? If they already have something that can interface with their existing productivity services, they're going to do that. And Teams has added a lot of functionality over the past couple of years. They've rolled it in with Skype now, so you have Skype capabilities in there. You can do phone calls. Anything that you can really do in Slack, you can do in Teams. Yeah. So it's a true competitor here.
Now, I mean, look, companies in general are not nice because they're companies, but Microsoft has been somewhat friendly-ish under Satya Nadella. However, when it comes to this specific issue, I mean, Stuart Butterfield has needled Microsoft at many points. Basically said, we're Slack, we're better. How much do you think Microsoft is thinking about the way that Slack has taunted them as they try to iterate this product and deepen its integration with their extremely successful Office 365 suite?
They're going to crush Slack. That's their goal.
Because it's very Facebookian of them to care about that. It's not really the way that Microsoft has operated, but this kind of feels like they might be more Facebook and less Microsoft.
Well, when you look at Microsoft's earnings, they still make a ton off of their productivity suites. I mean, I believe it was 11.1 billion in last quarter for their productivity arm. So it's still incredibly important to them, especially the commercial side of things. They need to keep companies coming back, and they need to entice companies that might have left. And they recognize that a good way to do that is through these types of messaging services that workers, I don't know when we decided that messaging services were fun, by the way. What happened to us as workers to say, you know what I really want is to be able to talk to my boss at 9 o'clock at night.
I used to use AIM at work.
Yeah.
Like 8 years ago.
We decided that this was a great thing, but Microsoft is going out of their way to crush Slack, and I think they are going to come out on top. That doesn't mean Slack will be pushed out, but when you look at the greater landscape, like you're saying, we have this kind of boxed-in idea that everybody uses Slack, but this is really just for some developers and for media folks that use Slack. In reality, there's multiple messaging services that are out there right now. Teams is one of the biggest, but there's others that are being used by different types of companies, and I think for Slack, Microsoft is going to continue to be a thorn in their side as they try to grow. And I think all of the kind of huge groundswell support behind Slack leading up to its IPO might have been a little overblown when you take into account the fact that Microsoft is Microsoft.
Is there a strong barrier to entry to this type of technology? Because why isn't Google in this space already? Why isn't any other, for that matter, cloud as a service company providing this when it seems like the technology might not be as, and maybe I just don't know, as advanced as seemingly other types of software offerings out there?
Well, Google does have, its enterprise suite, and you could still use GChat, but they're actually going to be sunsetting that. You can still get into it via Google, but there really does seem to be a low barrier to entry for something like this. And I think for Microsoft, they were working with Teams for a while now, and then when they kind of recognized, I think it was when Slack bought out HipChat, and they kind of realized, well, this is going to be something that we're going to need to push full steam ahead into, and they've absolutely done that. They've integrated different technologies. You can, for instance, take a picture of a whiteboard and it'll straighten it out and clear it out for you. All the different types of AI that they're working with on Office 365, which is something they continue to push forward as far as the technology goes. AI is all over that now. That's really what they're trying to do with Teams, and I think Slack is going to be hurting as Microsoft continues to push Teams as a really good competitor to Slack.
I'm going to bring back Campfire.
Oh, yes, that was hot for a minute, right?
I don't know.
I don't think I ever used Campfire.
Too young.
Youngin. Go back to the Fed. No, I'm just kidding.
Oh man. We didn't. We used Link, Microsoft Link. I think.
That was like a
Skype. It was
precursor.
like a Skype version.
Yeah.
I wonder how much value people are assigning to Microsoft Teams, because Slack's $11 billion.
It doesn't have to
right?
assign any. That's the problem for
Right,
Slack.
but
It's all part of the
still break
whole
it
bigger.
out sometimes, and are they undervaluing it? But yes, it is a big problem for Slack. Dan Howley, we'll talk with you tomorrow.
Sweet.
Expectations for 5G are sky high. The telecom industry is staking its future on the growth and success of the emerging technology, including Qualcomm. At its analyst meeting yesterday, it predicted a boom in 5G adoption, projecting more than 450 million 5G smartphones by 2021. With us now to discuss is the president of Qualcomm, Cristiano Amon. Thank you for being here.
Oh, happy to be here. Happy to be here.
So this is, there has been so much that has been staked on 5G. What indicates to you that it is going to see such rapid adoption and growth? Because the beginnings have been quite sort of halting, particularly here in the U.S.
Okay, it's a great question. Look, we're at the very beginning of a new technology transition. And, like with every technology transition, networks have to be built. You have to have coverage. However, what is great about this time is that we accelerated 5G by the year and the device ecosystem is ready. So there's a number of drivers that are going to drive this ramp of 5G adoption. First one is easy to understand. The best 4G phone you can buy right now, if you go to buy in a store, is going to be a 5G phone. Because the devices in the high and the premium already switched to 5G. If you're going to buy the Galaxy, S10 is 5G, the Galaxy Note 10 is 5G, the Fold is 5G. A lot of the handset makers are moving to 5G.
But is the network going to be ready in time? Or by that time, are you going to have bought your next phone already?
No, I think the networks are being built as we speak. You should assume that by next year, 2020, all metropolitan areas will have 5G coverage. Of course, one of the challenges, especially in markets like the United States and Europe, is permit for new sites, and I think the FCC is doing a lot for that, but you need to build sites.
So you're projecting over the next 3 years, I think it's double-digit growth for your chips. But aren't there some headwinds that you face? I mean, the lawsuit that was put on hold a couple weeks ago over patent licensing is one thing that potentially could throw a wrench into this, or not?
No, not really. It doesn't impact the chip business. We have been granted a stay on the FTC ruling. Of course, we're waiting for the appeal. That has a relationship with our licensing business. But having said that, we have signed new license agreements post the ruling. We feel good about that business, and there's a stability. Like with everything, legal will have to wait, but it doesn't impact 5G or the chip business, and that's going fast as we can.
I guess for 5G, as Julie's saying, the networks are slow to roll out, right? Where we have the millimeter wave, that can't even get into buildings from the street, right? So we're really looking at the mid-range to the low range will be true 5G for most people, right? But when we see this millimeter wave roll out, and we see all the news made about it, do you know how to temper users' expectations who might go out and get a S10 with 5G or a Note 10 with 5G? Because they're going to be expecting this kind of experience. And how do you prevent it from the original feeling that people got when 4G was supposed to come out? They got their phone and they maybe got 4G for a minute and then fell back to 3G. You're looking at a potential blowback here where consumers say, why did I buy this phone? It's more expensive now and it's not getting what it's supposed to give me.
Not really. Look, there's a lot of confusion in the market, and maybe I'll take a moment to explain that. Operators that are deploying millimeter wave today are going to deploy 5G also on the existing spectrum holdings in the lower bands. Operators that are deploying the lower bands are also deploying millimeter wave. You should expect that all leading economies will have millimeter wave by 2021. 5G has been designed so you have the technology in new frequencies such as millimeter wave, but also you have that in all existing spectrum that you have for 4G as some of the new bands. Now, one of the biggest, I think, confusion that exists on millimeter wave is not that hard to deploy. For example, if you get a city like San Francisco, just use an example since we're in California, existing sites on San Francisco, if you put millimeter wave on those sites, you get about 65% coverage in all of the dense areas. And millimeter wave offers a lot of capacity. When you get out of that millimeter wave coverage, you fall back into the existing bands on 4G, and that will be upgraded to 5G. So it's just, we just launched, the coverage are being built, but I'll say the transition this time is faster than what we saw with 4G.
Right. I want to ask you about the trade war as well, because that's been a big topic that's affected your company as well. Because you're waiting to find out what's going to happen with Huawei and some of the restrictions that have been put on the company. At the same time, you compete. Or your clients compete with Huawei in China, where the 5G networks are also developing pretty quickly. So what is the overall effect on the company?
We have some exposure, but not a lot. I think unlike some of the other chipset companies, we don't have a lot of exposure to Huawei. We have business with Huawei, but there's not significant. It's a smaller % of our revenue. Like all the other companies, we had applied for licenses. We have not received. We only have continued to do shipping under the temporary license. I know that has been extended, but we're probably sitting kind of waiting to see what happens. Having said that, the interesting dynamic that has happened, we have a vibrant China business, and our China business is a vibrant business, not necessarily with Huawei, but companies like Xiaomi, handset makers, company Oppo, Vivo, even OnePlus that sells in the United States. And what we see is significant growth opportunity of those companies, including occupying some of the spots left by Huawei in Europe. Xiaomi, for example, is ranging every operator in Europe right now.
All right.
Cristiano, thank you for coming in.
Thank
Cristiano
you.
Amon is the president at Qualcomm. Appreciate it.
My pleasure. Thank you so much.
We are issuing a warning to Amazon because a tech company is taking on the e-commerce giant's cashierless stores in this week's Startup Spotlight. Grab & Go is a checkout-free technology service provider that aims to eliminate having shoppers wait in line at brick-and-mortar stores, and the company recently partnered with retailer Giant Eagle to use the technology in over 400 of its retail locations. So joining us to discuss is Grab & Go CEO Will Glazer. And Will, Bloomberg reports Amazon is gearing up to open cashierless supermarkets next year. So the competition is fierce, my friend. How do you plan to take them on?
Indeed, they are. Thank you for having me, first of all. I appreciate you letting me join you today. We're thrilled to be here. It's a big segment. I mean, retail worldwide is about $5 trillion in food sales worldwide, a little over $1 billion in the United States, a little trillion, excuse me, United States alone. So the market is plenty big for all. Amazon's strategy, as I understand, is to open new format stores We're going after a different part of the market. So our mission is to partner with existing retailers to save people time, eliminate lines where they already shop. It's a different market. I think ours is actually bigger than theirs, which is a funny thing to say, that a small startup in California is going after a bigger market than one of the 5 tech titans, but we are.
I'm Carlton English. I'm curious, how do you guys work with stores that you partner with to possibly do retraining for some of the people who had worked as cashiers and, fulfilled those functions? Or do you guys coordinate, how you can kind of retrain them to maybe be working in the aisles to assist shoppers?
Yeah, we're not targeting labor force reduction in the way that others are. So we are not displacing cashiers. And so our system saves people time and eliminate lines by accelerating the checkout process. But the payment transaction that an individual makes can either be through a smartphone, as you're showing on your screen now, or by a conventional payment method with the cashier. And so existing shoppers can continue to shop as they always have and make a payment with cash, credit card, Apple Pay, SNAP benefits, any payment method that was accepted before the installation of Grabango continues to be accepted afterwards. And that's a radical departure from the way many people are trying to make a cashierless store. We're not trying to make a cashierless store. We're making a lineless store. It's a very different focus.
I find that really
It's an
interesting.
inclusive focus.
I find that very interesting because I was going to ask you about questions about cashiers actually losing their jobs. So when you look at the overall economy, we often talk about the health of the U.S. consumer. And when it comes to spending, it's actually low-income earners who are spending the most over the past year. Those making less than $50,000 a year are spending about 5% more compared to last year. So what do you think these companies that are going completely cashierless should do and learn from you?
I think going cashierless is a mistake. I think it's exclusionary in the way that Silicon Valley sometimes makes moves in that direction. So cashierless fundamentally is eliminating cashiers by definition, but it's also only serving people with a bank account, a credit card, a smartphone, and the tech savvy to use all of those things and want to use those things for shopping. Grabango is fundamentally inclusive technology and an inclusive product. So if you're running an existing grocery store, you accept everyone into the store and you sell them food because everyone eats food, right? We're people. That's what we do. And to making the decision to eliminate those that don't have good credit from your store is a terrible idea sociologically and frankly business-wise for the retailer. So retailers would like to sell food to everyone, and we are completely supportive of that. So we're not putting turnstiles at the entrance to stores that are keeping people out. We continue to welcome everyone into the store. And it's a fundamental tenet of our company's founding is that we want to bring people into technology, not exclude them.
Yep.
And because grocery stores will begin to run more efficiently, they'll make more profits in the short term, but it's a low margin business. So they'll return a portion of those profits back to consumers in the form of reduced prices.
Yeah.
And so people will not only be included, but they'll see a reduced food cost at the end of the month.
Well, what's interesting, I mean, when we're talking about technology, obviously this is the hot space now when we talk about easier ways to pay. Obviously, I'd be remiss, as the co-founder of Pandora, didn't get your thoughts on the streaming music space as well, as we see tech giants continue to battle it out there. There have been ideas floated that space is increasingly becoming a commodity when you think about all the different platforms out there. You can think about Apple Music, you can think about Pandora, you can think about Spotify as well. So what are your thoughts on the way that battle is now playing out as more tech companies move into the space? How should we be thinking about streaming?
So I think it's a rich space. And I think people now, I mean, it goes without saying, people now consume a lot of their music by streaming rather than by buying the old-fashioned round things we used to all own. And I'm excited about that. I'm excited to be involved in making that happen. I think the future is determined by two things: ease of access and quality of stream. And by quality of stream, I don't mean this music's better than that music. I mean, this music is more suited towards the listener. So I'm not fundamentally here to talk about Pandora, but I think Pandora is one of the early entrants into the system. They're doing very well, and I think they continue to deliver the best targeted music for each listener. And Pandora was similarly founded with the idea that all people should be able to enjoy their music. And I think they continue to do a phenomenal job. I'm proud of the work done there and where the company is today. But I do think it's a busy space. I think there are a lot in streaming media right now.
Yeah, no, for sure. Busy space after busy space. The one you're in now also just as busy. But Will Glazer, thank you so much for taking the time, sir. Appreciate it. Well, it has been a brutal earnings season for the cannabis giants, but one of the largest multi-state operators in the U.S., Curaleaf, is enjoying a nice post-earnings pop today. You can see shares there up about 13%. The Massachusetts-based cannabis company posted $73.19 million in managed revenue for the quarter, and that was ahead of estimates compiled by Bloomberg. The company also grew adjusted EBITDA by an impressive 169% and realized positive operating cash flow for the first ever quarter. So for more on that, we're joined again by Curaleaf CEO Joe Lusardi. Joe, good to see you again.
Good to see
Welcome
you.
back. When we look at this, there are a lot of wins here, right? You can talk about record total and managed revenue, record adjusted EBITDA, and gross margins rebounding from the last quarter as well. So a lot of wins. How were you able to do that and buck the trend that we've seen in the cannabis space overall?
Yeah, I think, when we were here last quarter, we told you the company hit an inflection point. We're growing organically quarter over quarter, so we're going from strength to strength, and I think this trend will continue. We've got an incredible platform that we've built across a dozen markets. We've spent 3 years investing into our business, and it's now starting to really generate serious revenue and returns.
How much of the product mix comes into play when you're talking about that too? Because we've also noticed a fall in the average selling price when you look at cannabis flower, right? That's down pretty significantly year over year. So, I mean, when you look at that, how important is it that you have these other products to offer the consumer when they might not just want pure flower anymore?
Oh, I think form factor's playing it in a big way. I mean, more people are using vapes, they're using edibles, they're using topicals, and so we expect those categories to continue to grow. What's interesting is that even, there was a vape crisis obviously earlier in the summer, but people have actually rebounded, the sales have rebounded, people are coming back to that form factor because what they're recognizing is that the problem is in the black market. The illicit, unregulated market is where the vitamin E cartridges are coming from, and so people are gaining more confidence in the regulated system, and so we expect all those form factors to continue to grow and be a big part of the industry.
You talk about the vaping crisis, so I want to ask you about what's going on right now with President Trump and the White House looking into possibly banning flavored e-cigs. Now, he's getting a lot of criticism because there's been a huge lobby push, unsurprisingly, and it looks like they've convinced the White House to not go forward with a ban like that. So what are your thoughts on what's going on in D.C.?
Yeah, I mean, I generally separate vaping for nicotine and vaping from cannabis. What I would say is there's a lot of upset parents because there are a lot of teenagers using highly addictive nicotine cartridges, and we ought to take a hard look at that. From the cannabis side, it's a completely separate issue, and we feel that, like most people, that cannabis should be transacted in regulated, tested markets, and that's what I think more consumers are recognizing as the CDC and other agencies put out more information that, you probably shouldn't buy a cartridge from the guy in the alley.
Yeah, it's generally a bad idea to do that, I think, in general. Never buy anything from when we look at it, though, I'm glad Sabeel brought up politics here, though, because when we looked at the changing aspects in D.C., right, we were just talking before you came on about the MORE Act, making it out of committee. You can look at New Jersey, adding legal marijuana to the ballot now, coming up here. So, I mean, when you look at that shifting, last time you were on back I guess it was in the spring, you were saying that 2022 would be when marijuana would be legalized at a federal level. Are you getting any more hopeful that it might be earlier than that now as you look at the Democrats continue to talk about legalizing marijuana?
I'm optimistic in general, but I think we'll have progressive improvement in regulations, right? So I think we'll get the Safe Banking Act first. We may get a States Act, which allows states to make their own policy. I still think a full federal rescheduling of cannabis is probably a ways off, but these are all positive things. As you point out, the MORE Act passed out of committee today. That's a historic day in Congress for cannabis, and on the back of the SAFE Act passing with very broad bipartisan support, those all bode well and create a tailwind on the regulatory front.
Yeah, so you want regulation to go away. So you want, for example, recreational marijuana to be legalized in the United States federally. But that's not necessarily great for the industry. So we look at Canada. They have legalized recreational marijuana. It's been a while, but they have supply issues because there's a backlog with the regulatory agencies going through all the applications. And we know that companies like Canopy Growth are struggling because of that, because they can't get the supply out, because they can't get the regulation and all that kind of squared away. So do you think that in the U.S. the situation would be any different?
I do. I mean, I think what's important to say about Canada is that the government actually controls the supply chain. They control the stores, they control the buying. That's not what we're suggesting here, right? We're just suggesting that the states should make their own policies and let private companies, much like alcohol in most states, transact and create an industry.
On the topic of canopy growth, we saw the upgrade there today from Bank of America. When we talk about pain in the space, it's interesting because we've heard a lot of people try and call bottoms in the cannabis space, and there are a lot of catalysts we're pointing to. I guess maybe you have a longer time horizon than some of the other people in the industry when it comes to legalization across the board here federally in the U.S. But when you see kind of the way that you said, an inflection point last quarter, you're seeing prices stabilize, I guess, now compared to where they were when we talk about flower and the product mix and the consumer shifting their preferences. Is it now kind of close to a bottom in your mind? I mean, where do you see the industry going? Because 2019, granted, not maybe for you guys at Curaleaf, but 2019 hasn't been good for the sector overall.
Yeah, what I would say is that the equity markets aren't always necessarily correlated to the fundamentals of the underlying business. We have never felt better about where Curaleaf is in our trajectory, and we think 2020 is going to set up to be a huge year for us. We guided the market to $1 to $1.2 billion in revenue next year, and we feel very confident in our execution. So at least for our company, we feel that the future looks incredibly bright and will continue to grow, and hopefully the equity markets will figure out that we're the best asset in the space.
I will say that. I mean, credit where credit's due. What you have said has at least played out what we've seen here, and that's not to be said for a lot of the other names in the space as well. But Joe Lusardi, thank you so much for coming back. We're watching Salesforce today after the company raised its 2020 sales guidance, and this comes as the Dreamforce annual conference kicked off in San Francisco yesterday, and Yahoo Finance's Julia Roche joins us live from the event. Julia?
Hi, Zach. How are you guys doing? That's right. Well, we got to talk to Salesforce co-CEO Keith Block, and what you all might not realize about Keith is that he and his wife have funded the Block Center of Technology at Carnegie Mellon, his alma mater, and that center is studying a lot of these critical issues around technology, things like AI and the ethical application of that, and the future of work. So I had to ask him about his views on the future of work, so take a listen.
Well, I'm very optimistic about the future of work, but one of the reasons why I'm optimistic is because I think about my children, I think about this coming generation and the way that they were raised. And they think about equality, they embrace equality, so they know it's important for everybody to win. In a sense, they've been raised to understand stakeholder theory, where it's not just about the financial results, it's also about the community, right? It's about your partners, it's about the environment, and all these things coming together. So they come at it with a mindset that is different than perhaps the mindset of my generation or other folks' generation. So what we did with the Block Center and Technology was really about how do we review and research and affect policy around the intersection of technology and society? So when you think about ethical use, when you think about workforce development, this is a future where if the government and the private sector work hand in hand in a handshake format, then we can drive policy that will be good for citizens, it'll be good for corporations, it'll be pragmatic, it'll be fair, and that will create opportunity, it will allow for participation, it'll foment a great amount of inclusion. So there's a lot of good to it, but that's the reason why Suzanne and I did it.
Is it hard to find talent nowadays? Is it hard to attract talent? I mean, sometimes you hear about the shortages of data scientists, engineers, those sorts of things. How do you view talent?
Well, talent is everything. It's very, very powerful. And I think we have to think about talent a little bit differently. So the traditional model would suggest that talent came from you graduate from school and there was a regiment to it, like what we were talking about off camera. But today, talent can come from anywhere. It can come from people who have been reskilled, which is one of the things that we try to do with Trailhead, which is our learning platform, right? So that's very, very important. But it also can be, it could be people who just come out of high school. They don't have to have college degrees, or it could be reskilling veterans, something that I'm very, very passionate about. In fact, I'm wearing my Vet Force pin today. So we have to think about talent and talent sources differently. And the good news is with this technology like Trailhead, we have the opportunity to develop that from other places.
Yeah, you guys, he was just referencing reskilling the workforce using tools like Trailhead, which is a free platform from Salesforce. It's a tool that lets you go through various modules for training. I've actually signed up for it. I just did one on GDPR. I got my badge. But yeah, you earn badges and you can do different sort of programs on basically anything technology related to reskill for the work that is required of today's technology.
Well, the U.S. has come a long way with retirement plans over the last 50 years, especially with the development of 401ks in the 1970s. But where will we be going in the next 50 years? Joining us now is Alicia Monell. She's director at Boston College Center for Retirement Research. And we should note the center is a partner in the Funding Our Future campaign as well, which is dedicated to making a secure retirement possible for all Americans. But Alicia, good to see you. What is in store when we talk about retirement over the next 50 years? How do you see it playing out?
Well, someone asked me that question. I thought, oh my gosh, I have to think about what's going to happen on Mars. But then I started looking back 100 years ago and then 50 years ago, and there's a real pattern. It's for the earlier 50 years, we really were developing our retirement system. We enacted Social Security, retirement plans provided by the employer sort of rebounded after the Depression. And then in the late 60s, we enacted Medicare because older people are still seeing huge healthcare costs.
Mm-hmm.
And then you go the 50 years just before now, and we expanded Social Security, stabilized it, both financially in terms of finances and in terms of how much it provided. The private sector retirement system also expanded, and we shifted from defined benefit to defined contribution plans. And then we saw a cutback in terms of healthcare. Going forward, I think that we're going to fill in the cracks, and the cracks are that only half of the private sector labor force has any retirement plan at all. So we're going to have to increase coverage. We're going to have to stabilize Social Security. We're going to have to encourage people to use their house, which is one of their major assets.
Yeah.
And so I think we're going to see all those types of changes going forward in terms of, and also expansion of long-term care insurance.
Yeah, Alicia, I mean, you lay out those cracks, as you call them. I mean, they sound like pretty big. They sound like pretty big gaps there, though. We're talking about Social Security. People are worried the money won't be there. You got people living longer. You got about half the country not contributing to retirement accounts, and some that don't even have access at all when we talk about part-time workers, which you covered on yesterday's show. So, I mean, what do you think out of all those cracks or gaps, what do you think is the easiest to approach and fix now as we think about how important it is for people to get these fixes in so they can actually have money in retirement?
I think the easiest one to do is to make sure that every worker has a plan at work, and that we can do through some type of auto IRA arrangement where employers, if they're not going to provide their own plan, have to automatically enroll their employee in an IRA and make that deposit into their account. Employees can then opt out if they want, but that we need to get coverage universal. I think the second thing that could be fixed is Social Security. It's not an intellectual problem. It's a question of political will.
Sure.
And obviously, Social Security was created as a result of the Great Depression to give older Americans some financial security. But the monthly payments are so low that people feel like they have to just keep working as much as they can because their paychecks are often higher than what the Social Security check would be for example, people in the middle class. So what are your thoughts on workers? The Wall Street Journal recently came out with this great report talking about how some workers are in the closet when it comes to their age because they're afraid of being laid off, and they're trying to work as long as possible because they know that Social Security is just not going to be enough to live for the rest of their lives.
I think your point is really good. Working longer is an important lever. If you can claim your Social Security benefit at age 70 instead of 62, your monthly benefit is 76% higher. But the question is, are older workers going to be able to get jobs? Will employers hire them? And I think we really don't know at this point. I think there's a big divide between demand for those with higher education versus those who have less education. But working longer is really the way to square this circle.
Yeah, I mean, the last question we got to get to here, Alicia, is that we're talking about drawdowns today and how retirees are supposed to be thinking about that because there are minimums when we talk about drawdowns and distribution rules from the IRS. So, I mean, how should people be thinking about it? And if they are going to be living longer, when those drawdowns should go into effect, what's the right tips to be giving people when we talk about that?
So in the old days when people had traditional pensions, the company sent them a check every month. They didn't have to make any decisions about how much to take out, and they didn't have to worry about how the money was invested. Now we have 401ks, and people are really on their own at retirement. And so they need to figure out how much to take out each year and then how to invest the rest of their assets. They need some guidelines or some instruments because they risk either taking out too much money and running out before their end of their life, or they are going to be too cautious because they fear long-term care costs at the end of their life and really deprive themselves of necessities. And so there are instruments around, like annuities, that could help people resist them. We're working on something that would allow people use their own 401k plan to buy more Social Security benefits. But people need help.
Yeah, no doubt. People always definitely need help, especially when we talk about the shakiness that Social Security has underneath it. But thank you so much, Alicia Monell. Thank you for taking the time. Appreciate it.
Good morning, everyone. I'm Brian Sazi.
And I'm Alexis Christoforous of Yahoo Finance, and this is the first trade for Thursday, November 21st.
President Trump is in the line of fire as the Democrats take aim while the impeachment hearings continue on Capitol Hill. We'll dig into what the candidates had to say during the latest debate on China trade and the wealth tax.
Brokerage buyout. Charles Schwab is reportedly buying TD Ameritrade for $26 billion, and both stocks are soaring in the pre-market. What does the deal mean for investors?
And we spoke to basketball legend and Hall of Famer Magic Johnson. He told us his biggest investing mistake when he didn't just do it.
Let's get a check of the futures ahead of the opening bell. Not much going on there. Flat for the Dow and S&P. NASDAQ down just about 2 points.
We'll get a full look at the markets in just a bit, but first, today's big story.
The 10 leading Democratic candidates took the stage in Atlanta last night for the 5th presidential debate. They were united in attacking President Trump, but then went head-to-head with each other on health care, taxes, and race. Yahoo Finance's Jessica Smith is in our D.C. bureau with the highlights and the lowlights. Jessica, what moments stood out to you last night?
Well, I think the candidates got into a wider variety of issues than we have seen in the past. In this debate, they didn't stick to health care for an extended period of time. They didn't stay on that issue really in the weeds that we've seen in previous debates. This time they covered things like housing and race and paid family leave. We also saw Senator Elizabeth Warren tout her wealth tax plan, but Senator Cory Booker pushed back and said that's not a good idea. Let's watch.
Doing a wealth tax is not about punishing anyone. It's about saying you built something great in this country, good for you. But you did it using workers all of us help pay to educate. You did it using getting your goods on roads and bridges all of us help pay for. You did it protected by police and firefighters all of us help pay the salaries for.
I'm sorry, it's cumbersome. It's been tried by other nations. It's hard to evaluate. We can get the same amount of revenue through just taxation. But again, we as Democrats have got to start talking not just about how we tax from a stage, but how we grow wealth in this country amongst those disadvantaged communities that are not seeing it.
Overall, I'd say this debate was pretty mellow. We didn't see a ton of attacks. We didn't see the candidates really pile on to one front runner throughout the entire debate. But we did see Congresswoman Tulsi Gabbard go after Senator Kamala Harris and Mayor Pete Buttigieg. And just wanted to point out who spoke the most. That's Senator Elizabeth Warren, and entrepreneur Andrew Yang spoke the least. Alexis and Brian.
Jess, what's the plan for the next debate?
Yeah, so far 6 candidates have made the stage for the December debate. That's Biden, Buttigieg, Warren, Sanders, Harris, and Klobuchar. They have to reach certain polling and donor qualifications by December 12th in order to make that stage. So far, Andrew Yang and Tom Steyer have made one of those requirements. They fulfilled one, but not the other. So we'll see if anyone can get a boost from their performance last night and make that stage. Maybe Senator Cory Booker, he'd be someone we'd be watching to see how he does in the polls following his performance last night.
All right, Jessica Smith, thank you. Another big story to keep an eye on today. Multiple reports are saying that Charles Schwab is buying TD Ameritrade. Fox Business is reporting that the deal could be worth $26 billion. Here's a look what both stocks are doing in the pre-market. Charles Schwab is popping over 10%. Ameritrade also seeing a gain of almost close to 25%. You also want to probably keep an eye on Interactive Brokers, was showing some gains in the pre-market as well. Now, the deal, which could be announced as soon as today, would join 2 of the biggest discount brokers. It would come in the wake of the major brokerages slashing commissions to zero. If the groups do combine, the new company would be managing about $5 trillion in total assets.
All right, time now to head down to the New York Stock Exchange. Say good morning to Yahoo Finance's Inez Ferre for an early look at what's happening. You have news this morning on 2 big ones, Apple and Macy's. What's the latest?
That's right, Alexis. Well, Apple yesterday, Tim Cook met with President Trump taking a tour of the manufacturing facility in Texas. But the big news here is that President Trump says that he's looking into this possibility of perhaps exempting Apple from tariffs. Remember that you have that December 15th tariff deadline that is looming. And this is something that Tim Cook also has been advocating for a while, saying you need to treat us the same as Samsung. If you tariff us, then that only helps our competitor, Samsung. And President Trump yesterday said we have to treat Apple on a somewhat similar basis as we treat Samsung. And we've been speaking so much about retail this week. Well, Macy's reported its third quarter results. Its revenue was a miss. Same-store sales were down 3.5%. Their earnings per share came in at 7 cents a share, but that is, even though that was a beat, that's still down from 27 cents a share the same period last year. And the company also slashed its full-year outlook. Also, some of the results were impacted by a warmer fall, less spending on from international tourists, and also lower tier malls, which took a hit. Alexis, Brian?
Yeah, that Macy's quarter was not looking too hot. All earnings, retail earnings this week, obviously the high bar set by Target. Macy's just not good. Real clunker of a quarter.
That's right, and I just was listening in on the conference call, and what they were saying was that Backstage, their segment Backstage, actually did well, which kind of goes into that whole trend that we've been seeing of off-price doing pretty well, but they had underperformance in these lower-tier malls, and also their digital growth was slowed down in the quarter because they had some updates on their website. They're saying that they're going in strong to the holiday season, and those updates have all all been taken care of.
But you know, Inez, they also just had news of that data breach. Just yesterday, they said that some people's information was hacked when they went and shopped at Macy's online. Do we have any more information on that? Do we know how many people were affected?
Yeah, they didn't give any information so far from what I saw on that data breach. Now, that data breach did occur on October 15th. They had sent a letter to customers, and they didn't say how many customers were affected by that data breach, but the stock was down 10% when the news broke of that data breach.
Well, here's my suggestion to Macy's. Just hire more workers, because I can't find anything in these stores. Inez Ferre, good to see you.
You too.
Coming up here on The First Trade, Sonos makes a crucial acquisition ahead of the holiday shopping season. We'll talk to the company's CEO about its future. Sonos reported better than expected sales in the most recent quarter on Wednesday night, but earnings did come in a little light versus estimates. It also disclosed its first ever acquisition as a public company. Sonos CEO Patrick Spence joined us now. Patrick, good to see you in person this time. We'll talk about earnings in a second, but your first acquisition as a public company, $37.5 million on Snips. What is that acquisition? What will they let you do?
Well, Sonos is all about experience. And so what this allows us to do is make the voice experience on Sonos even better than it is today. You know, we've got Amazon's Alexa, we've got Google's Google Assistant on the platform, and this just will allow us to round it out and create something even better for Sonos customers.
And you know, people are calling that out. They're saying, wait, is this your play at Alexa or Google Assistant? What's the differentiator here for you?
We're not going to create our own kind of general purpose Ask Anything assistant. This is to make music, podcasts, all the audio things that Sonos does so well, even better on the platform. And even as you think about setup, you think about customer care. And the other thing is privacy, right? So Snips is an on-device, local, privacy-focused voice solution. And so we think there's some interesting opportunities there.
Do you envision yourself getting into content creation?
I don't think that's an area that we really have a lot of capabilities. You know, we are strong in software. It's 2/3 of our engineering team. We're strong when it comes to the overall experience of hardware as well and the way you mesh those two. And I think that's where we want to play as we think about the future.
Talk to me a little more about the privacy, because that's something where Amazon and Google have really been taking it on the chin. When it comes to these voice assistants, what will you be doing with the data, if anything?
Well, we've got a clear privacy statement today in terms of the fact that we don't, sell data. We try to collect as little as possible just to keep the experience a really great experience. And so you can imagine we'll continue to operate in that way. And we think there's a lot of customers that think that way. We just recently introduced a product that doesn't have microphones as well, because we were hearing from customers that, hey, there's some rooms where we really don't want microphones, and we think it's important to give customers that choice.
You called out on the earnings release a $30 million hit from tariffs. How are you responding to that? That is real money for a company.
It absolutely is real money. The good news is it's a one-time hit. We've accelerated our global diversification of manufacturing. So we're just getting up and running in Malaysia. We've been doing that for a little while, but it is a short-term hit. Long-term, it'll be fine.
So you'll be completely out of China?
We are diversifying, so we'll actually be producing in China. We'll be producing in Malaysia as well, which is something we've planned for a long time, but we have accelerated it given the tariffs coming into place. But I think good news for consumers is we're taking the brunt of that tariffs. Not so good news for us, but good for consumers going into the holiday season.
Would the December 15th tariffs, if they go into effect, impact you?
The September 1st tariffs actually started to hit us. So in fact, of that $30 million, we'll take about half of it in this quarter.
You mentioned also, too, in the earnings release, a robust and ambitious product roadmap. What does that mean?
It means we got a lot of exciting things
Anything
coming.
to disclose?
One of the best things I think is that over the last few years we've really accelerated our new product velocity, and so we've done at least 2 new products every single year. We've announced a recent collaboration with IKEA as well, so 2 products with IKEA that have been going very, very well. So we're going to keep that up, and we've just started to go beyond the home. So everybody knows us. We're in over 9 million homes now. We're the leading sound experience company in the home. We're going beyond the home with Move, and we're going to do that more with new products in the future.
Autos?
We're interested in every category. We're interested in every category of audio.
So you got that partnership with IKEA. Are you looking to partner with any other retailers?
You know, it's off to a great start. We announced that there were 30,000 units that sold on the first day. We've seen sellouts across a variety of different countries, so we're super excited about that. We think there's opportunity to do more with other partners.
One more for you before we let you go. You also mentioned that you pursue strategic options, organic and inorganic. Are you looking at more acquisitions?
I think there's a lot of interesting companies out there. I think as we think about our experience, we'll certainly be interested in other companies that help round that out for us.
All right, Patrick Spence, always good to see you.
Good to see you guys.
Thanks
Thank
a
you.
lot. All right, let's take a look now at the European markets. We have things lower across the board. The FTSE 100 is down about 49 points. The CAC 40 in Paris off about 10. We've got the DAX down 23 points in Germany. Yahoo Finance's Tom Belger is joining us from London now. Hello, Tom. The CEO of Microsoft's UK operations warning about Brexit disrupting the flow of data. What is she saying exactly?
Hi there. Well, for years, we've had businesses warning about the impact of Brexit on goods and frictionless trade with the EU being damaged. So it's interesting the Microsoft UK CEOs come out and warned about the risk to frictionless flows of data. You don't hear much about that. She didn't go into much detail at a business conference I covered earlier this week. But the issue boils down to the fact that after Brexit, British organizations will no longer automatically have the right to hold EU data. And under Prime Minister Boris Johnson's Brexit deal, the only thing the EU's agreed to so far is to endeavour to make a decision about whether British organisations can continue to hold EU data under EU GDPR data protection rules by the end of 2020 in the transition period. That's not a guarantee. And if they don't decide in time, or if Britain crashes out without a deal before then, some tech insiders genuinely worry companies could end up holding data unlawfully.
And Tom, switching gears here, Hasbro could be facing some resistance with its acquisition of Peppa Pig owner Entertainment One, correct?
That's right, yeah. Shares have slid today. That's after a UK competition watchdog warned that its planned $4 billion takeover of the company behind Peppa Pig, Entertainment One, could potentially result in a substantial lessening of competition. They haven't made a decision yet about whether they'll launch that investigation, and they haven't said any more than that about what the challenges are. But they've got the power to order changes. They could even block the deal. So it's a real headache for Hasbro.
Tom Belger, good to see you. Coming up here on The First Trade, denying a report, what the Pentagon has to say about U.S. troops in South Korea. Your news bites are coming up next.
Let's take a look at today's News Bites. We begin with a headline from the nation's capital. A U.S. embassy official working in Ukraine is the next witness to testify before the House impeachment inquiry into President Donald Trump. David Holmes will face questions about a phone call in which Trump allegedly asked about the status of an investigation into former Vice President Joe Biden. Former Russia advisor Dr. Fiona Hill will also appear. Fears surrounding the U.S.-China trade war are escalating. The Chinese Commerce Ministry told reporters today that their goal is to reach an initial agreement with the U.S., and they are working hard to address the concerns on both sides. Reuters is reporting that the completion of this Phase 1 deal could extend into next year. And Congress is sending a message to China. House lawmakers passed the Hong Kong Human Rights and Democracy Act, which ensures that the State Department will confirm at least once a year that Hong Kong still retains enough autonomy to continue its special trade agreement with the U.S. The bill also provides sanctions against those who violate human rights in Hong Kong. President Trump has 10 days to sign this into law. The Pentagon has denied that the U.S. is cutting troops in South Korea. A South Korean news report said that if Seoul didn't contribute more funds to the cost of deployment, the U.S. would rescind troops on the ground. A Pentagon spokesperson confirmed the Defense Department is unaware of these plans. Coming up, not always a slam dunk. We talk to NBA great Magic Johnson about a major business mistake he made when he was younger. We'll be right back.
As Americans break down last night's debate, many are analyzing how each candidate would impact our economy. Editor-in-Chief Andy Serra joins us now. Andy, you talked to one influencer about how some of these candidates might impact our economy.
Yeah, I was speaking with Darren Walker, who's the president of the Ford Foundation, which is obviously one of the country's largest NGOs, a very large philanthropic organization that gives away millions and millions of dollars every year. And I was speaking to him about the state of capitalism, and here's what he had to say about some of the leaders of capitalism and where things are headed.
We're at a point in this country now where I believe the core issue of what kind of country are we going to be? Are we going to have a democratic capitalism that uses a stakeholder model of a series of interests, and those interests being, of course, shareholders at the top, but workers, customers, and communities? That stakeholder paradigm, I believe we're at a point of calling the question. And Mark Benioff's I think, very powerful op-ed, and others, Ray Dalio, Jamie Dimon, other CEOs, Larry Fink, have all talked about this. And so I'm actually quite encouraged that we're seeing directionally a change in the discourse from the leaders of our corporations, and hopefully in terms of their behavior.
And Darren Walker's personal story is really interesting too. He grew up poor, black, gay in rural Texas and made it to the very top of the business world, and now runs the Ford Foundation and knows those people that he was just talking about, has relationships with them. And it's interesting that he's sort of suggesting that these people are not just talking out of the side of their mouth, that they actually really believe that they're different constituencies in terms of being able to affect change through capitalism.
Yeah, incredible personal story there, as you mentioned. I want to get back to the debate, though, because you watched. Was there a clear front runner to you at the end of the night?
No. I don't think so. I mean, I watched and I thought they all had various, talking points. I thought they sort of coalesced around resisting President Trump a little bit more rather than attacking each other. And I think that when I talked to various people this morning, each person said, oh, this person won, that's the person I like. Right, so it's sort of through
Didn't
the
really
lens.
Move the needle.
I don't think so. I mean, what do you guys think?
Yeah, there was not a clear winner this time.
No one really jumped out. And at some point, someone does have to jump out for the Democrats, right? You guys, I guess we'll have to wait for the primaries.
Jessica Smith in D.C., she was at the top of the show. She did say Elizabeth Warren spoke the most.
Yeah, well,
that's a lot of gas for Joe Biden. A lot of gas for Joe Biden.
Right, yeah.
All right, you can catch the full interview of Darren Walker on Influencers with Andy Serwer. That is tonight at 5 p.m. Eastern here on yahoofinance.com, also on our app. And the opening bell is coming up next on The First Trade. But first, here's a look at the action in overseas markets. And we'll be right back. Welcome back to The First Trade. We're about 5 minutes away from the opening bell. Not a lot of action today in the futures, as you can see. We want to go around the bell with Chris Versace, Chief Investment Officer at Tematico Research, and Sean Gibson, Chief Investment Officer at Liquid Strategies and Overlay Shares, along with Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board. Sean, I want to start with you. I know the market's not doing much of anything right now, but is the fear of missing out the thing that has been driving this market higher over the past few weeks?
Yeah, 100%. It's interesting you say the futures are really quiet. When I went to bed last night, they're down 15 points. So just what a difference, 12 hours can make. But yeah, I think that's what's happening right now. Fear of missing out. I think a lot of investors were overly conservative, overly complacent, and they're seeing the market get away from them. And it's painful to watch it move away from you like that.
Chris, I know you watch retail very closely. I know you probably saw those Macy's numbers. What are some of your thoughts here? It was just not a good quarter.
No, it was not, Brian. And, I think when we parse who's doing well in retail this, for the current quarter and most likely for the holiday season, I think there's a couple of factors that we really want to watch for. One, it's going to be companies that have invested against Amazon. We saw that with Walmart. We saw that with Target. We got companies that can help people stretch their dollars. I've talked with you guys before. I think that's going to be companies like Ross Stores, TJX companies, Walmart, Costco, and Target. And the other sleeper that I think is really helping some of these retail companies, Walmart, Costco, Target, is food, because people have to come back for consumables. And I think that is going to turn out to be the secret sauce, the secret recipe to success this holiday season.
Chris, how alarming is it that Macy's has invested in its stores? A lot of those stores are remodeled, yet sales are still completely falling off a cliff here. Are we looking at let's say, another JCPenney situation with Macy's, or dare I even say a Sears?
I think it's certainly possible, Brian. One of the things that we're also seeing among the Targets and the Amazons is the move into private label product, and I think that's really taking a bite out of a company like Macy's, which only has apparel to deal with. Meanwhile, these other companies, especially Amazon, they have Amazon Web Services that can really carry them quite far. And Target has food and other things. So I do think that Macy's is going to be a very troubled company. I'm trying to put it nicely, but I think you understand what I'm saying.
You don't have to put it nicely. It's okay. We're all friends.
Yeah, I think they're going to be in trouble, and I expect more closures and just a lot more pain for Macy's.
I want to switch gears and talk about two stocks we're watching very closely today. That's Charles Schwab and TD Ameritrade. On this news that Schwab is going to buy TD Ameritrade for $26 billion. Sean, what is this going to mean not only for the industry, but for the smaller investor who relies on these services?
I think it's a positive for them. I mean, look, when you have these firms going to zero commissions, what else can you do but to combine forces? And, the real opportunity, I think, for a Schwab and an Ameritrade is really more on the asset gathering side. Their custodian businesses are so significant. So I think the consumer, will eventually win, both in terms of lower pricing and hopefully better offerings. And even firms like ours that work pretty closely with the Schwabs of the world, hopefully it'll just be an uptick in service for us as well.
But Sean, don't you think prices for services could go up?
Time will tell, but I think as long as you still have competition from the Interactive Brokers, from the E-Trades out there, I think it's going to be hard for prices to go the other direction, at least in terms of commissions.
How about you weigh in on that, Chris? What's your feeling on this merger today?
So, it's another shakeup in the industry. Obviously, as Sean was saying, we saw the push to, zero commissions for individual stock trades, ETFs, that sort of thing. And I think it begs the question, though, how are these companies really going to make money? And I think Sean is onto something. But where I disagree a little bit is, as you see that consolidation happen, I think that we're going to see non-commission related revenues, those fees really start to creep higher for the very reason that there will only be a handful of competitors. And as we've seen, particularly on the move to zero commissions, what do? They tend to follow suit of what the leader does. And let's be clear here, a Schwab TD Ameritrade combination will be the leader.
But Chris, just to real quickly ask you about that, don't you think Schwab could potentially be acquired by a BlackRock? Aren't they also a sitting duck if this company were to combine?
It's entirely possible, Brian. I mean, I think you got to look at the whole spectrum of what's happening. Anytime you see an industry that is in the midst of a transformation, any combination could happen. You could talk about Morgan Stanley, right? You could talk about other bulge bracket firms that want to jump into the fray. Anything is possible.
Here we have a new trading day.
And let me add, sorry. I think that speculation is going to fuel E-Trade, Interactive Brokers, and those other shares moving higher today.
All right, here we have the trading day underway. And again, keeping that theme of not much action, at least not yet, for the major indices, the Dow up about 4 points. We're seeing a lot of M&A activity. Today in particular, we've got PayPal buying up Honey Science Corporation for $4 billion. That's its largest acquisition ever. It's going to be a mostly cash deal. You've got Tiffany looking again at LVMH. LVMH would, of course, be the acquirer there. Sean, do you think that 2020 is going to be a big year for M&A activity on Wall Street?
Well, I think if growth continues to be somewhat stagnant, I think companies are going to be looking for other ways to grow. And if they're not getting the organic growth, obviously another way to do it is through acquisition. So I think, I do think you'll continue to see this trend.
Jared, over to you at the Wi-Fi Interactive Board.
Yeah, we got the NASDAQ 100 here. Pretty much a mixed picture and not a lot of stocks that are moving greatly, but we do have NetEase and Mercado Libre above 2%, also Tesla up 1%, and then Ross Stores. To the downside, we got a bunch of chip names. We got Applied Materials down nearly 6%, KLA that's down about 6% as well, and then Lam Research about 3.5%. Let's check out the Dow, and we have Apple up just 13 basis points, Microsoft about break even, JP Morgan about break even. The 10-year T-note yield had an important day yesterday. It broke through a lot of critical support, and it is bouncing today. But there's speculation now that it's going to go down further, which would favor the momentum names over the value names, and also the tech stock names over the cyclicals. And so that could kind of change the rotation that we're seeing if that trend continues.
You know, Chris, on Target yesterday, a blowout quarter from the company. Stock's now at a record high pretty much. What's the trade there? I think a lot of people have really missed out on the move in Target.
I totally agree, Brian. I think a lot of people were, if you'll forgive the expression, asleep at the switch as Target invested in itself and really turned its business. And like we say, when these companies really start to pick up momentum, the turn accelerates. And if you just dig in that business, in that report, digital sales up 31%, one of the key contributors due to same-day delivery with their partnership with Shift. I just think Target is going to be going higher as we go into the holiday season.
Switching from retail to cannabis, there's really no good way to do that, so I'm just going to do it. I know that you take a look at the sector quite closely, Chris, and yesterday we got a nice upgrade for Canopy Growth, a much-needed one. The sector's been taking a beating. What's your outlook on cannabis stocks right now?
Well, the news that was breaking late yesterday, and we'll have to see what happens over the coming days, is that we saw cannabis get removed from the Schedule I restricted substance list. That is a first step forward in U.S. federal legalization, and I think that should give some lift, or if you will, Alexis, move them higher today.
Ooh, all right, we'll give you that one.
Sound the drums.
So I think that this is going to be a slow slog. The real question now is what happens in the Senate. I believe Mitch McConnell has been very vocal about anti-legalization of marijuana. So we'll have to see what happens to see if this is something potentially real or just a head fake.
Sean, is there anything you're seeing in the markets right now that would indicate or suggest a big volatility spike ahead of those tariffs on December 15th?
I mean, at this point, it's hard to imagine. I just look at yesterday's action with the news that came out. Just when you thought things may start to turn really hard to the downside, buyers stepped in. And so I think today's going to actually be a really important day to just see if there's any sort of follow through to yesterday's late buying action. But if I look at the calendar between now and December 15th, you have December 15th when the next tariffs come into play. I think you're looking at the first week of December with jobs reports and major ISM numbers. But other than that, there's not a lot of known catalysts that are out there today.
Okay, Jared, you've actually got a closer look at the VIX, and that looks like an interesting chart.
Yes, well, so this is a candlestick chart going back 3 months, and we did get a little bit of a spike yesterday that we can see right here. That was the highest point in a couple weeks, but it was quickly reversed. But anytime we see a rounded formation like this, eventually you're going to get a spike higher. And then if we take a year-to-date look, we can draw a trend line down from this peak in August through here, and it points to about 18. And I was calculating this yesterday. That would correspond to about a 3.5% drop in the S&P 500. Not that much, but taking into consideration the bearish headline that we got yesterday, that phase one would be pushed into the new year, and the S&P 500 couldn't be pushed down even 1%, and the dip buyers came in, and it really wasn't a bad day at all.
Chris, give us your favorite investment theme for 2020.
That's going to be privacy, Brian, and it's something that we're actually working on very hard here at Tematica. If you take a look at what's going on with Google acquiring Fitbit, a lot of concern about privacy of your health data. We look at other tech companies moving into different services that are not traditionally tech, Facebook with payments, for example. Privacy, in our view, is going to be the theme to watch in 2020.
What's your theme, Sean, for 2020?
Higher volatility. But going back to Jared's comment about vol, I get the question all the time, well, why is the VIX 13 right now? And the answer is quite simple. If you look back over the past month, 16 VIX, for example, is equivalent to 1% a day move. Over the past 30 days, we haven't had a single day over 1%. The average daily move is about 30 basis points a day. So based on how the market has moved, the VIX should be around 5. So is the VIX overpriced or underpriced? That's definitely subject for debate.
Chris, what are some of the stocks that play in your privacy theme?
There's no shortage of companies. Everything from, at a stretch, perhaps Apple with the way they're marketing themselves and trying to protect user privacy. But we're also seeing companies in the cyberspace that are, bleeding over into that. Symantec just made their name change to Norton LifeLock, and LifeLock is clearly a service that individuals can use to monitor their personal data, their privacy. So it's names like that, Brian, and to be not to be too coy, we're sussing all of those out and expect to have something perhaps around for you by the holidays, if you will.
All right, well, please do come back and share them all with us. Chris Versace, Sean Gibson, and Jared Blickery. Thank you all. Appreciate it.
Thank you.
Coming up here on The First Trade, I sat down with the CEO of Cigna and basketball legend Magic Johnson, and Magic shared his thoughts on LeBron James and healthcare. That's straight ahead. Let's get back to the New York Stock Exchange and check in with Yahoo Finance's Inez Ferre. Inez?
Brian, we're looking at Macy's this morning, down more than 1%, not too much. This is after their revenue came in as a miss for their third quarter. Same-store sales were down 3.5%, and earnings per share came in at 7 cents. The results were impacted in part because of a warmer fall, because of less spending from international tourists, and also their lower-tier malls underperformed. And also the company said that they had an impact on their e-commerce site because of some work that they were doing on that site. That work has been completed. And we're watching Tiffany this morning. This is after LVMH reportedly is talking again with Tiffany after LVMH has boosted their offer price to acquire Tiffany to $130 a share. Remember last month, Reuters had reported that LVMH had offered Tiffany $120 a share, and Tiffany said that that was not enough, different from not at all. So right now they're reportedly talking again, and for the last couple of weeks, Tiffany has been trading above $120 a share. And then we're watching BJ's Wholesale. This is after their third quarter profit beat expectations, but same-store sales were up 1.1%. That was a miss, and they also lowered their same-store sales guidance for the year. And the company also narrowed its profit forecast for the year as well. Brian, Alexis?
Getting loud down there. All right, Inez Ferre, thanks so much. Oil is holding steady today amid concerns over those ongoing political tensions with China. Yahoo Finance's Jared Blickery is at the Wi-Fi Interactive Board with the very latest on oil. Jared.
Yeah, we have oil up 1.25%, and that comes off of a pretty amazing day yesterday. We'll look at that chart in a second. First, let's take a look at the overnight price action here, and we can see we got this rise starting just after the 6 a.m. hour into what is now what has been resistance, which is the $58 level. If we take a look at what happened over the last 5 days, we did get this big downdraft here, and this is pretty apparent on a candlestick chart that we've been looking at, that it broke a trend line, but then we got a reversal. Now, it was expiration day yesterday for the December contract, so that might have contributed to some of it. But if we look at this on a candlestick basis, we can see that it completely engulfed the prior day. So that's a bullish engulfing bar, which we can see here. This range is bigger than this range, and now we're heading higher into that 58 resistance that we haven't been able to break for some time. So it looks like yesterday's or the day before breakdown, possibly a false breakdown, and not a lot of news other than the trade headlines probably going to move oil. We do have the Baker Hughes report on Friday, but not been much of a market moving lately.
Bullish engulfing bars. I like that one, Jared. That's a good one. That's a cool one. But switching gears, you're also watching soybeans.
Yeah, soybeans have been on an interesting run here. A lot of the positive trade news came in near these tops, and as equities were marching higher, soybeans have been going lower. Part of that has to do with some news out of Brazil. Looks like they're going to have good soil moisture heading into next week. It is their growing season down there because it is spring, so that's bearish on the prices. But if we look at a year to date, we can see soybeans really haven't been able to get off the ground much after making this spike bottom in May. That was largely due to weather concerns. And if we look at corn, it's going to be a similar story as well. Basically, all grain prices have been somewhat depressed, and even wheat futures are going to show the same pattern.
All right, Jared Blickery, thank you. I had a chance to talk with Cigna CEO David Cordani and NBA legend Magic Johnson last night about the challenges right now in healthcare and communities at large. Both offered up interesting insights into where we are right now as a country.
Yeah, so our company actually partnered up with Achilles International a little over a decade ago because we saw the power of putting their program with people who are confronting health or other disabilities and challenges, be they physical or mental and otherwise. And we had a good bond with them because of the mission of our company. I had the ability to see a bunch of the Achilles athletes at the Disney Marathon one year that I was down there, and I volunteered after that to be a running guide. And the first time I served as a running guide with Matthias Freire, who's here, I was bitten by the bug in terms of supporting individuals, specifically military individuals, to say thank you for their service that protects our freedom each and every day. And then watching and being motivated by people who set goals that are that lofty after confronting life-altering challenges. And I've been fortunate to do it now for quite some time, just guiding in the Marine Corps Marathon a couple weeks ago.
And you're also a hardcore runner.
I'm getting a little old.
I think you can still take them down the court, though, Magic.
Yeah, I'm getting a little old, but having goals like guiding actually helps to keep me motivated. So when I commit to guide somebody, I got to get myself in shape to be in service to them and make sure I can carry the backpacks and all the other support. So it's a good source of motivation.
And Magic, what does it mean to you to be involved with an organization like this?
Well, it means the world because, you know, as David mentioned, these men and women have put their life on the line for our country, for our safety, and for us to say, listen, you come home and you may be dealing with a disability, but we're here to say we want to help you in any way that we can, and this organization is doing a wonderful job. Achilles International is doing a wonderful job of doing just that because most of them are so strong that they can recover from what has happened to them and still live a great life and get involved in sports, whatever that is, whether that's running or even just playing basketball or whatever. And so I'm just happy because I've gone through a challenge in my life and I had to overcome that challenge, and I have so far for 28 years. And so I understand when people go through challenges.
David, do you think veterans are getting the health care they need and deserve?
That's a very personal question. So when you think about veterans, it's such a diverse group of individuals. Increasingly, I think the answer is yes. I think we're more open as a society of understanding what we call at Cigna the whole person connection, so the mind-body connection, and not to label it PTSD or otherwise. So there's a physical need, there's the behavioral need, and then there's the acceptance back into society. So for example, we employ right now over 2,500 veterans today. We have a Veterans Colleague Resource Group as an organization providing support. They're awesome coworkers. And that's a way to get a level of engagement and a level of kind of support for individuals. And then from a healthcare standpoint, we're starting to push the limit beyond the VA to get more access to care and services, but we got to challenge ourselves to do even more for our veterans.
Magic, you are out in the communities a great deal. What are some of the biggest challenges you're seeing right now? Is it poverty? Is it access to health care? Is it just living from day to day?
Well, I think what David just touched on when you talk about giving 2,500 jobs to those who have been in the military, it's the same challenge for those who live in the urban communities and inner cities. They want job opportunities. And so I think that's a challenge. I think also education, because that goes hand in hand with job opportunities. And then last but not least, you touched on healthcare. That's a challenge in our community as well. But when you think about living up under the poverty level and all of that, that's when you ask a mother what's her number one challenge, she would say that in the inner cities of America.
David, you have written extensively about micro communities. What is that?
So the term micro-community essentially was hatched out of my experience with Achilles, and I think Magic knows it well, he lives it well, and he's actually brought it to life in many communities. But what it comes down to is a small group of individuals have the ability to provide a level of support to have a great impact. So symbolically, it's one or two individuals supporting a wounded veteran to set the goal, to train, and then to overcome the obstacles during the course of a race. A micro-community as well as going into an inner city, like we're doing in the south side of Chicago right now, working with faith leaders where the violence is out of control, and working with faith leaders, grandmoms, great aunts, etc., to re-engage the community one block at a time. So it's taking big problems and opportunities and making them very small and personal and engaging one individual at a time. That's what a micro-community is.
Magic, two quick ones for you before we let you go. What do you make of the Lakers start this season?
Been amazing. I mean, they're best record in basketball right now. LeBron's playing at an MVP type level. I think he's the favorite right now to win the MVP. And then Anthony Davis came, and I think really we got another superstar to go with LeBron. And the Lakers are playing great defense, and also their offense is fluid. They're playing well together.
And lastly, you're quite the entrepreneur. You have a lot of big investments through your company. What's a big investment regret that you have made, that you have, and what'd you learn from it?
A big investment?
Big investment regret.
Regret?
What'd you learn?
Oh, I wouldn't say a big investment regret, but I'll tell you the only thing I really regret, and I'm not a guy who goes backwards, I'm always going forward. So, but I will go back. I was 19 years old, just won the national championship beating that Bird guy at Indiana State.
Yeah, I've heard of him. Yeah.
And I was about to sign a shoe deal. Converse came in, and everybody at that time was wearing Converse because of Dr. J. And so Converse came in, offered me some money. And then this guy named Phil Knight came. And Nike was like only 1 or 2 years old. I don't have a lot of money, but I offer you stock.
Oh, no. Oh, no.
And I was 19, didn't know a lot about stock. And so the rest is history.
Oh, wow.
Well, 1979, didn't know a whole lot. Take the money and run.
Phil Knight and you turned out quite okay.
Yeah.
Thank you both. Appreciate
it.
Thank you. So suffice it to say, Magic Johnson and Nike stock have done quite well. But looking at Cigna here, Cigna stock is up about 5% year to date, no doubt held back by all those concerns and the debate over Medicare for All plans. Coming up here on The First Trade, breaking his silence, what Goldman CEO has to say about accusations against the Apple Card.
Now for a look at some of the companies and stocks the Yahoo Finance team is watching for you today. Macy's just reported its first same-store sales decline in 2 years. The department store chain blames warmer weather and weak traffic at shopping malls for the poor sales. Macy's also slashed its full-year outlook. The disappointing results come a day after Macy's said hackers swiped information on some customers in October as they shopped online. Macy's has not disclosed how many customers were affected by that hack. Victoria's Secret is in the spotlight today after reporting mixed third-quarter earnings due to declining sales at Victoria's Secret. The company also said its fiscal year earnings would fall within the range they previously predicted. Victoria's Secret has struggled as consumers are consistently drawn to more inclusive brands. And General Motors is suing its rival Fiat Chrysler. The suit alleges that Fiat bribed officials over the past decade at the United Auto Workers to get a better labor deal than GM. Hours after GM filed that lawsuit in federal court, the union's president resigned. 3 former Fiat execs and some union officers have already pleaded guilty to the bribing. And PayPal just announced its largest acquisition ever. It is buying the popular money-saving service Honey Science Group for a whopping $4 billion, mostly in cash. Execs say Honey's 17 million monthly active users will act as a springboard to a broader customer base for PayPal. That deal is expected to close early next year. And breaking his silence, Goldman CEO David Solomon is denying allegations that credit limits for the Apple Card are biased towards gender. He told Bloomberg, quote, "There's no gender bias in our process for extending credit." He added that there's a variety of reasons why someone may get a different line of credit compared to someone else. Coming up on the first trade, we'll go down to the floor of the New York Stock Exchange to see what traders are saying is moving the markets today. That's coming up next.
Yahoo Finance's Julia Roche sat down with founder and co-CEO of Salesforce, Mark Benioff, at Dreamforce this week, and they discussed his take on capitalism.
Well, I really think, capitalism is dead, and that everything needs to be thought about from the beginning. In terms of should individuals and corporations have more taxes? Absolutely. Exactly what those taxes should be, I'm not an expert on it, but you can see what I advocated for last year right here in San Francisco, where we have a severe homeless problem. I fought and invested in something called Proposition C, which would be a 0.5% tax on the richest companies here in the city, including Salesforce. We're number one, because we need more money to be able to do homeless services. That's clear as day. So yes, we need a tax reform. We need more taxes for key social services. We need more housing. We do need some fundamental reforms of our system. This is extremely important, so that we can all have the society that we want.
And you can catch the full interview with Mark Benioff on yahoofinance.com. And that is it for the first trade for this Thursday morning. I'm Alexis Christoforous.
And I'm Brian Sozzi. Now let's get one more check of the markets with Inez Ferre down at the New York Stock Exchange. Inez?
Brian, Alexis, check out TD Ameritrade and Charles Schwab, both up on media reports that Charles Schwab is buying TD Ameritrade for what Fox Business is saying $26 billion. Now, Charles Schwab was one of the first major players to cut the trade commissions to zero, and other online brokerage firms also have done the same. And we're watching this morning Macy's. This is after their third quarter results. Macy's missed on revenue. Same-store sales were down 3.5%. Earnings per share came in above street estimates, coming in at 7 cents a share. The results were impacted in part because of a warmer fall, less spending from international tourists, and also lower tier malls, which underperformed. Also, the company said that it was impacted on its e-commerce side because of some work that it had been doing on that site, and that work has been completed. Also, Macy's said that Backstage, their off-price segment, did well in the last quarter. And then we're watching Tiffany. This is after LVMH reportedly is talking again with Tiffany after it boosted its offer, offering $130 a share to acquire Tiffany. Last month, Reuters had reported that LVMH had offered $120 a share. Now that has gone up to $130 a share. Stay with us. Wi-Fi AM starts right after the break. Dan Roberts and his team will be talking about the consolidation of the online brokerage industry. Stay with us.
Good morning and welcome to Wi-Fi AM here at Yahoo Finance on this Thursday morning. I'm Dan Roberts. We've got Brian Chung and Sabeel Marcellus here on the couches. All right, markets right now in the red. Sorry to say, right now the Dow down more than 40 points. NASDAQ and S&P in the red as well. And we know that we did not see gains yesterday either after some potentially troubling news about trade talks. Now, let's talk about D.C. The headlines in Washington have moved, just for the time being, from the impeachment inquiry to the fifth Democratic presidential candidate debate. It happened last night. 10 candidates took the stage in Atlanta and covered everything from climate change to a wealth tax to, of course, the impeachment hearings. Jess Smith is live in D.C. to give us a recap of yet another Dem debate. Hi, Jess.
Hey, Dan, I think this debate was a little more mellow than we've seen in the past, but the candidates covered a wider variety of issues this time around. We didn't see them really stick to health care like we've seen in past debates. They touched on it, but they didn't stay in the weeds for an extended period of time. They talked about other issues that are important to voters, like race, housing, and paid family leave. As you mentioned, Senator Elizabeth Warren also talked about her wealth tax, and Senator Cory Booker pushed back, saying it's a bad idea. Let's watch.
Doing a wealth tax is not about punishing anyone. It's about saying you built something great in this country, good for you. But you did it using workers all of us help pay to educate. You did it using getting your goods on roads and bridges all of us help pay for. You did it protected by police and firefighters all of us help pay the salaries for.
I'm sorry, it's cumbersome. It's been tried by other nations. It's hard to evaluate. We can get the same amount of revenue through just taxation. But again, we as Democrats have got to start talking not just about how we tax from a stage, but how we grow wealth in this country amongst those disadvantaged communities that are not seeing it.
Senator Warren did speak the most of any candidate on stage, while Andrew Yang spoke the least. But when he did speak, it was memorable. Here's what he said he would tell Putin in their first conversation.
Well, first I'd say, I'm sorry I beat your guy. Or not sorry.
Not sorry.
And second, I would say the days of meddling in American elections are over, and we will take any undermining of our democratic processes as an act of hostility and aggression.
Now, Dan, I know you are ready for the field to get a little smaller. So looking ahead to the December debate, 6 candidates have made the stage so far. That's Biden, Sanders, Warren, Buttigieg, Harris, and Klobuchar. Andrew Yang and Tom Steyer have made 2 of the requirements, or excuse me, they've made 1 of 2 requirements. So we'll see if they get there. We'll see if anyone gets a boost in the polls from their performance last night.
Yeah, Jess, you're right. I just feel like 10 is still so many. Now, you mentioned Klobuchar has already been one of the 6 to qualify for the next one. I was reading my hometown paper, the Boston Globe, this morning on the train into work. I love reading those recaps the next day. And the Globe gave their highest grade to Klobuchar, saying that she won the night. Do you agree with that?
You know, I think she did have a really strong night. I'll let the analysts decide who won and who lost, but she did have a strong night. She's been seeing kind of a slow and steady rise in some of the polls. Buttigieg also had a strong night. He proved that he could take the heat. He came under attack a couple times, and he really held his own. We also saw Senator Cory Booker have a good night. I think if you came into this debate with no background on this race, you might not know who the front runner is, because we didn't see all of the candidates pile on one person like we did last time with Senator Warren. So I thought that was an interesting distinction from previous debates.
And Jessica, what about Pete Buttigieg's performance? So obviously he's leading when it comes to Iowa in the polls. What did you think about his actual points on stage? Was he able to really position himself as a potential frontrunner for the Democratic Party?
I think he was able to do that. I think he had a very strong performance. People were really expecting him to come under attack more than he was. He did, toward the very end of the debate, start getting attacks from Klobuchar and from Tulsi Gabbard, but he held his own. He had little jabs that he got in. He defended his experience. So I think he came away from that unscathed. We'll see if he continues to rise in those polls.
Jess, one more question for you that the average viewer might be wondering, and I'm sure you know the answer. With a couple more people having entered the race, even as the field is culling, we've got new people, Bloomberg and Deval Patrick. Now, obviously, they were not on the stage. So as the field for the debates shrinks even further, what happens with those two? Will we see them in any debate? What do they have to do to be in one?
So to get in the next debates, they have to reach 4% in the polls, and they have to have a certain amount of individual donors. So we'll see if they can make that happen. It seems like it would be very difficult at this point to make those requirements to get to that point. But I guess anything is possible. We'll see. But I think coming in this late in the race is going to make it pretty difficult.
Yep, going to be interesting. All right, thanks so much, Jess.
Of course.
Well, let's talk more about last night's Democratic presidential candidate debate with Bradley Tusk of Tusk Ventures. Bradley, thanks for coming back on.
Thanks for having me.
Who do you think really stood out last night? And as Jess was saying, I think she was being kind to describe it as one of the more mellow debates. There wasn't much fire last night.
No, there wasn't. And really, ultimately, when you think about who won or lost the debate, it's who did the narrative change for in a good or bad way. The debate in and of itself only matters in how it impacts the next poll and turnout and everything else. So if you're Buttigieg, nothing, you were ahead in Iowa, you came out fine. Warren didn't have a great debate, but I don't think the narrative around her really changed. Biden probably continued to reinforce a negative narrative, which is just like he kind of can't take his foot out of his mouth. And people like Klobuchar and Booker had a good performance last night. We keep seeing those two or Harris do well in debate, and it doesn't really translate into anything else. So, it's only relevant to the impact on where people stand in Iowa and New Hampshire, and I don't think it really changed anything.
So it seemed to me that Cory Booker actually got a lot of time, especially towards the end of the debate, and I think that he actually took some really good shots at Joe Biden on marijuana, the incarceration of African Americans who have been caught with possession of marijuana, and then at the end, I thought that his closing with John Lewis seemed to play pretty well with the crowd and based on social media with the broader electorate as well. Do you think that Cory Booker, because he is still lagging in the polls, has really kind of gained anything in the debate yesterday, or is he still kind of in trouble?
I think he's still in trouble. I do think that he's positioning himself really well to be the running mate with someone else on that stage if that's what he wants to do and if they want him, and I think he would be a really good pick. But the one thing that's interesting is, in terms of timing, voter attention span is so limited these days, all of our attention span is so limited these days, that in a weird way, surging a little late is not the worst thing in the world. It's like Warren seemed invincible a month ago, and all of a sudden now it feels like it's passing a little bit. Buttigieg is having his moment right now. We'll see if it holds. So whether it's the late entrants like Bloomberg or Patrick, or someone like Klobuchar or Booker kind of gaining steam heading in.
Obama surged late.
Yeah, absolutely. So, and I think we're just in a world now where, in a weird way, once people are kind of used to you and get tired of you, they move on. And by the way,
basically,
fatigue, if you will.
Yeah, and you guys do also, right? It's more fun to talk about something new than, because at the end of the day, like Bernie Sanders last night sounded like Bernie Sanders, right? So like, it's
I
no
wrote
different.
the damn bill, right?
Yeah, right. He sounded like that in
That's the best
2016. That's what he is, right? So yeah, so in a way, while it doesn't seem likely that Booker would all of a sudden surge, it's a weird year in the sense that I don't think the timing is the way it works conventionally.
Well, talking about Wall Street investors, so when they look at the debates, who do you think they see as better for stocks in 2020?
Right. Well, they certainly see Warren and Sanders as bad for stocks. So to a certain extent, I think if you ask them, there's sort of three categories. There's someone like a Bloomberg, a Deval Patrick, maybe a Steyer, who they think, okay, this person would actually be genuinely good at dealing with the economy. Then you have people who they think probably are somewhat harmless, so that's a Buttigieg, a Biden, a Booker, and people they think are really harmful, Warren and Sanders. So I think ultimately anyone but those two is probably fine with them. If there was a world where someone like Mike Bloomberg was president, and they would love that.
Yeah, you mentioned Mike Bloomberg, and I know that you have worked with him in the past, still talking to the campaign. What is the status there? And as I just asked our colleague in D.C., Jess Smith, I mean, he wasn't on this debate stage.
Right.
He's unlikely to make the cut for the next debate. So does that matter? I mean, not being present in the debates, how does that affect him?
I mean, it's a good question. And unless the DNC changes the standards, Mike's never going to qualify because he only has one donor himself, right? He self-funds. He believes that makes him totally independent and therefore less susceptible to all kinds of special interest politics. But that's not the 200,000 people you need to qualify for the debate. So look, I think he'd rather be in the debate than not. But again, this is he's running an unconventional campaign in an unconventional year. He's not really worrying about those early states like Iowa and New Hampshire. He's going much more for the bigger states later on. And so, I guess the question really is, if we get to a point where he's in that very top tier as we're moving on, but of course, he's never going to have more than one donor. Does the DNC have to change the criteria at some point? I think they will eventually.
Guys, I want to read to all of you just quickly this comment from a New Republic piece today, recapping the debate. I thought this was interesting. The writer says, these increasingly stale cable news outings are starting to feel like America is on a long drive with nothing to think about. And this writer said that last night's debate especially felt curiously inconsequential. Do you guys agree with that? I thought that kind of nailed it.
Yeah, because they didn't come out with new ideas. It was all the same platforms, the same plans that we have already heard of, and no one really stood out as like that big of a change.
But we keep doing them. We feel like we got to do them.
I took issue with the format.
We're getting kind of bored a little bit.
I took issue with the format where each candidate was getting one question and then they would move on to another candidate with a separate question. So there wasn't a lot of vis-a-vis comparisons between different candidates on the same platform. I would have liked a substantive discussion on something like M4A or the wealth tax in a longer format than it was yesterday.
Yeah, I think that's right. I mean, look, it's the same thing over and over again. They have their views. They're not going to change that dramatically from debate to debate. But if you said, okay, we're going to talk about Medicare for all or the wealth tax or universal basic income or whatever they want to do, you could probably have a much more substantive conversation.
Right.
Really interesting. So they should be taking some structural tips from Brian Chung. You should let them know. Maybe Yahoo.
I'm available.
I'll connect you to the I'll connect you to the DNC.
To moderate?
No problem.
To moderate or be on stage?
Moderate,
Okay.
please.
Okay.
No more entrants.
Bradley Tusk, thanks so
for
much.
having me.
Good stuff. Coming up here on Wi-Fi AM, Google cracking down on targeted political ads, even as the company also cracks down on its own employee activism. We'll explain after the break. Welcome back to Wi-Fi AM at Yahoo Finance. Markets right now are in the red. Let's get some more insight on what is happening with stocks from Ines Ferre, live on the floor of the NYSE. Hi, Ines.
Hi, Dan. I want to show you Baozun. This is a company, it trades on the NASDAQ under the ticker symbol BZUN. It's a trending ticker on Yahoo Finance today. It's a company that helps brands do e-commerce in China. So they're an e-commerce solutions company. They do everything from designing a website to help it with fulfillment, with inventory. And some of their past clients are some big clients. They've had Nike, they've had Michael Kors, Coach, Samsung, and GoPro. Now, you think that they compete with Alibaba, but actually they work together with integration. So the company today is that stock is under pressure because they reported a mixed quarter with revenue coming in light. Their adjusted earnings came in line with expectations, and their revenue guidance for the fourth quarter came in a bit weak. In the first quarter of this year, the stock did really well. It was up 66%. Then in the second quarter, you saw their operating margins that slipped, and you saw a bit of a decline with the stock. But year to date, the stock is up 22%. Dan?
Yeah, so much of the story in stocks right now is about China in some way, shape, or form, right, Ines?
Yeah, completely. They also had the Singles Day on November 11th, and this was very good for these companies. So we'll see how that plays out into the fourth quarter.
All right, thanks. We'll check back with you soon, Ines.
Thank you.
Google is the latest company to alter its policy regarding political ads. The tech giant has published a blog post stating that it will no longer allow election ads to be targeted based on your political affiliation. Now, Google also says that, by the way, it is working to remove deepfakes and false information that appear in those ads. Of course, this comes just weeks after Twitter announced that it wouldn't allow political ads on its platform anymore. Meanwhile, Facebook continues to allow ads without trying to fact-check the content of those ads, much to the criticism of politicians and some media pundits. What do you guys think? Google is saying we're still allowing political ads, but you can't have it show only to people that we know are, say, Democrats.
Yes, so it sounds really good, but when you look deeper, they're actually still allowing you to target people based off of age, gender, and location. So with that kind of information, advertisers, when they're putting political ads forward, they can still figure out who are the Trump supporters, who are the Democrat supporters, and basically work around this new rule. It just sounds good that Google is doing more. I mean, it makes Mark Zuckerberg look bad because he's wanting to do absolutely nothing.
That's what it's about.
But there are definitely ways to work around it.
That's what it's about, making Facebook look bad.
Right. And I think the misinformation is the bigger part of this because the ads are different and it's actually almost indistinguishable from other Facebook content at this point. So even if you were to ban political ads, let's say, for example, on a platform like Facebook, on a platform like Twitter, any tweet that is a political ad doesn't look any different than an organic tweet from a user. And it's those user accounts that can provide a lot of bad and wrong information.
Exactly right.
So that's what Facebook was facing. Dan, you mentioned them looking bad. Well, it's also a tough thing to do, though.
Yes,
because
I
setting up the infrastructure to decide what is fact and what is fiction,
but we're
it's
talking
a
about
gray area.
Yes. If you were a small media company, but we're talking about Google. I mean, there's a verb, Googling. I mean, that's how massive this company is. So to say that Google doesn't have the resources to actually fact check ads would be absolutely ridiculous. But Google has said that they are willing to fight misinformation. They're not saying they're not going to do it. They're saying we are going to work on that. And they're also going to clamp down on deep fakes in political ads. I think that's key because we definitely don't want one of the Democratic candidates, a deep fake where that person is saying something that they didn't say and that being targeted to people based off of their location. So that is, I think, deepfakes a bigger threat, and Google has said that they're going to crack down on that part.
Now, to your point, Brian, though, I do think that after Twitter initially got some praise for we're not going to allow political ads, the narrative changed to, well, wait a minute, okay, they won't allow ads, but anyone tied to a candidate or who supports a candidate can still tweet something, and it basically might as well be an ad. I mean, take Andrew Yang and the very strong hashtag Yang Gang, and I like Andrew Yang, but a lot of the tweets that I see in my feed, because either Yang retweets them or there's one other guy I follow that's like the Yang supporter.
Yeah. And those are not ads.
They're not ads,
right.
but they're just, here's why he's so great, and here's a clip of what he said in the debate, and here's why all the other candidates are bad, and he's the best candidate. Right. They might as well be ads. I mean...
Yeah, it's like the way you can just gang the system to gang the system to basically, still get your message across to so many people.
Yep. We'll see what happens here. All right, Dreamforce, which is Salesforce's big annual conference in San Francisco, was this week, and our colleague Julia LaRoche was there. She sat down with Salesforce founder and co-CEO Mark Benioff, and they discussed in particular his take on voice tech. Julia is here on the couches, back from SF.
Oh my gosh, yeah, I took the red eye.
Oh my
so
goodness.
great to be back on
Tired?
the couches. So tired. I had 4 shots of espresso this morning. I'm going to get some more.
You can't tell you're tired.
It's not even 10:30 yet.
It's fine. Our makeup department's amazing, y'all.
There you go.
No,
so tell us about Benioff. What did he have to say?
Oh, well, we talked about a lot of different things. Dreamforce is their huge blowout tech conference. I mean, 171,000 people in San Francisco to just take over the city.
It's cult-like.
An incredible experience. That was my first time going. But yeah, we got to talk to Benioff about a wide range of things. But what was interesting was getting to talk to him about the technology at Salesforce. If you think about the company, it started in 1999, was really a startup, a disruptor in cloud, and they've gone in so many different areas. They've gone beyond the cloud in the last 21 years. And basically, he said they've found the holy grail for their customers. So take a listen to find out what that is.
Well, we all know the kind of 4 waves of computing are, of course, this whole concept of systems of record, and then we moved into, that's like managing your data, updating your database, systems of engagement, systems of intelligence, the analytics, the business intelligence. But now we're in the 4th wave, which is the single source of truth. That is, when I talk to a company, like one of the customers who are here, like Adidas, Louis Vuitton, Verizon, they knew who I am. They know I'm their customer. If they're selling to me, if they're servicing me, they're marketing me, they have a single source of truth. That's a big story here that we've really figured out exactly how to be able to do that for companies in a whole new way.
I mean, that's definitely a big deal. And you all are also talking about voice. I imagine voice combined with Customer 360, the single source of truth, could have some seriously awesome implications for your customers. What are some of those top takeaways when it comes to voice?
Voice is definitely the most important new way to interface with a computer. Here's an example.
I'll give it a shot.
Okay, you do it.
Hey, Einstein.
Hi.
What's my forecast?
I have good news. Your team won more deals than the same day last year. Your forecast is on track. I predict you will close $11,530,000.
Okay, I'll take that.
You're ready to take my job. Einstein can guide you and help you run your business and connect with your customers in a whole new way.
Okay, so guys, what he's talking about when he's saying single source of truth, this has kind of been this elusive thing for their customers. When you think about that, all the different touch points, say, for example, I'm interacting with a retailer, I'm interacting with social media, go to this store, that store, go online. customers actually want the companies and the brands that they interact with to understand the way they interact with that company, to have that single touch point. So what this does is this 360 single source of truth provides those companies all of that information, and then combining that with voice. Think about it. If you're sales and marketing for a company, you have to do all these clicks and interfaces with the computer. Using Einstein's analytics, the AI technology, and voice, you can basically speak human to a computer that can run all of the data, the information, give you those insights a lot faster and smarter.
Mark Benioff, I'd like to ask him about his purchase of Time Magazine, but that'll be for another dream for us.
Another day.
Thanks, Julia.
Thanks, guys.
All right, coming up here on Wi-Fi AM, we will tell you what stocks are trending on Yahoo Finance. One of them reportedly involved in a mega merger in the brokerage industry. Welcome back to Yahoo Finance. This just in, Netflix right now is experiencing an outage. It's reporting streaming issues on all devices. Down Detector, which is an outage tracking site, shows that users are having issues with Netflix in Europe, Eastern Asia, and the US. And it isn't great timing considering everyone right now is talking about the launch 1 week ago of rival Disney+. So we will keep monitoring Netflix.
Well, in the meantime, let's take a look at today's trending tickers. First up, Charles Schwab and TD Ameritrade. Stocks for both companies surging after CNBC and Fox Business reported this morning that Schwab could buy TD Ameritrade in a blockbuster deal. You can see TD shares up 17%. That deal would see further consolidation in the retail brokerage industry. And the pro forma company, if the theoretical merger actually goes through, would create a company with more than $5 trillion in assets. Charles Schwab, which would be the buyer in this potential merger, is actually up by 7.5% right now. CNBC reports that Schwab CEO Walter Bettinger would become the head of the combined company, as TD CEO Tim Hockey had originally planned to leave the company anyway in February of 2020. They say that the deal could be announced as early as today. And it's important to note, too, that the commission war has really begun when everyone took it down to zero a few months ago. So kind of interesting to see this happening.
And the zero commission wars, I mean, someone went, who was first? Was it TDA? Someone went first.
It was Charles Schwab, actually.
Okay, and then suddenly everyone went.
Yep.
And I remember, I think Fidelity was late.
Fidelity was one of the last.
Was late.
Yeah.
And said, okay, fine. And it was like, all right. And I imagine that prompted, look, we're all going to zero, and maybe we talk about a tie-up soon. So many industries tying up here. Now, by the way, I'm already seeing some reports that say this is official. You know, we're not reporting that yet, but it sure sounds like this is very close to happening or is about to happen. It's major. Yeah, it's interesting. And of course, we talk so much about Robinhood on our shows, you know, which Robinhood was this app that came along and had zero commission before any of these others. I wonder if all the big guys going to zero commission is a problem for Robinhood, because then what's Robinhood's pitch?
Well, absolutely. Right. And I think that we need to understand that the mechanics of all this, the reason why all these brokerages went to zero is because they then trade the order flow to your Citadel brokers and whatnot. The only way that you can make that with any sort of decent margin for your business is if it's in large volume. So you need this scale. So it was almost no surprise that you have Charles Schwab kind of going after TD and saying, look, we can not only have zero commissions, but we can make a decent amount of money and still make decent margins because of this, right? Because zero commission fees, it took the stocks of all these companies down. It was not a good thing for the industry. How do you survive through that? Scale.
Yeah, I mean, this is a $25 billion deal, and investors are really happy about it. You saw Charles Schwab's stock go up 8% on this news, and also TD Ameritrade, it went up more than 24%. So there's definitely going to be a lot of mergers and acquisitions as they figure out how to, keep their bottom line up, given, the zero commission rates.
Absolutely. It's about survival in that space. But another ticker that we're looking at today is Tiffany & Co. Shares of the company currently up by almost 3%. Reuters reported after the market closed yesterday that the French luxury group LVMH would be upping its bid for the iconic jeweler, originally from $120 per share in all cash. They've now upped that to $130 per share. In return, Tiffany has reportedly agreed to give more of its books to LVMH as the negotiations continue. As a reminder, LVMH's portfolio includes those big names in fashion like Christian Dior, Givenchy, Louis Vuitton. But the company hopes that it could beef up its jewelry and its watch divisions, kind of a focal point for them with the Tiffany acquisition, which would also complement its Bulgari brand, which covers watches and whatnot. So,
as a fan of watches, not a big fan of Bulgari. Good pronunciation of Givenchy, though.
Givenchy, right? Not.
LVMH is huge. I mean, they're based in Paris, and they really want to grow when it comes to luxury, but it's the jewelry division that's really growing. So we're talking about a $20 billion market in 2018 for jewelry, and it's expected to grow 7%. So that's why they really want Tiffany's. And it's also about Tiffany's brand. LVMH wants to get into the diamonds, into bridal. So this is definitely the way to do it. But Tiffany is kind of, they keep pushing up that price for that deal.
Do you think it changes at all the image of a Tiffany, an iconic American jeweler, if it's owned by the French?
It changes the image, but Paris, the city of love, I think when it comes to Tiffany's brand as an engagement company, I think it definitely still works, and LVMH can capitalize on that.
And what makes Tiffany iconic is not America. It's actually just the Tiffany blue box and the ribbon.
Yes,
and,
that's what that's why they're willing to pay $16 billion.
American thing.
It is, but look, when you look at Anheuser-Busch and what they've done, I mean, you talk about American beer companies. Well, Budweiser has still been able to maintain its American status despite the fact that it's Belgian-owned. So I don't think that's necessarily an issue, especially in the luxury space where people probably don't care.
Audrey Hepburn, Breakfast at Tiffany's, that is very American.
Thank you.
So.
Iconic, that's true. That's true.
Yes.
So.
Moon River. That's from the movie.
Dude,
coming up here on Wi-Fi AM, we will talk to a startup that is helping brands like Uber and Chipotle support youth sports. Welcome back to Wi-Fi AM at Yahoo Finance. Markets right now, for the moment, in the red. Now, according to the Aspen Institute, 57% of kids play a team sport, but those rec leagues that many kids join can often come with prohibitive costs like jerseys and equipment, and they need funding help. LeagueSide connects brands with youth leagues to boost sponsorships, and co-founders Evan Brandoff and Zubin Tehrani are joining us now. Hey, guys.
Hey,
how's it going?
Thanks for having us.
Tell us about the idea. Why was there a gap here that you guys needed to fill to connect companies to youth sports?
Yeah, so Zubin and I were both part of this fellowship program called Venture for America. We were living in Detroit and New Orleans, respectively, used to volunteer at youth sporting events. And what we would notice while at these events is that, one, they couldn't participate if it wasn't for the local businesses sponsoring these leagues. But two, more importantly, we looked around the audience and realized there's no better way to reach an engaged group of families than in the community when they're together watching their kids play sports. So we thought, Well, my favorite pizzeria growing up was Mike's Pizza, because they sponsored my baseball team, my soccer team. What if we could create a network of the thousands of community youth sports leagues across the country, connect them with regional national sponsors to create a hyper-local, effective marketing channel while simultaneously helping tens of thousands of kids play sports?
Yeah, we all played on a t-ball team or some Little League team where we had the name of the local business on our jerseys. But as a result of you guys, I know you work with some big companies, Chipotle, Uber, as I mentioned. Are there now kids somewhere in the country whose jerseys say, Uber baseball team, or does it say the local business instead and the big company is behind the scenes?
It's both. So we're bringing these national companies to these youth sports leagues that they couldn't have access to otherwise. And they're alongside the Mike's Pizzas of the world still in this wholesome, family-oriented setting.
So what kind of sports do you cover? Because I think we know that there are some sports that are cheaper to operate a league for. Basketball, where all you need is the court. Soccer, you just need a net and a ball. But, some of them are more expensive. Baseball, hockey, you need a lot more equipment.
Golf.
So what are you kind of leagues that you focus on? Are there any sort of sports that you're trying to kind of grow? Things like lacrosse or maybe other sports that people don't think about as maybe the first 3 or 4?
Yeah, so the main sports we work with are baseball and soccer. We're predominantly working with team sports. Team sports are the best way to reach the most families in the community. So we're all about win-win opportunities where we're achieving marketing goals for these larger brands while simultaneously helping kids play sports, which is actually how we got our logo, the Win Grin. This, when we create win-win opportunities, exactly. We make everyone win, and therefore we make everyone grin.
By the way, Venture for America, wasn't that Andrew Yang's?
It was. Yeah, we were the second class of Venture for America fellows ever. Yeah.
So you guys Yang supporters?
I've learned a lot from Andrew. He's one of my mentors, yeah.
Yes, I am personally a part of the Yang gang. And know Andrew extremely well, and he's an incredible human.
So in terms of the companies that you've partnered with, we were listing them, Chipotle, Uber, but when you go to these companies and make this pitch, what is that conversation like? How do you get them on board with this idea? Do you try to get the teams involved too in those conversations? Like, hey, here's an example of a team that you could kind of impact by helping us out.
Especially because that kind of sponsorship for these big companies, it doesn't really have the exposure of, SoFi, buying the naming rights to the Rams stadium.
Right.
Not everyone's going to see this.
Yeah, so for youth sports, think about your youth sports memories. It's carpooling with your friends, it's families on the sideline, it's eating those orange slices at the end of the games. So for these companies, it's a chance to authentically connect with the community. So for them, they are thinking about it as marketing. It's exposure, it's authentic. Think about when you're driving on the highway and you're angry and you're in standstill traffic and you see a billboard. You compare that type of advertising to what we're doing through our platform, and you can see the effectiveness there.
And the reception of that has been pretty good in those boardrooms. Because, like you said, it is a difference between saying, hey, you want to get your name on a stadium or you want to sponsor this team in Springfield, Illinois, right? But it's an interesting pitch that you guys have there.
Yeah, so what our platform allows companies to do, like Chipotle that mentioned earlier, we're now able to reach a youth sports league within a mile or two of all of their Chipotle locations. Okay. So it's hyper-local marketing at scale, is what we like to say.
And we've added a little tech flavor to it too. So these brands are sponsoring leagues through our platform. They just upload their creative. All these campaigns happen at once. And they see pictures of their sponsorship in action, and those marketing metrics push to their online dashboard in real time.
All right, anything that helps youth sports is okay by me. Thanks, guys. That's the guys from League Side. Thanks for joining us.
Awesome. Thanks so much.
All right, well, former NFL quarterback Joe Theismann has been out of the league for a long time. These days, he is more focused on investing. Of course, everyone remembers Joe Theismann. And then his career did end with that unfortunate injury, very famous moment. I recently read a novel that's based on the Joe Theismann career-ending injury. Yahoo Finance says Brian Sozzi sat down with Theismann, and now he sits down on the couches with us. What did he have to say, and where was this? This was a conference?
This was at the Achilles Gala last night at Cipriani Restaurant. A great gala focusing on wounded veterans. So Joe Theismann was there. He talked about his stock picks and the state of the economy. Go figure.
I think the U.S. economy feels strong, and I think it's going to continue to stay strong. Unemployment is an all-time low. People have money in their pockets. They're able to spend money. We see some of the retail giants that are out there doing very well. I trade equities as a hobby, so for me, it's something I enjoy very much.
What are some of your stocks? What are your favorite plays?
Well, one of the ones I like is Micron Technologies. Okay. I think there's an opportunity out there, and it's hovering right around 46, 47. I love that. And then, of course, I've also invested in some of the cannabis stocks. I think it's an alternative to possibly reducing the amount of opioids we look at in society today going down the road. But the one thing you have to understand is everything takes time. It's like in my business. Everybody wants Daniel Jones in New York to be great. They want Sam to be great. They want Kyler Allen to be great. Kyler Murray out there in Arizona. They want everybody to be great. It doesn't happen. It's a process. And I think financial investing is a process.
What do you look for in stocks? Micron. I didn't expect you to say Micron.
I look for what I think is an emerging area. I think biotechs to me are something that there's a lot of different drugs in the pipeline. We're constantly seeing different things that are happening in society. The chip business, I guess, the China deal. Oops, they sort of reneged on it. Gee, I'm shocked.
Does the trade war bother you? Does it make it hard to invest in this environment?
I don't think it does. I think you have to be selective in what you want to do, and I don't think you can make a decision based upon one event in the world. I think you have to look at the U.S. stocks. I invest mostly in U.S. stocks, some international, but mostly U.S., and see what they're doing. What's their bottom line? Who's their leadership? What direction are they going? What sector are they in? I think those are all very important things you have to consider. I wouldn't consider myself a passive investor. I'm quite a bit more active. It's just fun. I mean, why not? Life's supposed to be fun. You're not supposed to bang your head against a wall or a computer. Just find something you like. And the other thing is, what do people use? That's another thing. Because whatever they use, they're going to keep on using, which means they're going to keep on buying, which means they're probably going to keep on selling it to them, which means they're probably going to wind up making money.
Wow, pot stocks and chips, Sazi. That's what he likes.
Yeah, there we go. And I will say, just standing next to Joe Theismann, I think he had 50 more stock picks he really wanted to give me, but he was on fire.
So excited on
he was ready to rock and roll, and he knows his
Micron
business.
guy.
I mean, he's an entrepreneur. He's been out of the league for some time after that devastating leg incident. So he's been making it happen. Trading stocks.
Did you have a chance to ask him some NFL-related questions? Talk football?
Yeah, good point, Dan. Myles Garrett, he does think that Myles Garrett deserves a very strong suspension for what he did on the field, but he thinks he should be back in the league, but not anytime soon. Also asked him about Colin Kaepernick. He was a little unclear on that, whether Kaepernick will get another shot in the NFL.
Yeah, I do think that we'll see Myles Garrett. That's the Browns defensive player who hit the Steelers quarterback over the head with his helmet. I think he'll be back in the league next season.
Questions about whether or not Mason Rudolph, honestly, should have gotten some sort of punishment.
The real story, Joe Theismann is bullish on Micron. He should have picked up some AMD. That thing is on fire.
That's the headline. No, and Joe Theismann likes pot stocks. That's the headline.
What's the stock moving? Is the stock moving right now on that? Or?
Well, I don't know.
Well, after he said, Micron, he's like, well, trade war is not an issue. So, can't have both.
Interesting. All right, Saz, thanks so much.
All right, see you later.
Coming up here on Wi-Fi AM, we will have the co-founder of Warby Parker to talk about their new business category.
Welcome back. I'm Ines Ferre here with Matt Aronowitz. Matt, before we get started, I just want to mention some news regarding McDonald's because there's a lawsuit that's been filed by workers in 13 Illinois restaurants suing McDonald's for failing to adequately protect employees from customers who become violent. The lawsuit comes from 17 workers who say that McDonald's, that these workers are regularly exposed to violent and criminal behavior by customers. The stock's not moving too much on the news. And Matt, right now we're looking at the Dow that's down 83 points. The S&P's lower. We've had some headlines. Yesterday we had the headline that the Phase 1 trade deal may not be signed this year. The Dow was down 200 points at one point, but the markets haven't really moved that much on these trade-related headlines.
Yeah, I think that the market seems to be somewhat immune to all these headlines. I mean, there's an initial reaction that ends up happening off a tweet or off a headline, but then the market seems to rally back to unchanged. The volatility in a lot of these markets are at record lows. From currencies, trading around 4%. S&P 500 volatility is trading like 14-15%. It seems like the market doesn't seem to be pricing in much risk even going forward.
Now, I know that you follow Bitcoin. Bitcoin is down today, and that's been a little bit volatile, correct? Do you have any insight as to what's behind that? What are you seeing?
It's hard to peg what impacts Bitcoin because it's so illiquid. So you end up with a situation where a small amount of money can move that price quite dramatically. So it broke like the 8,000 mark, and now it's down, 8%. It's down to like 75, 60 on the day. And once it broke that 8,000 mark, that was pretty significant from a technical standpoint. And it looks pretty bearish at this point.
Now, today we've had reports that Charles Schwab is reportedly acquiring TD Ameritrade, perhaps an acquisition there. This is expected within that industry, correct? The online brokerage industry, some consolidation. What was your reaction when you heard that?
Yeah, I actually thought it was pretty funny because it seems like Charles Schwab was the first one to announce that there were going to be zero fees on their commissions, but I think they knew that it would probably impact their rivals more than it would impact them. A bigger percentage of their revenue comes from for TD Ameritrade comes from commissions. So they basically, forced TD Ameritrade's hand to lower their commissions down to zero and then put their stock in a bad position. And now they're turning around and saying, well, now we could take you on and buy you. So
thanks so much, Matt Aronowitz. Stay with us. Wi-Fi AM continues after the break.
Welcome back to Wi-Fi AM at Yahoo Finance. Warby Parker, the eyeglass company, now getting into contact lenses. The new category is called Scout at Warby Parker. They will be sold in-store and online, and the company will offer a comprehensive eye exam and lens fitting at select locations. Here to discuss is Warby Parker co-CEO and co-founder Dave Gilboa. Dave, thanks for coming on.
Yeah, thanks for having me.
Tell us about the contacts. You guys have been around for a number of years now, so why now?
Yeah, so we're 9.5 years in, and our approach has really been a deliberate one where we want to make sure that every product and service that we offer is the best in the world. And we've known for a while that about 40% of our customers wear contacts regularly, and so it's a product that we've wanted to introduce for a number of years, but we wanted to make sure that we had a great product at a great price point, and we're really excited to introduce Scout to the world. So it's a daily disposable lens, it's super breathable, comfortable, and it comes in this innovative flat pack, which looks very different from other contacts you might have seen. It takes up 80% less space, creates 80% less waste.
Did you find that a lot of customers were saying to you guys, well, why don't you do contacts? I need those.
Yeah, for a while, customers that were getting their prescription from us had to go to a different doctor to get their contact lens prescription. They had to go to another place to buy contacts. And so we really wanted to create a holistic shopping experience where people could come to us for all their eye care needs, from their prescriptions, glasses, and contacts all in one place.
So when we talk about glasses, I mean, I think what has made Warby Parker so successful is the designs of the glasses themselves. With contacts, it's kind of a little harder to differentiate your product from another product. So how are you doing that? Is it because of the brand experience that you get from the ecosystem of people that might already have Warby Parker glasses? Like, what's the strategy there?
Yeah, so I'm wearing our Scout lenses now, which you wouldn't be able to tell. So it is different than if I was wearing our Warby Parker glasses. So there's less conversation that happens. But we do think that the design of the packaging itself is pretty unique. So this is a 90 pack, so this is a 3-month supply. And so it looks very different from kind of bulky contact lenses that you might have. We make the shopping process really convenient and easy, whether that's online or offline. And the price point is like with all Warby Parker products and services, we wanted to really focus on affordability. So we're introducing a really premium lens at 20 to 50% lower prices than you'd find for comparable lenses elsewhere.
And what's your strategy for growth? Because I know that you guys started online, but then you had a bunch of brick and mortar stores, and you've expanded to about 120, both in the U.S. and in Canada. And last year, you guys were valued at $2 billion. So what's the next step for your company? Do you think you might possibly dip your toes into the IPO market?
So for now, we're really just focusing on our customers. The company is growing really quickly, both online and offline. Our growth is actually accelerating on a percentage basis this year versus last year. But we operate in a massive market. It's well over $100 billion globally. About a third of that is in the US. And so we still have a lot of room to run. We have plenty of cash on the balance sheet. The company's profitable. And so we're not rushing for a public offering. We feel like we're well positioned to continue to invest and introduce new products like contacts, continue to open new stores, and really focusing on delivering value to our customers.
Especially after the unicorn IPO struggles.
Yeah, right.
Oh, so many this year.
I imagine.
Something that I want to ask too, so Warby Parker is also unique in that it's not necessarily part of insurance plans, vision insurance plans. Do you see that because of the cost point that you've been able to bring down for glasses and now with contacts, that maybe there's a world where there shouldn't be a need for vision insurance maybe?
Yeah, so we are in network with United Healthcare, and customers can submit any product or service that they buy as an out-of-network benefit through their carriers. But we do think that we're offering such great value that for most people, even if they have vision insurance and they go in network, that they'd be better off just paying out of pocket. They'd get more value just coming to Warby Parker. But vision insurance is a big opportunity that we will focus on in the future to try to make that even easier for customers to use their existing benefits.
I'm glad you asked about the brick and mortar thing. I just want to end by pushing you on that, because I think that's so interesting. It comes up on our live shows a lot. The idea of these companies that started as DTC, online only, and then they open one or two maybe guide shops, whatever they want to call them, and then suddenly they open a lot more stores, and you start to see that really you want a little bit of both. You know, I talk about Bonobos a lot. That's an example. The Thai Bar, which has a store here in New York that I like a lot. What do you find is the benefit of having the brick and mortar stores? I mean, people go in and they're able to see and touch, but obviously, largely, I'm sure it's still an online business.
Yeah, I think it's largely dependent on the product category. So for us, in particular with glasses, people really want to try them on. And even a 1 or 2 millimeter difference in the size of a pair of glasses can make a big difference in whether they look like they fit well on you or not. There's also a service element to our business where we have opticians in all our stores that can adjust your glasses. And then we have optometrists where you can go in and get an in-person comprehensive eye health exam. And so, for us, it really makes sense to have a presence nationwide. I think for other product categories, it might be easier for people to buy those products online, and we think in general the kind of the future of brands and retailing is an omni-channel experience where people can kind of self-select how they want to shop, whether that's on their phone or physically walking into a store.
All right, Dave Gilboa of Warby Parker, new product category. Thanks so much for talking about it.
Great, thank you.
All right, coming up here on Wi-Fi AM, PayPal makes its biggest acquisition ever. We will tell you all about it after a quick break. Welcome back to Wi-Fi AM at Yahoo Finance. PayPal has reached a $4 billion with a B dollar deal with rewards platform Honey. Honey, known for its Chrome plugin, and it helps you get discounts when you shop online. Now, executives say that the deal and Honey's 17 million monthly active users will act as a springboard for PayPal to reach a broader customer base. The deal is expected to close early 2020, and if finalized, it would be PayPal's biggest deal to date. And PayPal has announced the deal, so I think it's pretty much final. It has to be a final at some point. But man, I am very surprised by the price tag of the deal.
Yeah, it's astronomical, $4 billion for it. But what we're seeing with PayPal is that they're facing a lot of pressure. Google, Facebook, they're all coming up with their own forms of payment that they want to offer their customers and their users, and they're bypassing PayPal. So PayPal's like, well, maybe we should get more into like the actual consumer shopping experience to actually be able to capitalize on this and build more accounts.
So I'm still trying to figure out. So I wasn't aware of Honey as a thing before.
Well, right, $4 billion for something Brian Chung has never heard of.
Do you use it on your browser?
I don't use it, but
I've
I don't
certainly heard
use
of it.
Honey, but it's very useful to people who do because
so
it
Dan.
finds discounts.
Well, and you knew about it, right?
Yeah, I knew about it. Yeah.
They have advertised heavily. I have seen a lot of their ads.
But how many times have you actually used it to get a coupon?
I haven't used it, but every time I see an ad for it, I think, oh, I should add that to my
But
Chrome.
I sense you're trying to get to a point.
Right. Well, the point that I'm trying to get at basically is that I'm very skeptical of a lot of those, those coupon cabin sites that you always search for. Like they're all useless. None of the codes work. It sounds like this plugin does work for the people that do use it, but I'm just wondering, what does PayPal want to do with Honey? Is it that they want Honey to integrate PayPal services to get people to use their platform when paying for these types of things, or reverse? Well, no, Venmo is interesting because actually PayPal has siloed a lot of what Venmo does. Keep in mind that you can't actually transfer funds from your Venmo account to your PayPal account right now, even though it's the same company. So the integration is going to be pretty tough. So I don't know exactly what the game is.
Have you tried to do that a lot? Because you seem really irritated.
I have a few times, yes.
So you're right about Venmo. They've kept it pretty siloed. They didn't do much to monetize it until quite lately. I feel like PayPal has done more with Venmo now. They have a Venmo credit card, and they're trying to do more with Venmo exclusive things. And I noticed just the other day, I ordered food on a food delivery app, and the options popped up. It was a delivery app I'd never used before, and it said you could enter a credit card, or you can use PayPal, or you can pay using Venmo. And I hadn't seen that option before, although you're right. It's like, well, PayPal and Venmo, why not just combine? They've kept it kind of siloed. I suspect there will be a way to integrate Honey with Venmo. In fact, maybe they just rebrand it and use the tech and keep the customers. But 17 million customers for Honey. Wow.
Which is remarkable. That's
more than Venmo paid for iZettle a year ago or 2 years ago. That was a big European company, and much more than PayPal paid for Braintree, which was the parent company of Venmo.
Right.
Wild. $4 billion for Honey. Now let's stick with tech news. This just breaking down. CNBC is saying that WeWork is laying off 2,400 employees. Just more bad news for that company. And we did already know about a week ago, I remember the reports that they were going to lay off 4,000. So I think this is part of the 4,000. Maybe it won't end up being 4,000.
It's a substantial number.
Yeah.
Right.
Well, and they only have, Emily McCormick was saying, I think 12,000 employees. No, 6,000. So no, 4,000 was almost half of the employees.
Almost half of
Yeah, so it was 12,000 is the total workforce at WeWork. So 2,600, whatever the number is, 2,400 is a lot. That is a huge, significant number.
Yeah, tough days for the employees. I mean, no one likes to hear about layoffs, but WeWork is trying to be a viable business, and at this point, they just got to get rid of all those people on the payroll.
Yeah, no IPO, so sorry. I hope you didn't make big plans for that. Oh, and you're laid off.
This hurts the employees. The botch IPO hurt the employees the most.
And not just well beyond
They
WeWork.
pulled the rug on all their financial issues.
And then ripple effects on all of tech. All right, in the latest episode of Influencers, our weekly show, Yahoo Finance's editor-in-chief, Andy Serwer, sat down with Ford Foundation President Darren Walker, and Darren Walker discussed how he thinks the ideal president should be.
Well, at the foundation, we are not a partisan organization, so we don't look at this from the standpoint of who is president. Ideally, we want to have an administration wherever we work in the world that believes in justice and fairness and equity. And so in this country today, there is no doubt, irrespective of who is president, that the scourge of growing inequality is having a huge toll. It is part of the reason why we are an increasingly divided nation, because people who work hard, play by the rules, find themselves feeling as though they are being left behind. And the data would indicate that too many of them are being left behind.
All right, you can catch the full interview of Darren Walker on the latest episode of Influencers. That's today at 5 p.m. Eastern. You can watch it on yahoofinance.com or on our app. And we'll be right back here at Wi-Fi AM after a quick break. Welcome back to Yahoo Finance. Apple is yanking its first big major original movie from the AFI Film Festival at the last minute. The movie is The Banker, starring Anthony Mackie and Samuel L. Jackson. I remember just seeing a preview for it in theaters recently. It was set to close out the film festival on its world premiere tonight, and it was going to hit Apple TV Plus soon after a limited theatrical release, a la The Irishman and Netflix. Now Apple has halted the release due to recently uncovered information surrounding a member of the Garrett family, and there is a member of the Garrett family that the film is based on. But this controversy that has emerged is not about anyone depicted in the movie, and I've read that it involves the son of the character that Anthony Mackie plays. Apple says it is investigating, but guys, this is not good news for Apple TV Plus. Yikes, especially after there's also been middling reviews for a lot of the Apple TV Plus shows.
And here's the risk, I think, is that Apple bought the rights to the film after it was already created. Netflix's entire strategy has been bankrolling the idea when it's in script form and then basically seeing it through production. If you're just buying the rights to a movie, there's a risk that this is going to happen. Bad for the first movie that was supposed to be on Apple TV Plus for this to happen with.
Yeah, major motion picture that Apple was going to hang their name on and be like, this is our product, we made this. And it was supposed to be released in theaters in about 2 weeks before it actually ends up on Apple TV Plus next year. So yes, a major flop for Apple. So Apple right now is doing an investigation. They're kind of figuring out what's happening, but apparently it is the character that the movie is based on, apparently a family member. There's some investigations going on about that character. And that person has actually been used in promotional activities with Apple,
It was a consultant on the movie. Now, that's better than if it's a controversy about someone in the movie, but shades of Green Book here. Remember what happened with Green Book, the controversy there. Of course, the movie's a huge success, but there's a lot of controversy about the actual real story it was based on, and the movie took some liberties. We got to leave it there. Thanks, guys. That's Wi-Fi AM for today. Thanks for watching. We'll see you right back here tomorrow at 10 a.m. But don't miss On the Move. That show starts next at 11 in just 2 minutes. I'll be there on the move. I'll see you there.
11 a.m. here in New York City, 90 minutes into the trading day. Stocks are trending lower today across the board by about 0.25%. Retail woes. Macy's shares are tumbling after the company's same-store sales fall for the first time in 2 years. We're breaking down the numbers and what to expect from other big names after the bell today. From no fees to big bucks, Charles Schwab reportedly strikes a massive deal to acquire TD Ameritrade. And things heat up in D.C. We'll speak with two senators about everything from the impeachment hearings to their bipartisan push to fight climate change. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Good to have you here. Our top story, all eyes on retail as major companies report earnings today. We've already got Macy's. They missed revenue estimates in the third quarter and reported their first same-store decline in sales in years. The department store chain also slashed their full-year guidance. We want to introduce this hour's panel. Cumberland Advisors Chairman and Chief Investment Officer David Kotak. We also have Dan Roberts joining us from Yahoo Finance. And in London is SW Retail Advisors President Stacey Widlitz. It's good to have you here, Stacey. I want to start with you. Macy's going forward, as we look at the holiday sales season, it might be in for some real trouble because if most of what people want to buy are electronics, that's not what they sell. What would you advise an investor about that fact?
Well, I think what's going on at Macy's is much more than that. I mean, Macy's is clearly losing share. Kohl's is clearly losing share. You saw Target's incredibly strong numbers here. So I think, part of Macy's issue is that perhaps they need to close more stores. They're focusing on their Growth 150. They have more than 600 stores here. So the question is, what does the right footprint look like? But in terms of categories, they're really talking about women's being weak, which was a bright spot at Target. And also they had, fairly some blips with their e-commerce upgrade that affected some of their digital sales. So there's a lot going on at Macy's, but weak traffic is the biggest issue here.
Stacey, also, there's always within retail that sort of intangible of getting the merchandise mix correct, right? In other words, part of it is not just the execution in the stores and but it's also that Target is selling clothes that people want to buy and Macy's is perhaps not. I mean, how much of that is the issue, and how do you fix an issue like that, since, again, it is something that's more on the creative side or intangible side?
Sure. I mean, with all these stocks, fashion is always a huge risk. And, really what Target has done differently is they are doing a lot of private labels. So they're kind of looking around at the retail landscape and looking at categories inside apparel and out, including beauty, and saying, who's not doing it well? Let's do it better inside our stores. And that's exactly what's going on here. I think also for the department stores, naturally, the traffic is not going to department stores anymore. And also you find, including Macy's, they carry a lot of the same brands that the other stores do. So the nature of the business is when things get tough, everybody pushes the promotional pedal and you're not differentiated. Macy's this quarter actually kind of stood back and said, you know what, we're not going to promote. We're going to hold margins. So that was one of the bright spots in the story here.
Stacey, it's David Kotak. Let me ask a macro question. You take apart idiosyncratic companies, distinguish among them, but if you look at the whole now, is retail rolling over? Are we seeing some erosion? Are the tariffs injuring incomes to spend? What's the macro view of the sector?
If you look at the consumer in general, the consumer is still very healthy. And that's been the big question here. Everybody was concerned about tariffs, certainly. And this summer, I would even argue in some cases, there was a little pull forward big ticket sales as some consumers were concerned about those prices going up before holiday. But in general, the problem is execution at these retailers. You look at somebody like Target that's comping 4.5% on a 2-year basis, 10%. And they called out apparel as one of their strongest categories. You look at Walmart, consider their size. They are comping in the region of 3%. You look at Lululemon, you look at Nike. So it's not that the consumer's not spending, it's that they're spending inside of stores that give them something differentiated.
Yeah, we get it. But let's ask this question because we're going to get Nordstrom after the bell. What do you expect from Nordstrom? Because they're not a Target. It's almost like a Macy's, and they've been having the last 2 quarters, they've been struggling.
Absolutely. They're a department store. Traffic is leaving the department store space. The entire space is under severe pressure. What Nordstrom is doing is obviously they have the Rack, which is like a TJX, like a Ross store. So that's a bright spot for them. In addition, they opened their New York City store, which is doing quite well. And also they're doing the local format, which also is quite clever. If you look at their largest markets representing the bulk of their sales here, it's a way to leverage the big department stores. So doing some smart things, but I don't expect their comps to be good.
All right. Stacey Widlitz from SW Retail Advisors joining us from London. Thank you very much.
See ya.
Well, the brokerage wars are heating up. Charles Schwab is reported to be buying TD Ameritrade for $26 billion. That's according to multiple reports, although we do not have confirmation of that deal as of yet. The combined firm, again, will reportedly be run by Schwab CEO Walter Bettinger, and TD Ameritrade's chief financial officer, Steve Boyle, will lead the target company until the deal is completed. Shares of both stocks are trading higher. Dan, you uncharacteristically have been quiet, so I'll get you in on this. This is something, though, that has been talked about for a while, some sort of combination here.
Yeah, but I mean, you have to think that the race to zero that all these guys did, we saw that TDA did it, Schwab did it, and then Fidelity, I think, was kind of the last to hop on board. You have to think that that is part and parcel with the tie-up here. I mean, I know this was being discussed, but that is kind of leading to further consolidation. We know that going to zero commissions means that it's going to be harder to make those margins up. So you got to have size there. You got to have size to be able to compete better. And so it does make a deal like this make more sense. If we're going to have zero commissions, well, we got to make it up in volume. So very interesting. If you're a TDA customer and this happens, I would just be interested in terms of the consumer-facing part. Does this result in some kind of rebrand? Are you now told, well, now you're a Schwab customer? We'll see if that happens.
David, do we expect more consolidation, though, if it's going to be about, the size of your brokerage?
Yeah, it looks like it. Scales in play. That's what this is about. The hidden piece of this for investors is the yield on the money market fund, the yield on the sweep, and they tend not to look at it. And so there's a widening margin. Schwab will nick the investor a few basis points in the sweep yield in the money market fund unless the investor thinks I have to call and switch, and most people don't. And so that's the hidden side of this.
Well, one of the reasons that Schwab and TD Ameritrade make sense is because of the advance in technology that obviously made by online trading. It's popular, and we spoke to Charles Schwab about this technology just last month.
In our case, our cost of doing business has gone down dramatically over the last 20 years because of technology. We're down to 15 basis points. We're probably the lowest cost provider of stocks and information and things of that nature, which puts us very competitive, being a low-cost provider. So technology, thank you very much. We would like more of it.
Is there a negative in any way for the consumer out of this?
Well, I mean, what David is saying,
those basis points on the money market.
Yeah, I mean, let's see how many customers are aware of needing to call and change something in the settings. I mean, most people just set it and forget it, and they leave it. But also, the interesting wrinkle here to me, because you brought up tech, look at something like Robinhood, which we talk about a lot. Now, obviously, much smaller in size.
Yeah, we had the CEO in yesterday.
Yeah, an app that has zero fees, and that was always Robinhood's pitch. But now, as the big dogs go to zero, well, then what is Robinhood's special pitch to young people? I mean, if you could get the same, well, there you go. I think Robinhood becomes an instant acquisition target. Now, the people at Robinhood would say, no, we're going to beat these guys at their own game, and we've grown quickly. Robinhood just announced yesterday expanding to the UK. But if you're Robinhood now, well, what's special about you? Because the big guys are doing it, and a lot of people of a certain age are going to have a lot more trust in a name like Schwab or TDA over Robinhood. They don't know what Robinhood is. It's like the people who use Zelle for peer-to-peer payments because it's from the banks instead of Venmo.
Right. I mean, the other thing is these companies almost have to do these kinds of deals because as much as they would argue the technology on the back end is lowering their costs, they need volume. If their fees are going to be zero, they need that volume.
Well, if your fees are zero, and zero reflects the right pricing, and there's nothing hidden, you cannot make up zero in volume, which means it's hidden somewhere else. Are clients signing stock loan agreements? You don't know what's taking place in the back. Zero, in my opinion, when you know there's a service, is deception. Something else is there. And the burden is now on the investor to dig deeper. If you have a professional management firm, we do. What do we do at Schwab when we have a large sum at Schwab? We daily do a switch. We put it into a different instrument. We force a trade. But a retail investor won't do that.
Yeah.
Check your accounts. French luxury group LVMH raised its bid on jewelry chain Tiffany to $16 billion. Shares of both companies are trading well. You can see right there, one is up, the other is down. Inez Ferre on the floor of the New York Stock Exchange has more details for us.
Yeah, Adam, and last month you heard that a Reuters report said that the offer had been at $120 a share, and Tiffany at the time said that that wasn't enough. So now LVMH has reportedly boosted its offer to $130 a share. And in the last couple of weeks, Tiffany has been trading above $120 a share. So certainly investors were thinking that shares needed to be valued at a higher price, and also that LVMH would pony up more money for the offer. Now the talks are ongoing, and we're watching this morning Xerox and HP. This is after Xerox has given HP an ultimatum on their acquisition offer. In a letter to HP, Xerox says that it was surprised that HP's board had rejected their offer. The letter is asking HP's board to reconsider, or Xerox will go directly to HP shareholders. Now, just to recap what that offer was, $22 a share, and HP has said that its board has unanimously rejected that offer because it was too low.
All right, we'll keep watching that developing story. Thanks, Inez. Meanwhile, expectations are rising for a phase one trade agreement between the U.S. and China, despite no clarity on when leaders of the two countries will actually meet to seal the deal. So how should investors weigh these mixed signals as new U.S. tariffs are set to go into effect on December 15th? With us now to discuss is Seema Shah, investment strategist for Principal Global Investors. She's joining us from London. Seema, it's good to see you. And I know that you are focused squarely on December 15th and whether those tariffs are indeed going to be instituted or pushed back. Is that to you more important in the short term than all of this back and forth on when and where and if the deal gets signed?
To an extent, yeah. I mean, I think the deadline for this deal keeps being pushed back. You know, we were hoping before Thanksgiving. That's unlikely now. It looks more likely that the hard deadline is going to be those December the 15th tariffs. In terms of why that's so important, you know, I'm skeptical that any of the technology transfer, property rights, any of that stuff is actually going to be cleared up. If anything, it seems like that's going to be kicked down the road. But the most important thing is going to be those tariffs. That's what the economy is going to be resting on. We know that consumers have been very resilient. They've been holding up the U.S. economy, and we are expecting those tariffs not to go ahead, which means it'll be good news for the consumer. If they do go ahead, then we would expect the expectations for the U.S. economy and markets would change quite drastically.
Seema, Dan Roberts here. Yeah, as you mentioned, the consumer has been very resilient, and for the most part, markets have shrugged off the daily, tit for tat and this and that that's come out about where we are in trade talks. I agree with you, long way away from the trade one deal. I don't know when that's going to happen. But let me just ask you, are you watching closely when and if there will be an actual impact on the average American consumer's wallet? Because we talked so much for so long about, soon as these tariffs increase, people will see a hit on their wallet, and that's when it'll really hurt the economy. Hasn't happened yet.
I think we've seen a few signs of it. I mean, I think there have been some weakening in the consumer. Really, though, the big hit is going to be those December the 15th tariff. Those are the things which are really focused on consumer goods. You may see a case where if they do go ahead, some of those products will be exempt again, so there could be some adjustments. But so far, the consumer has been, it's been generally resilient, but we would expect that there would be a definite impact from these tariffs this time.
Talking about these tariffs, you have told us that history tells us that the dislocation between markets and the underlying economy will eventually close. Dig down and show us as investors what that means. Is that a negative expectation?
Yeah, I guess it is. So what we've seen so far, at least this year as well, is you've seen equity markets continue to rise, even though the economic fundamentals have remained pretty weak. Now, we've also seen earnings growth for companies actually start to come down as well this year. And we have expected it to come further down in Q4. And yet, despite all of that, equities have continued to rise. Now, a lot of that has been supported by central banks, with a number of global central banks cutting rates, and now with the Fed and the ECB expanding their balance sheets. So that glut of central bank liquidity is once again helping market prices, but it doesn't really do anything for the economic fundamentals. But what we can see is that this can be sustained for a bit longer, and actually we expect markets to do pretty well next year. It's at some point it does catch up with you, and you'll need to have a big trigger. But at this stage, as we look into 2020, as long as a trade deal comes into play, we think that asset prices continue to be supported.
Seema, we have to leave it there. Sorry, David. Seema, thank you. Seema Strauss, investment strategist for Principal Global Investors. Thank you so much for joining us.
Coming up, battle for the White House. Democrats duke it out in last night's heated debate. Plus, corruption in the Motor City, why the president of the United Auto Workers Union was suddenly forced to step down.
Climate change is a growing issue for voters ahead of the 2020 elections. And in last night's Democratic debate, presidential candidate Mayor Pete Buttigieg talked about the importance of getting the message out on the issue.
I believe that the quest for the carbon negative farm could be as big a symbol of dealing with climate change as the electric car in this country. And it's an important part of how we make sure that we get a message out around dealing with climate change that recruits everybody to be part of the solution, including conservative communities where a lot of people have been made to feel that admitting climate science would mean acknowledging they're part of the problem.
Well, there's a new bipartisan caucus focused on bringing passable climate legislation to the Senate. It launched recently, and it's already grown to 8 members. Joining us now is Indiana Republican Senator Mike Braun, who is a co-founder of the caucus, and New Hampshire Democratic Senator Jeanne Shaheen, who is a member. Senators, thank you so much for joining us. Appreciate it.
Good to be on.
Senator Braun, I want to start with you about why you decided to co-found this caucus with Senator Chris Coons of Delaware. What specifically are you all hoping to achieve here?
Well, for me, it was easy in the sense that I've been interested in conservation since I've been a kid, have taken that idea of being a good steward of the land, involved in farming and forestry, building a distribution and logistics business. It was just part of what I always thought conservatives weren't, out there talking about it enough. Our conservatism, conservation, almost spelled the same way. I think we, many times as conservatives, are foot draggers on the issue. I compare it to like healthcare, where we've been apologists for a broken industry. I want to be involved in the conversation, and when Chris finally found a Republican that said yes, then it cascaded to where we actually now have 4 others. So Marco Rubio joined as the last member. So.
Senator Shaheen, I want to bring you into this because information from the Energy Information Administration, the federal government, shows that, for instance, coal in the United States over the last 15 years, we've gone from generating 40% of our electricity from coal. It's now down to about 30% and falling because no one's building new coal plants. It's natural gas. So what could this, bipartisan caucus do to advance those kinds of changes, which already seem to be underway?
Well, I think there are a number of things. And we had at our first meeting heard from 7 CEOs of major companies, many of them in the energy industry. And what they said to us is they would like to see policy at the federal level that helps drive some of their business decisions. So that's one of the things this Climate Caucus can help work on. And I think it's a very positive step. When I first got to the Senate, this was a bipartisan issue, and it is, again, a bipartisan issue because it affects people across this country. In New Hampshire, we're seeing it in our wildlife. Our moose population is down 40%, the threat to our coastal infrastructure. It's something that people see, and they know we've got to do something about it. And that's one of the things that this bipartisan coalition can help address, is come up with policies to make some progress on responding to climate change.
But is there a specific that you can point us to, whether it's legislation or real change that's going to happen, say, within the next 12 months? Share it with us, please.
Well, I think we have to get it passed, but Rob Portman and I have had legislation around energy efficiency, which is the cheapest, fastest way to deal with our energy needs. It's passed out of committee for about the fourth time. We now have a House that's going to be willing to listen when this bill comes over. It has bipartisan support in the House. So I'm very optimistic that we can get this done. It would be the equivalent of taking about 12 million cars off the road and save consumers about $16 billion a year. So that's a very real deliverable that we could get done this session of Congress.
Senator Braun, bipartisan support for all of this is obviously quite important, but what about support on your side from the top? In other words, the White House has been very resistant to making changes related to climate change, obviously pulled out of the Paris Climate Agreement, and has increased decreased regulation on this issue. So how do you push these changes forward when you're not getting that support from the administration?
So when you look at those signals, it would maybe say, hey, there's not an interest. But when it comes to the Paris Climate Accord, we've got a lot of heavy lifting to do with China, India, many others, when our trajectory's been on a pretty good angle for some time. I don't think that means that conservatives aren't interested. I think we would probably take the approach of using technology, innovation, the low-hanging fruit like pushing conservation, reforestation. I think we're going to find those commonalities, and I even believe the White House, when they know that we're trying to do this in a way that we agree on the simple things, it'll evolve. And until I guess I decided to be on the Climate Caucus, look at Lindsey Graham, Lisa Murkowski, Mitt Romney, Marco Rubio. That's a pretty good cast across the board in our conference that, that's how you start to change things. And I think it's an easy argument to make because I believe it's the biggest issue in the future. Healthcare costs are currently. This will drive the equation down the road.
I got to ask both of you, as a citizen of the United States, it's encouraging to see two senators who on other issues you are polar opposites, the wall, for instance. Polar opposites come together on an issue like this. But I got to ask you, kind of the elephant in the room, we're watching day 5 of the impeachment hearings, and there was a topic that took center stage in last night's debate. Listen to what the candidates who were trying to get the Democratic nomination had to say, and then I'll follow up.
We have a president who is not only a pathological liar, he is likely the most corrupt president in the modern history of America. But we cannot simply be consumed by Donald Trump. Because if we are, you know what? We're going to lose the election.
We have to establish the principle, no one is above the law. We have a constitutional responsibility, and we need to meet it.
The impeachable conduct that we have seen in the abuse of power that we're learning more about in the investigations.
Senator Braun, I want to start with you because you are a supporter of the administration and the president. And just today we had Fiona Hill say the narrative about Ukraine meddling in our election in 2016 is just false. It was Russia. What do you say to the president, or how do you react to those Democrats who are trying to become president?
Well, what we just heard there was very caustic, and I think none of us know exactly what's going to eventuate in November of 2020. So I think there is a little bit of damage done when you're out there with that kind of vitriol. And all I can tell you is I'm a newcomer here. But when I look at what was happening before President Trump got here, we weren't knocking it out of the park. And I think even Jane would acknowledge that we've got a lot of ways to improve the federal government running
Senator, but forget about the Democrats last night.
Yeah.
What about what you're seeing for the 5th day on Capitol Hill in terms of, in some cases, lifetime government employees or public servants who are making these allegations about the commander-in-chief?
Here's what I see. It's a political process from when it originated. It goes back to November of 2016. And I don't think you're going to have anyone change the lens you're looking through. But the merits of the case ought to be determining how any of us would look at it. And I think clearly, regardless of the witnesses, which I don't discredit their origination, their point of view, it, for most of us on our side, does not rise to an impeachable offense. And even the public opinion polls hit a peak about 3-4 weeks ago, and I think independents in swing states, which I know Speaker Pelosi would be looking at, don't think so either. So it depends on which political lens you're looking through.
Except Senator Shaheen, polls aren't necessarily facts. And again, I got to reiterate, Fiona Hill sent a warning to Republicans who are going on a narrative that is just inaccurate. So what do you say? Well, I mean, you guys are clearly talking to one another, which we are appreciative of. What do you say to your colleague?
Well, I have a different view. I'm very concerned about Russia's meddling in our 2016 elections. We've heard very clearly from the intelligence and national security establishment they're doing it again. I think we need to take measures to address that. It's not the Ukrainians, it's the Russians. And we need to see what happens as the result of the proceedings in the House. There are very troubling allegations that have been raised. I think we need to let that information come out. We need to see what the House sends us. And in the Senate, we will be juries if there is an impeachment proceeding that comes over, or the equivalent of a jurors. And so I'm not going to prejudge the case. I'm going to wait and see what gets sent to us. And I continue to believe that we have an agenda that we need to work on in the Senate. I hope the leadership in the Senate will let a lot of the legislation that is bipartisan come to the floor so we can get it done. And as Senator Broad and I both agree, there are efforts that we can make to address climate change in this country, and we need to get working on those because it is an existential threat to the planet.
And it is encouraging to see, people from other sides of the aisle coming together on this issue. Senator Mike Braun from Indiana and Senator Jeanine Shaheen of New Hampshire, we greatly appreciate your being here on The Move.
Thank you.
Thanks so much. We want to bring you some breaking news in the meantime. The Wall Street Journal is reporting that Facebook is now considering making changes to its political advertising policy, similar to what Google has just announced, that would prevent various campaigns, political campaigns, from targeting only very small groups of people. This, according to people familiar with the matter that the Wall Street Journal is citing here. So we'll continue to bring you any updates on this, let you know if Facebook does confirm that it's doing this. And we will be talking about this as well as Google's new policy a bit later in the program. But coming up next, it's where the pets go. Why Petco is making a big push for all natural food products at its stores. Plus, before we go to break, take a look at some of the top trending tickers on Yahoo Finance today as TD Ameritrade and Charles Schwab mull a matchup. We are seeing both of those stocks rise.
Welcome back to On the Move. I'm Jared Blickery. We got the S&P 500 down nearly 3 days in a row. Got to wait till the end of the day. Haven't seen that in 2 months. So obviously the sky is falling here. They got the Dow Jones Industrial down only 66 points. All the three major indices down about 1/4%. We're going to take a look at the intraday price action here in the S&P 500. We can see we started out underwater a little bit, made session lows about 10:15, 10:30 a.m. and are climbing back right now. We're going to take a longer-term look on a 3-month chart here, and we were pointing out yesterday some structure in the VIX, which we're going to take a look at in a minute, may be signaling a potential pullback, but we do have some support coming in at 3,066. That would be this level right here, as well as the former highs, and that would be at 3,023 to 3,032. So let's take a look at that VIX right here, and this is a structure we've been watching for some time, and we can see the trend line points to a potential spike around 18. That would be concurrent with the S&P 500 retracing to that 3,023 level. Have to see if that materializes. Got the 10-year T-note yield. That is up 2 basis points today, and we were pointing out that it broke down, but we're going to have to see if that down move continues in the following days. We will be right back.
All right, 11:32 here in Nueva York. We're 2 hours into the trading day. Stocks are trading down. We'll talk about that. Chaos in the Motor City. The head of the UAW steps down on the same day General Motors accuses Fiat Chrysler of bribing officials. Trouble on the final frontier. The latest as SpaceX's massive prototype suffers a setback during a key test. And taking care of man's best friend, we're going to talk to the CEO of Petco about his company's push into healthy food for all of our furry friends. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for sticking with us. Let's take a look at what's going on in the auto industry. The United Auto Workers president, Gary Jones, unexpectedly stepped down today. This comes after GM filed a lawsuit yesterday alleging that Fiat Chrysler bribed the union. Tom Belger joins us now to share the impact it's having overseas, because there's a ripple effect here that could have an impact on Fiat's merger with the owner of Peugeot, right, Tom?
Yeah, we can only assume this is intended to disrupt our proposed merger with PSA. Those were the pretty stark words of Mike Manley, CEO of Fiat Chrysler, in a letter to his employees after this pretty surprising news broke. That suggests the knock-on impact isn't an unreasonable fear, and it's certainly likely to have scared some investors. But Fiat Chrysler certainly trying to brush off those fears, saying talks are progressing smoothly on the merger, which would potentially create the world's 4th largest car maker. PSA, remember, behind Peugeot. We will not be slowed down by this act. That was another line from Manley. They're saying, they've announced today they're confident of getting a binding deal sorted on this merger by the end of the year. That's a new announcement today. Both parties do have pretty obvious reasons for this tie-up. You could see benefits to weathering the storm facing the industry from the merger, and also combining resources to invest in new technologies and rejigging their businesses really towards electric and self-driving cars. But Deutsche Bank analysts, interestingly, pointing out a lot of the PSA shareholders will be feeling they're taking a larger share of the risks really from this deal. They were saying this before the latest news, implementing the restructuring, lumping a weaker balance sheet. So it's quite interesting to see that while Fiat Chrysler's share price is down, the PSA share price flat. And also interestingly, PSA so far declining to comment, which is probably understandable. So no sign of any issues for now, but one to watch, certainly.
Okay, Tom, thank you for the update. Let's turn to the pet industry. It's expected to reach a total $281 billion by the year 2023, and retailer Petco is hoping to cash in on that with something that maybe the others aren't doing, and that's despite the rise of Amazon. Here with us to talk about it, Petco CEO Ron Coughlin. Great to have you here. Last year, you launched an initiative. You don't sell food product for animals that have what? That have food colorings or even artificial
ingredients.
How's that working?
So a year ago, we made the decision to eliminate products that had artificial ingredients. So propylene glycol, which can be found in antifreeze, or butylated hydroxylene, which can be found in laundry detergent. We eliminated all those products, which means we took off about 1.5 million pounds of foods from our shelves. And our adage was, what's good for the pet's going to be good for the business. And not only did we save a bunch of pets, but at the same time, our business went from a declining business to growing 3 to 4%.
So as I was reading about this initiative that you guys are doing, it seems as though you're sort of positioning yourselves as the Whole Foods of the pet world, in a way, sort of that natural alternative. Is that the way you stay competitive? Because you do have, as we talked about Amazon, you've got Chewy, you've got other mom and pop pet stores. Is that kind of how you're positioning yourselves?
For the food part of our business, absolutely. If you think about, we're really in the business of improving lives, pet parent lives, and our folks in the stores' lives. And so the food part is eliminating the artificials, but at the same time, we're doing the fastest build out of a vet network in history, all on the premise of affordable vet care, because a lot of pets don't get the vet care that they need. We're also, through our foundation, which just had its 20th anniversary, we save 400,000 pet lives a year that would otherwise be euthanized. So we really see ourselves in pet wellness, a part of which is this nutrition move that we're making.
David, do you have any pets?
I will tell you that I have grandchildren who have pets.
Excellent.
And teaching pet wellness is teaching the owners of the pets wellness.
That's right.
So I congratulate you on the initiative. And my grandchildren don't know that they should congratulate you too, so I'll do it for them.
Thank you. Well, you know, education's a big part of it. 30% of customers don't know that they're feeding their pets artificial ingredients. There's over 1 billion pounds of food that has artificial ingredients that people don't even know.
Ron, what's the breakdown for you between e-commerce sales and in-store? Because it does seem to me, you know, as a dog owner, that pet food, hypothetically, should be something that it makes sense to just get online. I don't necessarily see a reason to go to the store. And yet, even as I say that, I'm not someone who's transitioned to buying it online. I'm used to just going around the corner. I mean, I'm lucky enough to have a place walkable from my house that sells the dog food, but I haven't become, you know, I have never used Chewy, I've never ordered from Petco online, never ordered pet stuff from Amazon. But what's the breakdown right now, and are you headed toward a time when most of the sales are e-commerce?
Yeah, so e-commerce is around 10-15% of our business, but it's growing 20% plus. And if you looked at the Amazon and Chewy's, they were somewhat disruptive, and we had to go back and retool at Petco. But in the last year, we've launched Buy Online, Pick Up in Store, which is now shockingly 60% of our online sales.
Like Target, yeah.
Like Target. I am amazed at just how much that is taking off. Repeat delivery, we have our app with 1 million downloads now. So we're very much, now digital is a tailwind to us before it was a headwind.
But you offer something, and I picked up in an earlier response to a question, that Chewy cannot offer, that Amazon cannot offer. It's the vet services. And we keep hearing from retail earlier in the program, you know, traditional retail at department stores, one way they might be able to save themselves is the experience. Is the experience of being able to take my pet for a more affordable veterinary service something that only you offer, or is your competitor, the other guys, PetSmart, I think it is, are they offering that kind of thing, or are you alone on this?
No, they have vets in a bunch of their stores as well, but we believe we can do something more holistic. It's not just the vet service, it's the grooming, it's the food without the artificials. We believe we're the brand that's looking after the pet most.
How does the cost structure work for the vet services in particular? How do you offer it in a more affordable way? Because for all of us who have pets, I mean, especially medical care for your pets is indeed very expensive. How do you get the cost down?
Absolutely. We work on cost initiatives. We're trying to automate. I come from the IT industry. I ran HP's PC division for 10 years. So we believe there's a lot of automation we can do and working with our vets on productivity. But you talked about the affordability of vet care. My dog, Yummy, he's 11 years old, and he got diagnosed with cancer this summer. And after diagnosed, the vet tech came in and gave me a bill that it was going to be roughly $20,000. I'm lucky I could afford that. But it struck me at that time that a lot of people can't. And that's why affordable vet care is so important. And we're also going to work with the foundation on helping people who can't afford to make sure that the pets do get taken care of.
Last question for you. Privately held right now, any need to go public, any plans to possibly go public to raise the kind of capital that would allow you to take on competitors in a different way?
So we have great partners with the PE firms of CVC and CPP. We have no need to do anything. Right now we're focused on growing. We've been growing for the last 4 quarters. And now we're focused on driving EBITDA growth, which we'll share with our lenders next quarter. So we're on the right track, and who knows what will happen in our financial future.
We look forward to having you come back to discuss what will happen in the financial future, and we wish Yummy all of the best. Petco CEO, thank you for being here very much, Ron Coughlin.
My pleasure.
Coming up, Salesforce CEO Mark Benioff explains what drove him to build a massive software empire, plus PayPal's biggest deal to date, why the company just purchased a shopping platform for $4 billion. We got some stocks on the move in midday trading for you. Let's start with the big up mover here. That is L Brands, interestingly. As we talk about all this turmoil in retail, this is one that is still trading higher, although you can see it's down off the highs of the session right now. U.S. comparable sales of Victoria's Secret down 7%. That's the 6th straight quarter of declines. Bath & Body Works performing better, though, that up 9%. And the company's 4th quarter profit forecast was better than estimated, although looks like it's melting away some of those gains. We're also looking at BJ's on the flip side in retail, the warehouse chain. Profit there beating estimates, but revenue and comparable sales missing. Comps up 1.1% last quarter. That's about half what analysts were anticipating, and it's cut its 2019 sales outlook, so those shares sharply lower. We'll be right back. Salesforce co-CEO Mark Benioff says that capitalism as we know it is dead. He's calling for a new form of capitalism. Yahoo Finance correspondent Julia LaRoche spoke with Benioff at Dreamforce in San Francisco this week. So what's this new capitalism look like, Julia?
Yeah, well, Julie, that new form of capitalism that he's calling for is one that is more fair, more equitable, and takes all stakeholders into account. It's no longer that Milton Friedman school of thought that the business of business is business, basically maximizing profits for your shareholders. You have to think about all of your stakeholders. So we talked about how Mark Benioff built Salesforce. He had this basically an epiphany when he was at Oracle in the mid 90s that he was not satisfied with his life there and that he wanted to build a different kind of company. I also asked him, is it too late for companies that are far along in their journey to pivot and actually change? So take a listen.
Along the way, business itself changed. It meant that business became the greatest platform for change. That's what really inspires me today, that I can see this amazing company that's all around me and how I can improve the state of the world with it.
Well, when you were younger, back in 1996, you took this sabbatical. You basically had it all when you were at Oracle, and you realized that something was missing in your life, and you had this realization of, I want to build Salesforce, I want to build a different kind of company. You pioneered this 1-1-1 model. Do you worry that there are other Mark Benioffs out there who just might be in that corporate grind and missing out on a bigger purpose? Does that worry you?
Well, I think you're 100% right that business has to be more than just making money. Because if all you're focused on is making money, you're not going to have what you really want in your life, which is happiness and fulfillment and having that great feeling every day that you deserve. And the way to get there is giving and generosity. And that can be linked with business. That's why 21 years ago, we put 1% of our equity, our profit, and our time into a foundation. That was very easy because we had no employees, we had no equity, we had no products. But now, 21 years later, we have 45,000 people. We have a market cap over $125 billion. All of that pays out. That's why we're able to give 4 million hours of volunteerism, $400 million in grants. That's the good feeling I get with Salesforce every day. That's the good feeling that you feel here at Dreamforce. It's that people are committed to giving back.
Well, you all started from the beginning. I guess if companies are further along in their journey, is it too late for them to start, or do we need something to change? Does it have to come from Wall Street, like change their expectations of what they need from a company or expect from a company, or does the SEC need to come and step in? And I mean, how do we come up with a new form of capitalism? How do we actually change that paradigm?
Well, it's never too late. And I think that this is about keeping everything we had, have a shareholder return. Salesforce has had a great shareholder return, 3,500% since we went public in 2004. But we've also had a great stakeholder return. That is, we're able to give back. I mean, we're even a net zero company because the planet is a stakeholder. We're trying to take care of the planet also. You can have a great shareholder return and a great stakeholder return, and if you manage that way, you're going to have a better company, stronger values. And Peter Drucker, a really great management professor, said it well. Your strategy, well, it's going to get eaten by your culture for breakfast. The culture is the values. That's the heart and soul of the company. That's where you want to nurture. That's where this stakeholder idea comes in.
Yeah, and guys, that 1-1-1 model that he was talking about, the percentages going towards volunteerism, resources for nonprofits, those sorts of things. A lot of companies have actually signed up for that, and collectively, they've basically contributed $1 billion to philanthropy because of that. Julie, Adam, back to you guys.
Thank you, Julia. Coming up, SpaceX calls it the Starship, but the prototype spacecraft suffered a setback during tests yesterday. We're going to be right back. Breaking news out of Israel. The Associated Press reports Prime Minister Benjamin Netanyahu has been indicted on charges of fraud, breach of trust, and bribery. We're going to keep an eye on this. We're going to bring you the details as they come in. WeWork is laying off 2,400 employees. The office-sharing company says it's an effort to create a more efficient organization. Those layoffs, the cuts, represent 19% of its total workforce. Impeachment hearings resumed on Capitol Hill with testimony from NSC Russia expert Fiona Hill. She urged Republicans in Congress to stop promoting the, quote, fictional narrative that Ukraine meddled in the 2016 presidential election. She says that false storyline promotes Russian interests. The SpaceX Starship Mk1 literally blew its top yesterday during a test to see if the spacecraft can endure extreme cold temperatures. Elon Musk tweeted, "The craft is a manufacturing pathfinder and that the actual flight design for a spacecraft that will carry astronauts is quite different." We'll be right back. Okay, word on the street. We're going to check in with the panelists and find out what stories they're watching. Dan, you're watching PayPal, the acquisition of the platform Honey.
Honey.
$4 billion.
$4 billion for Honey. Sweet deal. Got to make that pun. I just can't believe the price here. $4 billion for Honey. It's a Chrome plugin. It helps you get discounts and get coupons when you shop online. It's a good idea. It has certainly advertised aggressively. I see the ads all the time. Although, to give you a sense of the fact of just how small it is, I mean, earlier we discussed this on our show Wi-Fi AM, and Brian Chung was saying he had never heard of the company.
Yeah, I never heard of it.
You had never, Julie, you had never heard of the company. So I had heard of it. I wasn't a user, although every time I saw the ads, I thought, ooh, time to do this. Why wouldn't I do this? It's a no-brainer. It's a Chrome plugin. That was sort of the pitch was, why not? It's free to put it onto your Chrome browser. Do it, and then you'll save some money. I never did it, but I always made a mental note to do it. But $4 billion. Now the answer has been, A, they have 17 million active users. 17 million, that is a large number. Is it 4 billion large? B, PayPal here is seeing all the ways that they can integrate Honey into their existing ecosystem. I imagine some kind of integration with Venmo. Maybe they even get rid of the Honey branding and they just rebrand the plugin to be called Venmo and they take the users. I don't know what they'll do. But 4 billion still, it seems to be a huge number, huge. It's bigger than PayPal's purchase of Braintree, which is how they got Venmo years ago. Bigger than PayPal's purchase of iZettle a year ago, might have been 2 years ago, which is basically the PayPal of the UK. Biggest acquisition PayPal has ever made for Honey, something Julie Hyman has never heard of. Wow.
And you know me, I'm in the know. All right, let's talk about the trade war with David, because I know you have been continuing to watch this. And the prospects, I don't know. From where I sit, they're not looking great.
Our view is trade relations between the United States and China are permanently damaged, and that is a case for an entire generation. So, we went through hope, it's a short-term problem. It morphed into this, and this is a continuum. And now what do you see? You start to see the adjustments. The adjustments are going to come two ways. The tariff, the impediment, manufacturing reductions around the world, the economic piece, followed by the reallocation and relocation in the world. India launches a proposal and says, hey, come here. You don't have to be in China. Somebody else, I have clients who have moved facilities to other countries. They're making capital allocation decisions. That's a gradual process. We're going to see it. It's going to expand. Very substantially.
When you say a permanent situation, 20 years, a generational period.
Generational, correct.
Not necessarily a negative, though, if I'm hearing you, because, you know, spreading some of the supply chains out to places like India actually keeps a communist dictatorship, essentially, from growing in its influence, doesn't it?
So you have a positive, if that's your goal, and you have a negative. You hurt the soybean farmer, and you deforest the Amazon, and Chinese capital now buys Brazilian soybeans. That's a trade-off. We have nothing to say about this policy, but we have the policy. If you're in the money management business, whether you like the policy or not, and I don't, I've been on this show as a critic of Navarro's attempts, you have to accept it, and you have to say things are going to change. I think we're going to start to see an upswing in emerging markets and international markets, not U.S. lead. That's a big change after a decade of the other way. And the trade war effects may exacerbate that. Do I have any time left?
Do we have any
20
time
seconds?
left? Yes.
For it. May I compliment this show and you for what you did today, because you demonstrated you can take a Republican and a Democrat, find a way in a subject they can agree on, and have a civil discussion about policy in the United States. And there are so few places viewers can see it. And so you're to be applauded for that interview of two senators, as my opinion anyway. Bravo.
We like your opinion. Thank you.
Thank you very much, David Kotak. It's lovely to see you, even without the compliments. We like having you here. David Kotak of Cumberland Advisors. You should see Adam and I off camera. We fight like cats and dogs. No, I'm just kidding. Thanks, David. Dan Roberts is going to stick around. And coming up, down goes the department store, why Macy's is looking at a bleak future ahead of the holiday shopping season. Plus, before we go to break, take a look at some of the biggest losers in the Dow today. We've got Procter & Gamble helping lead the way down.
picking up steam at noon here in New York City. We are 2.5 hours into the trading day. Stocks are trading down. We're going to hit that, obviously. Retail woes. Macy's shares are falling after the company's same-store sales fall for the first time in 2 years. Actually, they were up earlier this morning. Despite that, we're breaking down the numbers and what to expect from other big names after the bell today. From no fees to big bucks, Charles Schwab strikes a massive deal to acquire TD Ameritrade. We're waiting for confirmation on that. And Democrats square off to take on President Trump. The top moments from last night's Democratic debate are just ahead. Welcome back to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks so much for being with us. Our top story today has to do with retail. Major companies reporting earnings today. Macy's missed revenue estimates in the third quarter and reported its first same-store sales decline in 2 years. The department store chain also slashed its full-year guidance. So I want to introduce this hour's panel to discuss. Yahoo Finance's Dan Roberts still with us, and also joining us, Heritage Capital President Paul Schatz, as well as OCC Strategy Consultants partner Coy Noakes. Thank you for being here. Coy, I want to start with you because you are focused on retail. And everybody was sort of braced for bad Macy's numbers, right, and yet they somehow came out and did worse even than the expectations here. What can Macy's do at this point to turn around the ship?
You know, Macy's, I mean, it's been a painful time, right? There's all the store closures and they've had quite a bit of struggle. And, you know, I think they have to look at what the actual store proposition is. We look a lot at, you know, kind of retail and what it takes to win. And right now there's some winners and some losers. And the winners are really executing a really strong multi-channel strategy. They have a strong consumer proposition, so consumers know why they're going there. And they're also improving their operations because it's expensive to deliver a multi-channel journey. And I think, you know, you've got to look at Macy's and think exactly what are they doing against each one of those things and how is that working?
Well, when you bring up the winners, let's talk about Target, for instance, with the fact that you can same-day order and then go pick it up. That is just not a model that Macy's can do, or is it?
I think it is. I mean, now, the thing that kind of Target and Walmart have is they're moving big into food, which has a higher rate of footfall. You know, you need more frequency of purchase. So that same day pickup is really important. It's less important in non-perishables or, you know, in kind of the space that Macy's operates. But I think there are some things they can do there. And I know they have been trying. They've been trying for quite some time, but I guess it's, you know, it's not getting traction.
When we talk about the winners and losers, it seems to me like the middle is what's getting squeezed the most. I mean, there's some premium, high-end brands that are still doing well, some luxe names. And then on the lower end, Target has been a huge winner. But in the middle, you sort of have like Urban Outfitters, terrible. Kohl's earnings were terrible. Yeah. And now Macy's. Is that the right way to think of this? That the middle of the road, and in some ways, it kind of mirrors what's happening with socioeconomic demographics in America.
Yeah. And I think that's a very valid point, is how can those retailers survive? Because I do think there has been some talk that, you know, Target is actually taking share away from Kohl's. You know, there is share gain is going in different directions versus what we would expect. And I think you have to really think about what is your proposition in that space and is it viable right there in the middle of the road?
I think as an investor, I keep waiting for Macy's to have that kitchen sink quarter where they throw everything in, and yet they keep ratcheting down expectations quarter by quarter by quarter, and it's still not enough. You have the feeling that, one, the dividend cut's coming because anything yielding 10% is clearly not sustainable. And two, I watch the stock trade. It doesn't feel like you've had all the bulls throw the towel in yet. I mean, to me, it feels like, and maybe I'm getting a little draconian here, but it feels like a single-digit handle is on the way for the stock before it could have some kind of meaningful run.
I mean, I think they're right. I think there is probably something to do with, you know, how investors look at it versus how the business is operating. And there is some, you know, there's not always completely aligned in terms of how that works.
Is the department store model, as we know it, dead? Because if you look at the last few years, you see it littered with the corpses or near corpses. Sears, JCPenney, now Macy's is getting there, right? And we had an analyst say to us yesterday, Target is the last department store standing, but it's not a department. We don't think of it as a department store. So is that department store model just not relevant anymore? Is there anyone, is Nordstrom doing it right? Is anyone actually doing it right?
Well, Nordstrom will be interesting. You know, when they report today, I think everybody will be watching to see how that new Manhattan store is performing, and you know how they're performing overall. The Barney's news, again, we go back to the overall department stores. People are struggling at all levels. I don't think it's dead, but I do think they are saddled with so much real estate, and it is very expensive to remodel all of that. And a lot of them are in poor performing locations anyway.
And they overbuilt.
And they
a lot
overbuilt.
of these places, the reason they're closing, and they opened too many in the first place.
Carl Icahn's right there on that trade.
Although it hasn't worked so far.
So that is certainly a long runway, a long-term trade. It's not going to be decided in 2020 even.
Yeah, well, we'll see what happens with all these others. Thank you so much, Clay Noakes of OC&C Strategy Consultants. Appreciate it.
All right, other things are happening in the world, and that includes BJ's Wholesale Club under pressure after a mixed quarter. Inez Ferre has details for us from the floor of the New York Stock Exchange.
Yeah, Adam, BJ's third quarter profit came in as a beat, but the revenue came in light. Same-store sales increased by 1.1%, but that was also shy of what the street was expecting. The company lowered its same-store sales guidance for the year and also narrowed its profit guidance for the year as well. And I want to show you a trending ticker on Yahoo Finance. It's called Baizun, and this is a Chinese e-commerce solutions company. It trades on the NASDAQ under the ticker symbol BZUN. It's a company that does everything from set up a storefront to manage inventory for some of their past clients that have included Nike, GoPro, Starbucks, some big names here. The stock is under pressure today, down around 17% after a mixed quarter. Their revenue came in light. Adjusted earnings came in roughly in line with expectations, but their fourth quarter revenue guidance came in weak. Adam, Julie?
Thanks, Inez. Well, the brokerage wars are heating up. Charles Schwab buying TD Ameritrade, at least according to some reports, for $26 billion. 25 is where some are putting the number. We don't have confirmation from the companies yet, but the stocks are certainly trading higher. And joining us now to discuss is Investopedia editor-in-chief Caleb Silver. Caleb, this has really been a fascinating story to cover for years. I mean, yes, they just slashed the fees recently, but there's been talk about matchups before.
And the consolidation is inevitable, especially when Schwab went to zero in early October. All the other major brokers followed. We were going to see some shakeup here in the industry, and I spoke to Chuck Schwab a few weeks ago. I think a lot of people did, and he said consolidation is inevitable. Probably at the time they were preparing the war chest for this purchase of TDA.
Oh yeah, telegraphing the merge. Caleb, I've been interested in what this means for Robinhood, a company that we've discussed, because the pitch there was zero fees. Now the big dogs come in and do the same. I mean, so what's the value proposition of a Robinhood?
Right, so Robinhood was good at acquiring a lot of customers, but the problem was customers were not trading. They need trading activity, even though they do it for free. They do make money on the flow to make money. So everybody's wondering what's going to happen to Robinhood. The bigger question is what's going to happen to E-Trade right now. E-Trade stock is down 7 or 8% today because they were seen as a potential candidate for Schwab.
So do we see more consolidated Interactive Brokers? They beat Schwab and TD Ameritrade to the no-fee commissions.
Sure.
Do we see all of these people now, marrying to grow scale?
Potentially, because Interactive Brokers does have an active trading audience that's very active, but they also have Interactive for advisors. And the game here with Schwab and TDA was that this is about individual customers, but it's as much about RIAs, right? Registered investment advisors, because they want us as customers, but they want RIAs because they have 50 of us. So TDA has a big platform there. Schwab has a big platform there. And all of a sudden, if these two combine, you have one of the biggest players serving advisors and retail clients.
So as an advisor, I've always been very leery of Schwab because while they service advisors and my clients, they also compete against us, both passively and actively. So I'd be really leery. I know they have a huge advisory business, but I'd be really leery of, now you've got Schwab and TD together, you've got an enormous gorilla on the street competing against Fidelity. The rest are kind of at the margin, but as an advisor, I would be even more concerned that Schwab is going to try to eat my lunch.
I've heard advisors ask Schwab that question at their events and say, it seems like we're competing for the same business. Of course, the company promises that's not what they're trying to do. There's plenty to go around for everybody else, but it is an interesting point and one we need to watch. The fact is, scale matters here, especially when you're not making money off of commissions.
The other question is, and David Kotak of Cumberland Advisors posed this last hour, is free really free? Right? Is Facebook really free? What are they, so when you're looking at this from the no-fee trade situation, what are they getting from you if they're not getting that fee?
Right. We say when somebody says it's free, that means you are the customer. And that's certainly the case with social media networks. That's certainly the case in a Robinhood. They're paying for order flow. They're also paying for sweeping the cash in your account into higher interest money market funds. So Schwab does that a little bit better than others. There's a big price war going on right now of who does the best with your cash, since commissions are out the window, and that's where we're going to see this.
What do you need to be aware of as a customer then? Either whether these guys get together or not, what do you have to do to make sure that you're getting the best rate on your money?
Right. You want the best rate for your money that's not invested in equities or other securities, and that means what happens to your cash, what do they do with it in the sweep accounts, but you also want to see where the other fees are coming in. Chuck Schwab said, we have other ways of making money, and indeed they do. They did $10 billion in revenue last year.
Right. One of the things they talked about too, though, because we had Charles Schwab on the program to discuss, TD Ameritrade making sense. He was saying because of technology that's moved everything online, making it popular. Here's what he had to tell us just a few weeks ago.
In our case, our cost of doing business has gone down dramatically over the last 20 years because of technology. We're down to 15 basis points. We're probably the lowest cost provider of stocks and information and things of that nature, which puts us very competitive, being a low-cost provider. So technology, thank you very much. We would like more of it.
But that's an efficiency. I mean, there are fees, as you were just discussing, that maybe the average retail investor isn't looking for instance, the money market accounts.
Right, the money market accounts, the advisory fees, mutual fund fees. There's plenty of ways for these brokers to make money. Schwab is a bank.
And stock lending, that's an enormous profit center on the street. The average retail person has no idea that their stocks are lent out for institutions to short them. So there's all kinds of ways they make money.
Right, and Schwab is a bank, let's not forget that, and it's big, and if it brings in TDA, it suddenly becomes a $5-6 trillion bank. It can compete now with the BlackRocks of the world, the Fidelities of the world.
Yeah, Caleb, thanks for breaking this down for us. Caleb Silver of Investopedia,
Thank you.
Appreciate it.
The fifth Democratic debate wrapped up last night with 10 Democrats taking the stage in Atlanta in what was a mild debate. The candidates united against President Trump, and foreign policy also came up. We want to go to Washington and Jessica Smith. She has highlights for us from the night.
Yeah, Adam, it was a little more mild, a little more mellow than we've seen in the past, but I think the candidates covered a wider variety of topics in last night's debate. We didn't see them really focus on healthcare for a long, extended period of time like we've seen in the past. They talked about a variety of issues like housing, race, and paid family leave. They also talked about foreign policy, how they would handle Russia, North Korea, Saudi Arabia, and of course, the trade war with China. Let's watch.
And when it comes to China, we need someone that sees the long term, like I do, just like the Chinese do, because we have a president that literally makes decisions based on his next tweet.
The very time that China is breaking international rules, is practicing unfair practices, stealing technology, forcing technology transfer, and violating human rights, this nation is pulling away from critical allies.
We shouldn't have to pay farmers to take the edge off of a trade war that shouldn't have been started in the first place.
Another difference we saw last night was the candidates did not necessarily pile on one specific frontrunner. In the past, we've seen that happen with Senator Warren or former Vice President Joe Biden. And looking ahead to December, the next debate, so far 6 candidates have made the stage. 2 are close. They've fulfilled one of the 2 requirements. So we'll be watching to see if anyone gets a boost in donations or in the poll numbers after their performance last night. Adam and Julie.
Jess, we appreciate that. Paul, I want to throw this to you. I mean, we are still, Iowa's coming in less than 80 days, but the election itself is still a year out, just under a year. Other than the people who watch different echo chambers and are polarized already, who's paying attention that's going to make a difference on this?
Clearly, no one in my business is positioning portfolios right now for what may or may not happen in November of 2020. Look, we have no idea who's actually going to be on either ticket for sure come November 2020. Clearly, impeachment's still a possibility, although remote as it may be. And then on the Democratic side, look, Bloomberg may or may not be in. We don't know. Right. The top of their ticket keeps rotating, and it's going to keep rotating all the way into probably end of February. So now, I mean, no one's really putting their money behind any particular horse yet or positioning. Stocks are trading well. The economy is fine for now. It makes it harder for the Dems to run against the number one issue, which is the economy, but they're certainly having a lot of fun taking jabs at President Trump.
I mean, we have seen some sector moves based on things that the candidates have said, particularly in healthcare. I feel like there's a lot of sort of nervousness around that sector, right?
So intuitively, a year before every presidential election, healthcare is right in the crosshairs. Everybody wants to demonize healthcare. We're all paying too much money. You know the drill. Interestingly, the XLV, the Spider Healthcare ETF, is trading at and close to new highs. So you're not seeing the typical behavior. Right now, if you said handicap the election based on how the market's trading, the market's telling you that it believes that Trump's going to get reelected. It does not give Bernie or Liz any chance right now.
So at what point does an investor look at their portfolio and say, okay, I need to reposition pending an outcome that I can't predict until the day after the election in November of next year?
Here's what's not going to happen. We're not going to go to bed on election night in November 2020 with stocks at an all-time high, and let's say Bernie Sanders wins, wake up and the market's down 25%. It's not going to happen. Nothing even close.
Thank you for saying that, by the way.
Right. So I've heard
there are some money managers and investors out there who are saying the sky is going to fall if one of these Democrats.
It's a ludicrous and irresponsible proposition. If the Democrats or if the far left is going to win, you're going to see stocks peak in the first half of 2020 and then slowly grind lower into the election. That'll be a huge clue that Trump's in trouble. You also watch, as you mentioned, healthcare. If the far left has a candidate and healthcare begins to unravel into the election, clearly people are giving a lot of credibility to that happening. But for right now, the markets are not going to trade tick for tick on what happens at a debate last night or what somebody tweets.
Just as they haven't been recently anyway in the last 6 months. Right. I mean, the impeachment inquiry hasn't had that big of an impact on stocks, or really an impact at all. So.
And it didn't with Clinton either.
Because the base case is that there won't actually be removal, as you said.
And
I also think they don't care. Yeah.
McConnell's going to keep all those candidates in Washington for 2 months instead of campaigning.
Yeah. All right. Well, coming up, cracking down on political ads, what Google's big decision means for the 2020 race. Plus, take a look at some of today's top trending tickers on Yahoo Finance. We've got Baozun, which is a Chinese e-commerce company, falling after earnings.
Welcome back to On the Move. I'm Jared Blickery. We got the Dow down just a little bit, off of 41 points, about 15 basis points. S&P 500 off 0.5%. The Nasdaq is down the most. It's off about 0.4%. Let's take a look at the S&P 500 and see what the price action over the last hour has been. In fact, this is the entire day. We can see made these session lows down here and just edging higher, but it's another low volatility day for the indices. Yesterday it seemed like the sky was falling down if you follow FinTwit, but at its nadir, S&P 500 was only down 92 basis points, not even 1%. So let's take a look at our favorite 3-month chart of the S&P 500. Not going to go over everything again, but the big level to watch if we do have a breakdown is the prior highs, and those come in at 3,023 to 3,032. A lot of price action support in there. Then we're going to take a look at the 10-year T-note yield, and we can see it's up again today. It's up today, just at 3 basis points, but it did break down through this trend channel yesterday. Gives me some concern about the rotation that we've been seeing lately. But I'll tell you what, some of the leaders that we're looking at here have done pretty well no matter what. Here we see value up again today, and we also see high yield up. The transports are edging higher, but not by a lot. They are outperforming the market, which is down. And we're going to take a brief look at the NASDAQ 100, a couple stocks standing out. We got Tesla, that is up 1.9%. That stock has doubled now since its low low about 4 or 5 months ago. To the downside, we had some downgrades on a couple of chip stocks in KLA-Tencor. That is leading the way down at 8%. We will be right back.
Stocks falling for a third straight day as investors wrangle with new reports about the trade war between the United States and China. Edward Jones investment strategist Kate Warren joins us now from St. Louis. And Kate, so trade worries have crept back in. What do we expect in regards to volatility? Because we keep hearing from different guests that this was already priced in and that the economy is strong. Don't worry?
Well, I would say overall, the trade deal, even the small deal that's phase one, isn't really priced in at the moment because investors still don't know the terms and they obviously don't know the timing. I think day to day, stocks are moving up and down, up whenever we've got better news on progress, and down yesterday, today, when there's more concern about whether a deal will get signed between now and the end of the year. I would say also related to that is there's still the possibility of higher tariffs in mid-December. So there's the chance that trade really tends to affect the markets longer term if those tariffs go into effect. In addition, though, I would say the economy is not strong. It's slowing. It's modest. It's been better than people have expected, and that's good news for stocks. So keep in mind that with the day-to-day volatility from trade, you're also likely to continue to see the trend be higher, supported by better earnings and better economic growth. But it's not strong. It's just better than what people are expecting.
So, Kate, what do you do with all of that information as an investor? We've been asking people, how do you position yourself with regards to the trade war? Do you put on some kind of hedge in the event that there is no deal, or that in the event that the tariffs do go into effect?
No, I don't think so. I think you stay invested in equities and realize that basically any bad news out of trade, as we've seen through 2019, every time there was a glitch along the way, investors should be expecting more of those and realize that it's really a source of short-term volatility, that both China and the U.S. have an incentive to reach some kind of deal, even if it's a mini deal or a phase one, and that will be a positive catalyst, not just for U.S. stocks or Chinese stocks, but it'll also be a positive catalyst for the rest of the world, which is way more dependent on trade than the U.S. So I think you stay invested. You don't put on a hedge, because if you're doing that, you're more focused on the downside and you're likely to miss some of the upside, which is still going to be there as other trends are moving in the right direction.
So, Kate, with all that and your question about the economy's weakening, being somewhat soft but better than expected, and volatility so low, what would change your opinion on staying the course? What event would tell you, listen, we should take some stuff off the table or we should reallocate?
Well, I think investors always need to have an appropriate mix of stocks and bonds. So hopefully everyone watching has that right mix so that they still have some fixed income, some bonds in their portfolio. But the key event, in my view, would be a surprise, something that really changes the dynamic. And that would be something that has to change our assessment of the economy continuing to grow, of earnings continuing to grow, or the international situation gets a lot worse, because right now it looks like international growth is bumping along just above zero, but we've seen some positive signs. So you really need something that changes that dynamic to say there's a bigger drawdown ahead, not just the normal 10% correction, which we do expect. We expect the higher volatility, but not anything worse than that.
Very quickly, Kate, when you bring up investors who want to look outside the United States, you had mentioned that economic growth globally seems to have stabilized. Would the raising of the tariffs in the United States be the kind of event that would upset that and we would see a downturn?
No, because overall what we've seen is the tariffs that have gone into effect so far have slowed growth, but they haven't been the kind of big event that I would be talking about. So think about that as more sand in the gears, that yes, we see higher tariffs, it slows global growth, it's not good news, but it's not something that is really a bigger event that really changes the outlook for most countries and companies. I think that overall, we hope that there won't be more tariffs. We hope that some of the tariffs are rolled back and that the trade deal progresses. But at the same time, a little more of this, or even bigger ones that affect the U.S. consumer, are likely to be things that affect growth a little bit, not a lot, and that's okay for investors.
Kate Warren is an investment strategist at Edward Jones, and it was good to see you.
Thank you.
Facebook is discussing some changes to its political ad policy. That's according to the Wall Street Journal. This comes after Google announced it is going to restrict political ad targeting on its platforms starting next month. Advertisers will no longer be able to target ads based on users' browsing or search history. And Yahoo Finance's Dan Howley joins us now with the details. And not just those details. I mean, Google is pretty much restricting the targeting to a pretty small set of criteria, right?
Yeah, so now it's going to be just on age, gender, and then general zip code. So they don't want to be able to micro-target certain communities. And that's kind of a way to prevent things like the idea that maybe an election is happening on the wrong day of the week, or that, a certain candidate is against a particular group in a certain region. And this all goes back to what happened with Facebook and Google. We all talk about how it was Facebook's issue, and they did have a lot, but Google also had issues on YouTube with the 2016 Russian meddling. So this is a means for them to fight back against that.
I think Google's also said it will pull down political ads that have false statements in them.
There's a caveat to that, though.
Okay.
So they are going out and saying, look, we are going to take down very obviously false claims. But prior to saying that, they also say political discussions are nuanced and it's hard to claim everything is wrong.
The reason I brought that up is Facebook said they would not. So what does Facebook now do? What's their next move in all of this?
So now they have to genuinely look and determine if they are willing to swallow their pride and say, look, we will go back and look at these ads, and if they are demonstrably false, then not allow them to be sold. And my argument against Facebook's issues in the first place with this is you don't have to let them sell ads to do this. They can make false claims, the politicians, on their own web pages, and that's fine. But Facebook doesn't have to take money for it. And so that's kind of an easier way for them to get out of it. But they've said on multiple times that they don't make enough money off of political ads to make it worth this kind of debate, and yet they still make money off political ads.
And this slope is among the most slippery. I would argue, are any political ads 100% factual and true? They all,
so Twitter's just said we're not going to do them at all.
Right,
I mean, that's another approach, right?
But that was a little, I do think the reaction to that was a little over positive in the sense of, wow, what a great move. Well, a supporter of Andrew Yang, and they do, can still tweet something that it might as well be an ad. I mean, I see it in my feed because Yang retweeted it, and it's got a clip of him talking at a debate, and it's praising him, and it's saying, here's what's horrible about Warren and Sanders and why Yang is the only option. It might as well be an ad. Now, you didn't pay to place that, and that's an organic Twitter user. But my point being, if you think you're not going to see political stuff on Twitter anymore that is sometimes misleading.
But the targeting is different, though, right? I mean, you have to follow that person in order to see that tweet. So that's more self-selecting than when someone is selecting you based upon your particular demographic.
I get served Liz Warren ads. My feed's full of them every day.
So you're saying that the demographic targeting is not very good.
They got the wrong guy.
It's funny because you look, Google gives you the option to look at what they believe that you are as far as their ads go. And sometimes it's just wacky how off it can be. So you're going to get served up ads that it thinks are relevant to you but aren't necessarily. But I think for Google, this is a good way for them to hedge their bets against being pulled into the conversation with Facebook as far as the upcoming election goes and any kind of issues that might relate to fake news or fake information in general being sold through ads.
Dan Halley, thank you. Coming up, light 'em up. Lawmakers take a big step toward legalizing weed, at least at the federal level. Plus, take a look at some of today's winners on Wall Street. You can exhale.
It's just past 12:30 p.m. here in New York City. 3 hours into the trading day, stocks have been drifting lower throughout the session, although up off the lows. Let's take a look at gold prices as well here today. We are seeing gold also drifting lower by about 0.5%, $14.66 the ounce. Far from home, why more people are looking outside their own metro areas to buy their next house. Chaos in the Motor City. The head of the UAW steps down on the same day General Motors accuses Fiat Chrysler of bribing officials. And hailing ads. Your next Uber ride could be full of commercials. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Good to have you here. Let's talk about the housing market. New numbers out on the housing market show that existing home sales jumped in October. The National Association of Realtors reports sales were up 1.9% from October to September, compared to September. Mortgage rates also out today. The 30-year fixed-rate mortgage, it ticked lower, 3.66%. Now, this comes on the heels of good news about home construction. George Ratou, senior economist at Realtor.com, joins us now from Washington, going to help us understand all of this. And George, promising signs out this week, but it still seems as if a lot of people are priced out of housing, especially in popular markets on the West Coast and here on the East Coast.
Absolutely. What we saw this morning, obviously, was the good news is there's still buyer demand. Obviously, for buyers, they're still out in the market. This is the fall season, which traditionally is slower. But what we're seeing is activity remains solid. And in fact, based on data, we look at Realtor.com, we're seeing inventory decline. In October, it was down 7%. In fact, it accelerated from the prior 2 months on the downward trend, with homes under $200,000 in price seeing a 15% decline. So really, the trend for this year seems to be a move toward affordability, where for a lot of buyers, to your point, locked out of gateway cities in big expensive metros on the coast, they are looking in the Midwest, they're looking in the South, two of the areas which drove existing home sales this past month.
At the same time, George, there is still a lot of concern about supply being where it needs to be, where people already live, right? And affordability. That was something that the candidates discussed last night in the debates. Elizabeth Warren, for example, brought up the supply issue. I want to play what she had to say.
Our housing problem in America is a problem on the supply side, and that means that the federal government stopped building new housing a long time ago, affordable housing. Also, private developers, they've gone up to mansions. They're not building the little 2-bedroom, 1-bath house that I grew up in, garage converted to be a bedroom for my 3 brothers. So I've got a plan for 3.2 million new housing units in America. Those are housing units for working families, for the working poor, for the poor.
So do you think there needs to be some regulatory changes in order to improve supply, improve housing stock in some of these areas?
So in terms of market dynamics, what we're seeing is indeed there is an affordable challenge, in part because builders have focused on the high end of the market. However, what we've seen from builders recently is an acknowledgement of that and a move toward the mid-tier. I think that the government can certainly play a role. However, given the size and the magnitude of the undersupply and the fact that really real estate zoning and regulations are decided at the local level, I think a lot of local municipalities are stepping up to the plate and addressing that. So having a partnership between the federal government and local municipalities would probably go a long way towards addressing that.
I'm just going to ask you, because Liz Warren is talking about her plan, and her plan includes federal intervention, federal oversight. However, as someone who sits on a local town planning and zoning, I can tell you that it's clearly a local problem. Should the federal government be involved in this at all? And if so, what should they be doing in the metro areas?
From my perspective, the market solutions tend to be much more palatable generally and much more efficient in the long term. So from that perspective, I see a partnership between the federal government at some point and local developers and zoning commissions really playing an active role, in part because they are the ones who are in the market daily, know the needs of the community much better than sort of having a blanket approach.
All right, George Ratou is the senior economist at Realtor.com. We appreciate your being here on The Move.
Certainly.
Coming up, taking on the big names, we'll talk to the CFO of First Look Media as the company launches a new streaming service today. And as we go to break, Yahoo Finance's editor-in-chief, Andy Serwer, spoke with Ford Foundation president Darren Walker about the importance of keeping the American dream alive.
They're invisible often to elites. They're invisible often to people in our milieu in a city like New York. But they have a life, and they have a narrative, and they have aspirations and dreams. And my concern is that their dreams and aspirations are being asphyxiated by a kind of pernicious inequality that makes it impossible for them to believe in the American dream. And when the American dream dies, America dies.
got some trending tickers for you from yahoofinance.com. Let's start with Baozun. This is a Chinese e-commerce company. It did report that revenue was up by 35%, but that was actually a smaller gain than some analysts have been anticipating. Earnings per share in line with estimates. The company talked about not having a renewal of a contract, a services agreement with an electronics manufacturer, but said despite that, gross merchandise volume rose 43%, not helping the stock today, however. Also, we're looking at Twitter in today's session. Twitter shares up about 3%. Couldn't find any news except for a policy change or a use change. Users are now going to be able to hide certain replies to their tweets. So more management over the conversations and mentions that are in response to tweets. Those shares up 3% in today's session. And then if I can find it here all the way down, we are looking for Uber. Not seeing Uber on this list. So I'm going to go back up to Lyft, which is also trading higher today. The rideshare company is doing well. It's up 5%. No news on Lyft specifically. There was some news on Uber, however. Dara Khosrowshahi, the CEO, bought about $6.7 million worth of shares in the company. That's about 250,000 shares. So Uber shares have been trading higher. It looks like Lyft is getting caught up in that updraft as well. And if you're following today's trending tickers, make sure you're watching the ticker. It's right here at 2 p.m. on Yahoo Finance.
Competition continues to grow in the world of streaming. Disney Plus debuted last week, and another subscription platform, Topic, joins the streaming universe today. First Look Media owns Topic, and CFO Drew Wilson joins us to talk about what subscribers can look forward to with this brand. And there's a great deal of competition out there. So what are we getting from Topic that we don't already get from, say, a Netflix or a Disney Plus?
Sure. So we have spent the last 3 years cultivating and speaking to our audiences through our journalism and through our studio successfully. And now we're doing the next step forward in our progress of our business model, which is to offer a premium channel to these, what I would call socially conscious, world-minded people who like the kind of content that we've been doing and now able to get it both for dramas, comedies, documentaries, shorts, all of those types of contents to them through this service.
So Drew, this was built in-house at First Look?
100%.
So we know First Look as Pierre Omidyar's thing. We know that The Intercept is one of the news sites in there. So are you guys going to be incorporating content? Should we expect to see stuff from the news sites that First Look Media owns on Topic? You know, news programs with some of those reporters. How will that work?
So there's two ways that we leverage that relationship of the reporting. One is those kind of stories create formats for which we can then produce into television and film. So from that perspective, we've had that and we will continue to have that operation for us. Secondly, what will happen is we are able to produce for ourselves stories that are in the formats of shows, talk shows, and deep issues around subject matters that we focus on across the company. That is available to us as original productions that we'll make as well. Separately.
Now, price point wise, I believe you guys are at what, $5.99 a month?
$5.99 a month.
So a little bit more than Apple, a little bit less than Disney. And I think Topic is, just in terms of name, not as well, you know, it's not a known brand at this point. So besides the price point, how are you getting the word out? How are you getting people to sign up for this thing?
So our model is about a niche channel. We're a niche channel, and the behaviors of niche audiences are very different from the aggregators. the big channels. And so we know who our audience are, and we've spent the last 3 years getting to know our audience, and they like the content we make, and we've given them very high-end, premium, award-winning journalism. We know what they want, and they're already engaged with us for the last 3 years. So this for us is just providing the next level of access to our content to them. So in a niche format, unlike the big ones, the criteria to make it to
profitability
and scale is not the same. We don't need to be at 80 million households.
What would that number be? Because you do have essentially the not-for-profit, the news sites. Then you've got the for-profit entertainment sites. And when I ask you the number, the magic number, if you can share it with us, it's because there's this ridiculous bubble that people are writing about of hundreds of millions, billions of dollars being spent to buy content. I can't imagine you're about to jump into that game.
No, that is not our lane. We're programming. Another thing I would add is, we're programming specifically to our niche audience. We're not programming as a general entertainment site. That's not what this is. And so for us to get to profitability is a far less number. It's less than 500,000 subs. It's a tiny amount of subs that is required to make this engine run quite profitably. Now, that is the behavior of people who subscribe to niche channels is so different in that when you think about channels like WWE, Crunchyroll, Acorn TV, which I used to work at, the ability to super serve this distinct niche audience. And to be clear, niche is not small, it's distinct, right? And so we know who those people are, and they're already engaging with us from social all the way to our direct lines, and we've been engaging with them for 3 years. So we're confident we can hit that group.
Drew, I just want to push you a little further on the idea of competing, and it's smart, as you say, we're not trying to be in that lane, we're not competing with the big guys, although at the same time, even if you're niche and you're saying we specialize, we're distinct, you are competing for share of wallet, right? And there's 100%. So many of these things now. You know, last week I had the chance to interview the CEO of Discovery,
yes.
David Zaslav, and they own all these channels and Food Network now and THC. And he was saying that, TLC rather, he was saying that he predicts a lot of carnage, that was the word he used, in the next few years because everyone is launching a streaming service. There's no way they're all going to thrive and survive. So is that something you worry about? At some point we'll hit a time where people look at their plate of all their OTT subs and they say, I'm just paying for too many of these things.
I think from our view is that there will be a category of large players who will win, the Disney Pluses, the Apples, the Amazons, and the Netflixes at some level. And then there's going to be this category of niche players who are the consumers making a different decision around them as why they're subscribing to them. That group, those two groups can exist very nicely together. The guys in the middle who are non-distinguished channels who are making premium content, but they are a cable channel who thought they had a relationship directly with a consumer, but now realize it's a much harder proposition, will struggle. We'll struggle because that is a commodity decision between that and the large aggregators. What we know about niche players and niche consumers around is that when they decide whether to continue to pay for our channel or not, they're making that decision in the wallet against all household costs because it's a passion for them. It's not just a source of entertainment. It's giving them something that's super serving, something that's passionate for
Well,
them.
a great many people already know The Intercept and some of the product. The platform is Topic. We wish you the best. It was good to have you here, Drew Wilson. Thank you very much.
Thank you so much.
Well, United Auto Workers President Gary Jones is stepping down. This comes one day after General Motors filed a lawsuit accusing Fiat Chrysler of bribing union workers. Yahoo Finance's Pras Subramanian joins us now to talk more about this. Pras, this seems like a pretty serious allegation here that is coming from this lawsuit and now directly or indirectly leading to Gary Jones stepping down.
Yeah, I mean, Gary Jones having problems with the feds. I mean, there's the government action and there's this unprecedented lawsuit, GM suing FCA, basically alleging that they conspired with the UAW leadership to bring down costs so they could compete against GM on a better plane, and then possibly make the two companies merge because it would hurt GM so much. I mean, it's just sort of, I've never seen this before. I don't know about you.
I have not read the complaint or the civil suit, but they actually mention Marchione, who has left this world, and a hug that he gave the UAW leader as some kind of evidence of some of this. I mean, it just, wow.
I mean, it's so strange. I mean, what's not at doubt is the fact that about $1.5 million were given to UAW leadership to sort of, allow second-tier wages for people, basically allowing younger workers to get basically paid less than they would have been paid at GM plants. And then also the use of more temporary workers, more sort of at-will workers that GM was not allowed to use.
So does this screw the merger? You know, we had our colleague Tom Felger from London on the show earlier, right? Basically, I mean, that's the takeaway. I would think macro picture isn't just about this one UAW guy, but what happens with the merger.
The French approve it.
Yeah.
Yeah, I mean, that's what FCA is saying, and they're countering, saying this is totally without merit, and this is also made to, basically brought on to hurt our merger with PSA. But, I mean, just some of the things that they were talking about in this suit about how, you know, you heard about some FCA labor employees talking about how they want to keep the UAW, I believe it's fat, dumb, and happy.
Oh boy,
is the term they wanted to use for, you know, just keep the UAW leadership like that. And it's really bad because it sort of puts a bad light on the you know, the labor workers here, the UAW. Just, it's not a good look for them.
Ross, thank you. Coming up, music to activists' ears. Coldplay delays its next tour in an effort to make its shows carbon neutral. Let's take a look at some of today's losers on Wall Street. All right, let's take a look at the top trending stories on Yahoo Finance right now. Elon Musk is set to reveal his latest electric vehicle. Tesla will unveil its highly anticipated electric pickup truck at the LA Auto Show. That's tonight. Analysts expect the Tesla pickup will debut in late 2021 and early 2022 with a price of around $50,000. The CDC issued a new warning over an E. coli outbreak. Chicken Caesar salad, specifically made by Ready Pack Foods Bistro, may be the cause. The outbreak has already affected at least 17 people in 8 states, which include Arizona, California, and a few others. According to new scientists, doctors have successfully placed humans in suspended animation for the first time. The trial's currently being tested at the University of Maryland Medical Center on patients that arrived, the one in particular with a stab or gunshot wound. The missions are tests that could have a big impact on the future of emergency room surgery. In the one experiment, the guy was out for 2 hours. We'll be right back.
Now it's time for our buzzer beater round. 3 stories, 1 minute each. Let's get started with this. Uber diving deeper into the ad business. The ride-hailing giant has teamed with startup Cargo to deploy rooftop ads to drivers in Atlanta. So what do you think? I mean,
Inevitable.
I don't really care if there's an ad on the roof.
Already got them in taxi cabs,
Well,
right?
will you care when the ad is on a
your
screen in the car on the
Targeted
back
at
of the
you.
driver's seat?
Well, it's going to be targeted at you because they're going to know you bought the Uber ride and we know everything about you from the
Targeted
internet.
political
Boom.
ads. Maybe
Probably.
Uber's going to have to deal with this in the future.
Yeah, I agree. This is no big deal. There'll be more and more revenue streams coming, as there are in life.
Well, there
Companies trying to
needs
get
to be
profitable.
for them,
Well,
right?
Yep, trying to get profitable.
But this won't be the needle mover for Uber. I mean, this is at the margin.
No, they're going to have a lot of different little things if they
awful
want to
lot.
Well,
move.
consumers, will they have the option to turn it off? Will they rebel?
Like in a taxi cab.
Yeah, you can turn. Well, you can only turn it off after you have to go through the 20-second.
Wait, 8 seconds. The future of this, showing you an ad for a small reward. That's how you get people to watch the ad. So you just wait when Uber Eats says, watch this ad and we'll give you a free small fries.
Speaking of prizes, the effort to legalize marijuana just got a big boost. The House Judiciary Committee passed a bill that could decriminalize marijuana use at the federal level, giving states more room to craft unique regulations. So, anybody think this is going to get, out and onto the Senate and pass the Senate?
Nope.
Zero chance McConnell takes it up. Although, and I'll be in the minority of you guys. I'm still not okay with marijuana being legal, but I'm not okay with gambling being legal.
Are you okay with alcohol being legal?
I mean, in a perfect world, the worst things in our country, we smoke, we drink, and we gamble. I mean, our vices, kill a healthcare system.
Paul Schatz.
I know.
Narc.
Wait, so do you think we should go back to alcohol prohibition?
You can't go back to alcohol prohibition because it's too easy to make it. But I'm just saying I don't think that pot should be legal, and I would say the same thing about gambling. I think it hurts the moral fiber of the country.
And is it on the government to make that decision? Is it right that a Mitch McConnell alone gets to say yay or nay? Basically, right now.
Well, that's our Constitution.
Why does pot hurt the moral fabric of the country?
I think so. Alcohol's become socially accepted, but look what it's done to healthcare costs alone. Look what it's done to accidents.
Well, that's health, not moral. But we'll just continue this discussion. Coldplay is going green. The band's frontman, Chris Martin, announced that the group will put plans to tour on hold while they consider how to make the concerts environmentally friendly. This comes ahead of the launch of its new album. And, we put in here, will we see other entertainers do the same? By the way, other entertainers are way ahead of Coldplay on this. Willie Nelson was putting kitchen grease in his tour bus years ago, and many other bands do the same. So I don't know what Coldplay's so late to the party.
Well, where we ski in Vermont, they use the excess friolator oil.
Right, exactly.
So that's fine. Listen, regardless of if you believe in climate change or not, there's no downside. This is a nice way to help the environment, even if you don't believe in there's
They're not
climate
going to
change.
tour. They're not going to tour, is what they're saying.
Well, but they figure it out.
They'll figure it out quickly, too,
Yes,
because
they
it's
will.
Coldplay.
They'll have to change the name of that song, and it was all yellow to green. It was all green too.
I don't think their agents are so happy. They're not going to be seeing much green till they figure out how they can get on an airplane. 'Cause
Yeah, but they
airplanes are
look-
not using,
look
friolator
heroic.
grease for fuel.
Well, there's nice optics for them.
Exactly.
And it was carbon neutral was the key.
Guys, I just want to mention some breaking news here. The Senate apparently has the votes to delay a government shutdown for another month until December 20th. So that measure now heading to the president. So it looks like he is going to delay that as well. So just wanted to bring you that update. We still see stocks trading lower as we head into the latter part of the day, coming off the lows of the session, however. And I want to say thank you very much, Paul Schatz. It's always good to see
Seeing you guys.
Thanks
Happy
for coming
Thanksgiving.
in. Thank you. You too. Dan Roberts, thanks for being here.
Wi-Fi PM is standing by to take you through the next hour of trading.
It is 1 p.m. in New York City, and the major indices are in the red, with the Dow threatening to post its third straight day of losses. On tap for today, major online brokers reportedly brokering a deal of their own, with Schwab said to be buying TD Ameritrade. Why big regulatory hurdles could threaten that. Plus, President Trump touting Apple's expansion plans in Austin, Texas, backfiring, not going as planned. Why his claims in front of CEO Tim Cook made for a very awkward visit. And another showdown with the Democratic candidates. We'll have all the highlights from last night's Democratic debate, including when one candidate accused another of being on drugs. All that and more. This is Wi-Fi PM. Good afternoon, everybody. I'm Zach Guzman, and joining me on Wi-Fi PM today is Yahoo Finance's Kristen Myers, along with Payne Capital Management financial advisor Courtney Dominguez. Guys, very packed show today, but thank you for being here. Always good
There's
fun
nowhere
here.
else I'd rather be on Thursday at 1 p.m.
Same. We're checking the market action right now, and as you can see, red across the board. Right now, the Dow off by about 8 points. The S&P and the NASDAQ in the red as well. The NASDAQ off by about 0.25%. We'll see where things go throughout our hour. Today, though, we're watching a potential mega merger, which could shake up the brokerage industry. According to multiple reports, Charles Schwab is interested in buying TD Ameritrade for $26 billion. Shares of each company there, as you can see, trading higher on the news. TD Ameritrade up almost 20%. E-Trade, meantime, was trading a little bit lower this morning, and it comes after Schwab slashed commissions to zero, causing other brokerages to follow its lead. Yahoo Finance recently spoke with Charles Schwab about firms dropping those fees. Take a listen.
So it impacts our revenues negatively about 4% by this move, because we do so many other things at Schwab in terms of wealth management. We help people if they need information or need advice about, we help them also. We charge them a little fee for that too. But transactions, free.
So guys, I mean, if the deal goes through, the combined firm would have $5 trillion in assets. These are, of course, major brokerages we're talking about here. But Courtney, how do you see this playing out? I mean, a lot of people use both platforms. They both move to take fees off of those platforms. What do you make of it?
Yeah, I think it's a pretty smart move for Charles Schwab. They're looking right now to shake up the industry. They were just the first one to come out and lower their trading fees to zero, and everyone had to follow. But missing those trading fees, they really need to consolidate to make sure that they're still in the running and really up to speed when it comes to wealth management. But when you look at TD, their price to earnings is actually much cheaper right now than Schwab or even the general market. So I think it's a pretty smart move on their end.
Right. No, I totally agree with Courtney. Even though Schwab might have to pay a premium for this deal, it is quite expensive. I think it's definitely a good move, especially since you had that race to the bottom, or race to zero with fees. It makes sense for some of these firms to sort of combine, cut costs, increase their efficiencies. I'm sure they're definitely going to be having pretty much a lot of layoffs on both ends if they both merge together. But I think that it could be a great move for them. I think it'll be interesting, though, because TD and Ameritrade is, it's like TD Bank has a stake in Ameritrade. So I don't know how that's going to kind of work out, how they're going to have to unwind that in order for this deal to move forward.
Yeah, we talk about some of the regulatory hurdles there. I mean, Bank of America highlighted that in one of their notes today, saying that, that would be potentially a problem here when we talk about the banking side. Obviously, everything is so closely watched. But you do mention the fees. I mean, when we highlighted that move, as you say, race to the bottom, it was Schwab that made less money from those fees. So it almost felt like a move to undercut TD Ameritrade and now just move in. And when people realize TD Ameritrade's losing a good chunk, they had $458 million worth of customer order fees last year compared to Schwab's $139 million that they brought in through that as well. So interesting to see that move and then one brokerage try and buy out another. So we'll see what happens. Neither company has confirmed those reports thus far. But shifting to the latest developments on trade talks with China, the Wall Street Journal reports Vice Premier Liu He invited American negotiators for another round of face-to-face discussions during a phone call late last week. And it comes as the chief trade negotiator indicated he was, quote, cautiously optimistic about reaching a phase one deal, according to Bloomberg. So that would kind of boost optimism here, guys. Remember, yesterday, Reuters reported that a phase one deal was unlikely to be signed by the end of the year. So a little bit of pro-con here to weigh.
I mean, look, I'm actually of the mindset that we're not going to get a trade deal, period. while Trump is in office.
Not even phase one.
No, not even phase one. I don't see at all before the elections any kind of deal happening. Not phase one, not phase two,
Very
not phase
pessimistic.
zero, no phase, nothing's going to happen. I mean, haven't we had, I feel like this is deja vu. I feel like the exact same three of us were sitting in these couches several months ago having this exact same discussion. Oh, Luja says, okay, maybe we're a little bit optimistic, we're moving forward. Or the Trump administration says, oh, we're optimistic, we're moving forward. And we're all sitting here going, do we think it's going to happen? Do we not think it's going to happen? I mean, every week it seems like there's optimism. There's someone inching forward towards a deal. No one knows what that deal looks like. No one knows what concessions have been made. And then just as quickly as the optimism comes, all of a sudden the pessimism follows it as one of the sides says, oh, actually, we're not close at all.
Well, we know. I mean, we know what China wants here. They want to see tariffs rolled back, and we had seen that floated before. President Trump said that no side has agreed to that just yet. But when you think about it, I mean, whether or not a deal comes this year or not, December 15th is the tariff deadline for the next round, right? So I mean, if they don't get it by then, forget walking tariffs back. You got a whole new round coming in.
Exactly. But I think whether a deal happens or not, I agree with you. We've talked about this so many times, it gets exhausting. But even if it's more of a trade truce and just knowing, okay, maybe they're going to delay the tariffs on December 15th or they're not going to continue to escalate them, that alone, I think, would be a really good sign.
Yeah.
Because right now, investors aren't investing some of their cash. Businesses are nervous about forward looking or reinvesting into their own businesses. And it's because of the uncertainty with the trade wars more so than any costs that are associated with it at the moment.
And I mean, we saw that play out too back in November. November 15th was the deadline for those tariffs to go in.
Yeah.
We at least got those paused, and there you go. So it was good enough to have stocks continue to all-time highs. I'm not sure if it's good enough to get reinvestment back in there, but we'll see what happens because time is running out. I mean, when we're saying we're so close to December 15th.
I think that the Chinese are also taking that into account. Like, there's two big things happening right now in the White House and with the presidency. The first is elections. So that's like a deadline that this administration is actually working against or working up against, right? The elections. They don't even know if they're going to win, essentially. And then two, you have this impeachment inquiry, right? So if Democrats have their way, President Trump won't even be up for re-election because he'll be out of office. And I think the Chinese are getting to a point where they're saying, well, we might be able to wait this out. We might be able to sweat the president out and just keep on waiting. I think we need to start asking ourselves, though, if all we have, as you were saying, Courtney, is a trade truce, is what is the point?
Yeah.
What is the point? So then we've just slapped on tariff after tariff after tariff.
To walk them back and say, all right, we'll
to then say, okay, no more tariffs. We're going to go into a truce, and then what? In 2 years, just this all just goes away, and this was just a bad moment in history. What is the point?
Well, I mean, the point is that the president's running out of time here on the trade front. I mean, that's the one takeaway. As your good friend Kesha says, tick-tock.
Listen, we talk a lot in business news about the ROI, and I think that President Trump needs to start asking himself, what is the return on the investment that he's making with this?
Much.
Yeah, it's zero right now.
Yeah, so far as that.
It's zero.
Well, it wasn't just trade updates that President Trump was asked about yesterday. Apple CEO Tim Cook toured an Apple facility in Austin, Texas, where tariffs were top of mind for him and his company. Here's what the president told reporters when asked if Apple will be exempt from looming tariffs in December.
Well, we're looking at that, and the problem we have is you have Samsung. It's a great company, but it's a competitor of Apple, and it's not fair because we have a trade deal with Korea. We made a great trade deal with South Korea, but we have to treat Apple on a somewhat similar basis as we treat Samsung.
There you go. I mean, Courtney, it's obvious why Tim Cook and Apple would be jockeying for exemptions here, because as even the president noted, those tariffs could impact consumer purchasing behavior as we approach the holiday season.
Yeah, and I think that is something they'll definitely want to be wary of, is right now there's just been a lot of nervousness with where things are going, but if things actually start to affect some of the largest businesses in the U.S., I could see them actually making some sort of substantial exemptions or changes with the way that they're doing things now.
Yeah, the other awkward thing happened
I was going to say, you have to mention
visit between Tim Cook and the president, and it was making headlines for other reasons than just tariffs after the president incorrectly stated he opened the Apple plant that they were in. His tweet reads, quote, "Today I opened a major Apple manufacturing plant in Texas that will bring high-paying jobs back to America." Today, Nancy Pelosi closed Congress because she doesn't care about American workers. The only problem there, guys, is that the plant has been making Apple computers since 2013.
For 6 years, he didn't make a mistake. He just out and out lied. He said it confidently. He boldly, it wasn't just a tweet. He actually also said it to reporters when he was on the ground. And Tim Cook just declined to correct him while he was standing right next to him.
They are adding their headquarters. You know, they're adding an actual building there when we talk about Apple, but the plant is different.
The plant has been open for years. The plant has been making Apple computers there for years. I mean, this is nothing. Sure, maybe they've opened up a new wing. They've added another building. But come on, he's trying to take credit. Exactly. He hasn't brought home jobs that were elsewhere. I mean, technically, I guess.
Yeah.
President Obama did. I mean, like, it's just so silly. But going back to the point about tariffs, I mean, and how he was talking about, we've made a deal with South Korea and obviously Samsung being a Korean company, I think that the president is going to be a little reticent to start adding these tariffs that are going to be impacting American businesses and American companies, especially as we go into an election year, when he talks about, protecting American workers. And the American consumer. I think he's going to be a little bit hesitant to really put the squeeze on America.
To Tim Cook's credit, he did jump in and try his best to kind of make sure that everything was clear and factual there. But of course, he's got his tariffs to worry about and getting Apple around those. But nonetheless, that is what happened yesterday. Today, though, we're watching cannabis stocks exploding after Bloomberg reported that Ontario officials are considering a plan to replace the slow-moving lottery system to open legal dispensaries with a plan that could allow for up to 1,000 additional pot shops. Keep in mind the province only has about 24 stores currently open with another 75 approved. So that would be a huge change when we're talking about going from 24 to about 1,000. Canadian cannabis giants Canopy Growth, Tilray, and Aurora Cannabis are all surging on that report. A source told Bloomberg nothing was final, though a decision on the plan could come within a couple weeks. That would set the pivot up to happen by January. Of course, the bottleneck of store openings has been one of the largest complaints among Canada's cannabis companies, complaining that Canada's policies were preventing them to meet the demand that is out there. Here's what Canopy Growth CEO Mark Zekulin told us last week.
The short-term factors in the Canadian market that are impacting our performance this quarter and frankly the next couple quarters are the same thing impacting the entire sector, which is there are not enough stores in Canada to sell our products, right? If you look at Ontario and Quebec, 60% of the population have access to 10% of the stores. And if there are not stores to sell your product, no matter what other decisions you're making, it's very hard to take on the black market and move that large prize, that $6 billion plus Canadian market, into the legal sector.
Guys, Cowen's Vivian Azer came out with a new note on that news saying that previously planned store openings, the 75 we mentioned, were already going to triple Canada's potential annual cannabis sales. So Ontario delivering the biggest boost to that projection there, but another 1,000 stores on top of those 75 that are planned. Not hard to see why cannabis stocks would be boosted by this news. I mean, that would be huge when we talk about the bottleneck that they've faced there. But then again, there's also the worry that maybe there's a sweet spot in how many stores you would be able to open before you start to see too much supply out there on the market. And we've had that question surrounding the cannabis space basically forever now.
And even Zekulin said last week when we were chatting with him, he said, listen, because I had asked him, right, about being undercut by the black market. And he said, listen, we just don't have enough stores right now to move our product. So he talked about how not enough stores meant that they were not able to sell as much. But I think that there has to be a sweet spot, for any company. Like you can't have too much product out there. I mean,
that's just simple supply and demand.
Yeah,
right there.
I mean, there is
the weed market, no different than any other product you got out there.
There's a nice sweet spot for them.
Yeah, speaking of weed, actually, that was a big.
But it's probably higher than 24.
Maybe
24 stores. I'm sure you need much more than that.
And they were already planning some of those. But we're going to get into weed later on in the show because it was a key part of last night's debate. Coming up, all the fireworks from the 5th Democratic debate and why Senator Cory Booker accused one of his fellow candidates of being high on marijuana. The smackdown when Wi-Fi PM returns. All right, we have some breaking news on the 2020 presidential race. According to Reuters, billionaire Michael Bloomberg has officially filed the paperwork to run for president as a Democrat. Guys, we had seen him kind of toying with this idea, trying to figure out if he was going to jump in here. Now, the news from Reuters, it is official. You have another billionaire in the race. Move over, Tom Steyer. Michael Bloomberg jumping in, too. Kristen, what do you make of that?
I'm so tired. Like, these guys, I'm trying to get this field to shrink here. And we keep adding people. It's getting a little bit ridiculous. We have a Yahoo Finance graphic with all the candidates. And our poor, graphics producer, David Foster, has to just keep on adding pictures. You can't even see them all anymore. It's getting a little bit ridiculous. However, I think that what this speaks to is the fact that there are no candidates right now that are out and out everyone's favorite. I don't think right now that anyone is truly excited about the Democratic field. And I think that's why you are seeing some of these other candidates that might not have chosen to run, starting to watch the debates. No one's really, exciting anyone. And they're saying, you know what? Maybe I will get in. Now, Michael Bloomberg filing as a Democrat, I mean, he's been a Democrat, he's been a Republican. I mean, I think it was kind of like a toss-up. He could go either way.
Well, he had been noting, to that point, he had been noting that watching the way that the race has played out so far, noting that maybe potential stumbles from Joe Biden may have weighed on his decision to come in here as more of a centrist candidate as the progressive wing continues to challenge him.
I think everyone thought that Joe Biden was going to enter the race and he was going to blow everyone out of the water, right? You saw that enthusiasm just even with his fundraising. In 24 hours, he raised $6 million. However, he has performed poorly. He's performed terribly, actually, at the debates. And I hate to say it, Trump's nickname of calling him Sleepy Joe Biden, kind of accurate when you see him on those debate stages. The other candidates have been able to hammer him on his policies and on his record. So he's clearly, I don't think he's the enthusiastic. If he's a front runner, I don't think anyone's enthusiastic about him at all. Then you have Warren and Sanders, I think a little too far left for a lot of people.
Yeah.
Opens up the field for the middle. And of course, Amy Klobuchar is leading that kind of more centrist. Amy Klobuchar and Kamala Harris leading more of the centrist voices. I don't think anyone's really excited about them either. So sure, if you're Michael Bloomberg, you say, I'm a Wall Street guy, I'm a billionaire. I can definitely unite people on the right in that way. I'm a businessman. So people who were saying, I like Trump because he's a businessman, we need this country to run like a business, he can appeal to them. But he's also when it comes to a lot of social issues, he's a lot more progressive than some candidates that we might see. And so I think that he can appeal a little bit to the left in that way. Yeah. I think that he might potentially be a pretty strong candidate, but we have to see. We have to see what he's
got. A lot of name a lot of name recognition for sure. There's definitely that, and also the fact that before he had been weighing the decision to enter the race back when it was Hillary Clinton. And he chose not to because he didn't want to take away from the center and potentially take away and ensure that Trump would get elected. Nonetheless, now we have him officially entering the race as a Democrat. Well, speaking of the other 10 presidential hopefuls, they were actually on the stage duking it out last night for the 5th round of Democratic debates, discussing everything from weed to the wealth tax. And take a listen to this fiery exchange between Senator Warren and Senator Booker about America's 1%.
The 99% in America are on track to pay about 7.2% of their total wealth in taxes.
I'm not disagreeing with that.
The top 0.1% that I want to say pay 2 cents more, they'll pay 3.2% in America. I'm tired of freeloading billionaires. I think it's time that we ask those at the very top to pay more.
Gotta like it. You gotta like it. I mean, we're talking about the Democrats trying to figure out who's going too far when we talk about vilifying America's wealthy. And that's really what we've heard from a lot of billionaires lately is don't vilify the wealthy. And that was, of course, center stage last night.
I think this is pretty interesting that we're looking at this clip right after Bloomberg decided to announce. And I don't think it was any coincidence that he did that today, right after this debate here. Yeah, there's not a lot of front runners, but I think a lot of the feedback was, are they going too far left? And can you find somebody who's maybe more middle ground, but also does have a genuine stake at beating Trump next year? And so I think this was a very timely decision, and I think that clip right there kind of shows that.
Well, let's go ahead and talk about something that may have sounded progressive, right? Even just a year ago, maybe 2 years ago, would have been completely thrown out as way too far left. And now suddenly, almost all of the candidates on stage support legalizing marijuana. And that's where we're at right now. But there's one candidate, one notable frontrunner that does not. And Senator Cory Booker went after him Vice President Joe Biden for his stance on marijuana and his thoughts that marijuana is actually a gateway drug. Take a listen to Senator Booker here.
I have a lot of respect for the vice president. He has sworn me into my office as a hero. This week, I hear him literally say that I don't think we should legalize marijuana. I thought you might have been high when you said it.
I think that was the line of the night, guys. I mean, I think it got the most laughs. It was the most direct and to the point, and it also exposed Joe Biden for, I think, a position that a lot in the Democratic Party don't necessarily agree with.
I mean, the guy is 77 years old. He grew up at a time when marijuana was thought to be this evil gateway drug. You know, if your kids tried reefer, all of a sudden they were going to become heroin addicts and homeless. Like, I mean, what do you expect? I think that he's just showing a lot of people his age. I think he's showing that he's not as progressive as he tries to come out and seem. But I think that this is just where the country is now. I think that you hear even Republicans getting on board with legalizing marijuana, particularly when they found out that they could, you know, make a profit from the legalization. So, I mean, it just shows that some
people are making a profit off.
I mean, the whole Republican Party as a whole, of course, is not on board with legalizing marijuana. But again, I think that this is just where the country is trending now.
Yeah. I mean, that's what we've seen after Pew Research had their own study looking at it, and most Americans do support legalization across the board there. So that is kind of a shift. Again, just noting how the public has shifted on it, but Joe Biden clinging to some of those old views. It's also interesting when you look at how many minutes were taken up by the candidates. It was not equally distributed.
Oh, here you go.
The New York Times broke down which candidates had the most and least amount of speaking time. Senator Warren spoke the most with over 13 minutes of talk time, and entrepreneur Andrew Yang came in last place with less than 7 minutes. 4 out of the last 5 debates, guys.
So
far, Andrew Yang
stuck in your craw, didn't
has
it?
had the least amount of talk time, I should say. So I guess not surprising to see him at the bottom.
You know what, though? I actually thought last night, even though Yang clearly spoke the least, I thought that when he did speak, that his words packed a lot more of a punch.
And this showing just here, I mean, when you look at how the candidates were polling, you would have expected Andrew Yang to get a little bit more talk time based on where he's polling, because you think about some other people who aren't polling necessarily as well. Tulsi Gabbard, Tom Steyer, both spoke longer than he did.
Again, this is just a problem of the fact, this is a problem on two folds. One, we just have too many candidates. Guys, some of you need to drop out because we want to hear from like just 4 or 5 people, and that's it. That way we'll give everyone more talk time. But 2, I mean, there is something to be said that the moderators do actually direct their questions at certain people. They try to direct it more towards those front runners. Unfortunately, and Tulsi Gabbard's camp has actually come out and criticized the debates for this. They feel like they're being shut out and that they're not able to share their platform and really engage in a debate because the debates are rigged in a way towards these front runners.
Yeah.
Who knows
Serious accusations.
how much better Andrew Yang might be doing if he had access to more talk time.
Yeah, and sometimes, it's all about rebuttals, and he called you out, you called him out, and there weren't a lot of attacks against Tom Steyer or Andrew Yang, so not a lot of rebuttal time either. That also playing a piece here. We just report the numbers. You'd make your own conclusions. That's how it goes. But just after the break, the leadership expert and author with the most popular TEDx talk of all time joins us on how to be a more effective leader with the help from tricks from Steve Jobs and Martin Luther King Jr. Wi-Fi PM is back in 2. Welcome back to Wi-Fi PM. We're checking the market action we're seeing right now. And right now, the Dow, S&P, and NASDAQ all still in the red, with the NASDAQ leading the way lower. We'll see what happens as we approach the second act of Wi-Fi PM. All right, well, navigating the secrets of success in the workplace is a question that has stumped many, but our next guest explains it's not about finding a mentor, but rather finding a worthy rival. The leadership expert with the most popular TEDx talk of all time joins us now on how to be a more effective leader with the help of tricks from Steve Jobs and Martin Luther King as well. Here in studio is the author of The Infinite Game, Simon Sinek. Simon, good to see you.
Nice to see you.
Thank you for joining us. I mean, when we talk about it, it does seem counterintuitive to think of focusing on a rival in the workplace that might actually burn you out a little bit more competition. But why is that a good thing?
So business is, there's no finish line in business. There's no such thing as winning business. And if you think about sort of how business works, it's this infinite game. There are finite games and there are infinite games, according to James Carse, a philosopher. Finite games are defined as known players, fixed rules, agreed upon objectives. Any sporting event, there's a beginning, middle, and end. And if there's a winner, there has to be a loser. An infinite game is defined as known and unknown players. The rules are changeable. You can play however you want. And the objective is to perpetuate the game, to stay in the game as long as possible. And so when we think of other people that we work with as competitors, or even other people in our industry, other companies as competitors, that's demonstrating a finite mindset, the false belief that we can win in a game that has no finish line. It's much healthier to view them as rivals. And some of those rivals are worthy of comparison, which means they're actually better at some things than we are. Having worthy rivals means that their strengths reveal to us our weaknesses, and if we know our weaknesses, it means we can build upon them. And ultimately, the only true competitor in an infinite game is ourselves.
Yeah.
And so when we know what our weaknesses are, we can become even better at what we do.
So kind of use them as a foil to kind
exactly
of reflect inside.
Should you constantly be changing up who your rival might be as you attack your own weaknesses and turn them maybe into strengths or get better? Should you say, so right now, Zach might be my workplace rival.
Yeah, she always fills in whenever I'm out.
But maybe next week, it's instead Yahoo Finance's Brian Chunk. So I mean, like, as we evolve, should our rivals, I guess, also evolve?
Of course, as we get stronger and better at what we do, there are going to be others out there who challenge us more, or they may no longer represent a challenge. There's something that they do that's no longer better than us. I wouldn't change them every week, but you can, of course, select your own worthy rivals. You can have as many as you like. They can be companies, they can be individuals. It's whose ever strengths reveal to us our weaknesses, where they absolutely do something better than us. We all know what it's like when we view each other as competitors in a workplace. It's unhealthy. We've all had the experience where someone we work with maybe got a promotion and we got angry. Like, think about that for a second. We got angry at somebody else's good fortune, right? The odds are there's something about that person or their personality that's making us uncomfortable. It's probably revealing a weakness in ourselves. It's much better to take that energy away from being against somebody and trying to undermine them or get ahead of them and rather focus on ourselves. So yes, have as many as you like.
Or the idea that it's a zero-sum game, that if they get the promotion, I can't, and then it's not an infinite game.
Exactly.
Which would get back to the heart of your book. But it's not, I mean, you've been focused on leaders for a long time, right? You've looked at how they communicate effectively. So, I mean, when we're thinking about it in kind of having a healthy competition, I mean, is there anything maybe that leaders have been able to do that maybe people who aren't getting ahead have not been able to do?
Well, they ask for help. One of the things that I find remarkable about many of the great leaders that I had the chance to meet is they all recognize that as much as they know and as much as they may have accomplished, they still don't know even more things, and they need help getting to wherever they are getting. I find them sort of remarkable. They all consider themselves students of leadership. None of them consider themselves experts. You know, you walk into these people's offices and they're very accomplished.
Is there one in particular that stands out when we're talking about these leaders?
I mean, it's the leaders we admire. It's all the ones we like. They lean in with curiosity. You know, whether they're generals or politicians or CEOs or whatever they are, they have curiosity for the ideas of others. There's a great definition of humility that I love. It was given by Bob Gaylor, the 5th Chief Master Sergeant of the Air Force. He said, "Don't confuse humility with meekness. Humility is being open to the ideas of others." So you can have a big ego and think you're wonderful, but if somebody says, I have an idea, and you lean in, so let's hear it, that's humility, and I like that in a leader.
Very much so. But very interesting stuff, too, because people might not think that it's good that we have such a good friendship, that we can be friends and also rivals at the same time. But Simon Sinek, thank you so much for bringing all that
Thanks for having me.
Appreciate it.
Appreciate it.
All right, well, this week on Influencers, Yahoo Finance editor-in-chief Andy Serwer sits down with Darren Walker, the president of the Ford Foundation, and he discusses everything from the ideal president to his views on capitalism. Let's watch.
We're at a point in this country now where I believe the core issue of what kind of country are we going to be? Are we going to have a democratic capitalism that uses a stakeholder model of a series of interests, and those interests being, of course, shareholders at the top, but workers, customers, and communities? That stakeholder paradigm, I believe we're at a point of calling the question. And Mark Benioff's, I think, very powerful op-ed, and others, Ray Dalio, Jamie Dimon, other CEOs, Larry Fink, have all talked about this. And so I'm actually quite encouraged that we're seeing directionally a change in the discourse from the leaders of our corporations, and hopefully in terms of their behavior.
And you can catch that full episode of Influencers right here on yahoofinance.com. All right, well, we got to take a quick break, but we're back with the market's biggest movers on Wi-Fi PM right after this. All right, let's check in with Scott Gamm on the floor of the New York Stock Exchange. Scott?
Hey there, Zach. Well, stocks building on yesterday's losses when we had trade headwinds yesterday. So stocks clearly not rebounding from those declines. So there is still a little bit of trade caution in the air. Although when you look under the hood at the Dow Jones Industrial Average, you'll notice that some of the best performing components are trade-sensitive stocks like Caterpillar and Dow Inc. We're seeing rebounds in those two names specifically, although the broader Dow is still below that critical 28,000 mark that we had been at earlier this week, back on Monday. Now, Zach, we're also keeping an eye on the retail space today, specifically L Brands, which is the parent company of Victoria's Secret and Bath & Body Works. The stock is up 9%. It's the best performing component in the S&P 500. The quarterly results were not so great. It was a mixed board, but fourth quarter guidance did come in better than expected. Although we should point out that even though the stock is up today, it's still down over 30% so far this year. Zach.
All right, Scott Gamm on the floor of the New York Stock Exchange. We'll check back in with you later on in the show. But next on Wi-Fi PM, with Medicare for All in focus, we're taking a look at what states are getting hit the hardest by the surge in healthcare costs. We're back in 60 seconds. and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Kristen Myers, along with Payne Capital Management financial advisor Courtney Dominguez. Guys, let's check the market action right now, shall we? Well, we're seeing red across the board here. The Dow off by about 25 points, the S&P off by about 3, and the NASDAQ off by about 0.25%. Well, while we were talking before the break, I mean, healthcare continues to be one of those big issues out there, and it's no secret that healthcare costs are on the rise, but new research signals Americans are paying more for their premiums and deductibles than ever before. So join us now to break it all down is Yahoo Finance's Adriana Belmonte. And Adriana, what can you tell us about how these costs are impacting American families now?
The Commonwealth Fund, they released this report yesterday, or I think it was today actually, and it found that employer premiums or employee premiums and deductibles are on the rise. So that means that people are paying more and more out-of-pocket costs for their health care, and it's up to an average of $7,388 for 2018, which is up from 2008. I guess they were doing a decade comparison.
It's a considerable move higher. I mean, when we look across states, though, right, these aren't all getting impacted the same. There are states that stood out that are suffering even larger percentage gains here when we talk about families paying for this.
Yeah, so what they did was they looked at how the premiums and the deductibles that they're paying, how it is relative to the median income for the state. So for example, Mississippi, they're paying 16% of their median income, which is really high, but they have the second lowest median income in the country. And then meanwhile, Massachusetts, they're paying, I think, half that amount, 8.4%, and they have one of the highest median incomes in the country. So it's not really equal weight.
So Massachusetts, obviously famously one of those states that kind of had introduced a health care for all within the state. So I'm wondering how a Medicare for all plan might impact these premiums, because we hear a lot of the candidates talking about that.
Yeah, I took a look at Elizabeth Warren's Medicare for All plan because the big thing that she talked about was the employer contribution, and basically she would be trying to fix these high premiums and out-of-pocket costs by using Medicare rates to kind of fill in the gaps. I'm not too sure about other plans that have focused specifically on that, but hers seemed to really single out that as a big issue.
I mean, go ahead.
I'm curious. I don't know if this is much in your data, but I know that companies are really trying to cut their costs, and so they have these higher deductible plans, but they are offering health savings accounts for employees to be able to get that extra tax deduction and pay for the expenses that way. I think we're seeing a rise in that. Was that in your data at all?
It wasn't, but it's also a really interesting alternative to try to fix this plan, because some people say, well, why can't you just lower these rates to begin with? But it might not be as simple as that.
I mean, just looking at this map, though, right? When we look at states paying more, right? I mean,
The
Americans
South.
within the
Right, I was going to say,
Look at
like
the
the darker
South.
meaning.
The South has historically been also those states that suffer from a lot of these, endemic diseases that we talk about. When we talk about obesity problems in the South, you talk about diabetes problems in the South. I mean, does that factor into any of this at all here when we talk about the health of states and then what it might cost for people to go see doctors?
I think that plays a role, along with Medicaid expansion, because a lot of these southern states, they're known for, their state governments refuse to expand Medicaid, and that plays a huge role in these rising health costs as well.
I was going to say, so looking at that map, which kind of reminds me of the map we did last week when it came to the states that manage their finances the best, I'm wondering if when you just looked at it, right, anecdotally, if you were able to see a correlation between Republican states and Democratic states and who was paying, the greater percentages for those premiums and deductibles.
It's interesting because, again, it's kind of what you said. It seems to be more red states, but yet those are more conservative. They want an alternative to these healthcare costs. So it's interesting where it seems that they would need the Medicare for all more in those states, and yet they're not as much in support of it. So I don't know if there's a clear answer there.
Yeah, and what is a red or blue state anymore? Virginia's on one of these lists, and that's
Purple.
a purple state now
It's
we're looking
purple.
at
Yeah,
too. So
we've
we
got a lot of swing
so
states
complicated.
now.
But the one takeaway here, it's clearly obvious why Democrats continue to make healthcare a big piece of the talk time on the debate stage. But Adriana Belmonte, thank you so much for taking the time to break that down. And after the break, Salesforce CEO Mark Benioff weighing in on the gender pay gap and why he put his money where his mouth was to solve the problem when Wi-Fi PM returns. Welcome back to Wi-Fi PM. Salesforce is in focus today as the company's co-CEO Mark Benioff addressed everything from activism to the gender pay gap. And our own Yahoo Finance's Julie LaRoche joined us now with the details. Fresh back from Dreamforce.
Yeah, guys, it's a massive 171,000 people there for this huge tech conference. It is amazing.
Watching it from here, it looked amazing. But you got to sit down with Mark Benioff.
Yes, we had a wide-ranging conversation. You're just referencing some of the things that Mark Benioff has been talking about. He's been calling for a new form of capitalism. He says that capitalism, as we know it, is dead and that we need a newer, more fair, equitable type of capitalism. And part of that, we're talking about equality, it's equality when it comes to pay, specifically the gender pay gap. And the story with Mark Benioff is 2 high-level female executives came to see him at his house on a weekend, and they said, Mark, we think we have a gender pay gap. And he did not buy into it. He actually didn't think, no way that we have one. But they said, no, Mark, we really think we have one. So he decided to look under the hood. Turns out they did. In about a 2-year period, they've spent $10+ million closing that gender pay gap, including companies that they've acquired. So take a listen to what he has to say for other CEOs out there who need to look under the hood.
Oh, well, there's no question that every company has a gender pay gap. Look at my industry, look at your media industry. You can see the huge issues of gender reform going on even in media today. And you have to ask yourself, do we have equality? Are we paying men and women equally for equal work? Because that is what we're really talking about. Why are we not treating people equally? The World Economic Forum, where I'm a trustee, has said it will take more than another 100 years for men and women to be paid equally. But every CEO today can look at their data and say, am I paying men and women equally? And everyone should come forward and ask their CEOs, hey, do we pay men and women equally for equal work? This is a simple thing that everybody can do.
Guys, it's an interesting concept. He's saying that individuals should go forward to their CEOs and make the ask. I guess the question is, would people actually do that? Would they be willing to do that and make the ask, like, hey, will you look under the hood and do something about it? Also, just referencing media, he did, with his wife, Lynn, buy Time magazine. So when he makes acquisitions, he also makes sure that he closes any sort of gender pay gap. And that's actually something that he looks at when he is acquiring companies. It's one of the factors now.
Yeah.
I don't. Salesforce seems to be culturally a very open company, and I don't know if all companies where all the employees, right, would feel as comfortable to go to their higher executives and say to them, we have a gender pay gap problem. I don't know how many companies would actually be open to that news, because we hear all the time, like a lot of reports for companies like, for example, Google. Google's been in the news for this several times. How many of these tech companies, or just companies in general, are okay with being told or being, have that mirror held up in front of them and saying, look, you have a huge issue here with gender and with pay.
I think it's an interesting thing, especially with millennial generation. We're the ones that are going to start caring about these issues. We're talking about, I don't have time to wait 100, 200 years that the World Economic Forum is saying that we have. So maybe it's about going with a bigger group, teaming up, getting people to go talk to the CEO or their manager or whatever. Like, it's time to look under the hood. Like, it's a big issue and it's not going away anytime soon. So we have to do something about it. And I think CEOs need to be held accountable at some point. And Wall Street has to get comfortable with, okay, you're going to take a $10 million hit because you need to close the gap.
And that was the other aspect, too, that Mark Benioff was saying. I mean, it was going to cost him as a publicly traded company, but he still said it's about investing and making sure that that's right for our people. But Julie LaRoche, back from Dreamforce, thank you so much for joining us. Coming up, why your Thanksgiving dinner is likely to cost nearly the same as it did last year, and why you might be surprised to see how little of that money is actually going to America's farmers. The American Farm Bureau Federation's chief economist joins us right after this. Welcome back to Wi-Fi PM. Right now, all three major indices are still in the red. You can see there the NASDAQ still off by about, call it 0.1%. We'll see where things go as we approach 2 p.m. Eastern Time. Well, with Thanksgiving just a week away, we're breaking down the cost of your turkey dinner. And according to the American Farm Bureau Federation survey, the average cost of a Thanksgiving dinner for 10 people will cost $48.91 this year, which is only 1 penny more than last year. So joining us is Chief Economist at the American Farm Bureau Federation, John Newton. John, good to be chatting with you. I mean, when we look at a 1 penny increase for the cost of America's Thanksgiving dinner, are you surprised to see that, or does it fall in line with what you've seen in years past?
Well, in the past few years, the cost of Thanksgiving dinner has been very, very stable here in the U.S., under $5 per person for that family dinner for 10. So it's been very stable and really lines up with where we see food inflation here in the United States, very flat.
I'm curious. I was actually a little bit, surprised to see that it was the same because we've had tariffs and trade wars, which are, everybody's thinking, affecting the farmers and the cost of our crops. So has that all led to Thanksgiving dinner specifically?
Well, one of the things when you look at the trade war and the impact of many of our farm products, it's actually reduced demand. So when you think about soybeans, the Chinese are buying less soybeans today than they did 2 years ago, and that's actually led to weaker farm prices across much of agriculture. And so it's no surprise that the Thanksgiving dinner remains flat. And then it's also important to note many of the commodities that are caught up in the trade war are not what you're commonly going to find on your Thanksgiving dinner table.
Mm-hmm. I mean, well, let's just dig into the numbers a little bit more here, just at the risk of making everybody hungry. The cost of a 16-pound turkey is only $20.80. That's down roughly 4% from last year. So that seems to be a pretty big jump down. Why the fall in the cost for turkey here?
Well, actually, when you look at wholesale turkey price data, you see that wholesale prices are actually rising. When you look at inventory data from USDA on turkey supplies are relatively tight across the country. So one would think that turkey prices would actually be going up. But what we're actually finding is many retailers, in order to drive consumers to the stores, they often price that turkey at very competitive levels, trying to get consumers in the store so that they can get all the different fixings on that Thanksgiving dinner.
Sneaky, sneaky. So bring that down and maybe increase the prices of some of these other sides here. But I do want to highlight, we touched on the farmers and the way that they're being impacted by the trade war. I want to highlight something we saw in the debate last night. Presidential hopeful Pete Buttigieg slamming President Trump during the debate for the trade war with China that's weighing heavily on American agricultural exporters. Want to play that, get your take. Let's watch.
I don't think this president cares one bit about farmers. I believe that so many of the solutions lie with American farmers, but we have to stand up for them, not just with direct subsidies and support, but with making sure we do something about the consolidation, the monopolies that leave farmers with fewer places to purchase supplies from and fewer places to sell their product to.
So, John, I mean, it's less than about 10%, right, of the cost of the turkey actually going to American farmers. I think a lot of people would be surprised to hear that. Why is so little of the money that we spend on food actually landing in the pockets of farmers?
Well, you're exactly right. Less than 10%, actually 8% of the dollars that consumers spend on food actually make it back to the farmer. And that's for a variety of reasons. There are obviously transportation, processing costs associated with taking those farm products from farmers and ranchers across the country and getting it on the store shelves for consumers. So we're not surprised. It is trending in the wrong direction. We'd love to see farmers getting a little bit more of that food dollar.
I absolutely. And I don't know about you, but now I'm hungry again. So I'm going to have to let you go. We got to get out of here and go have some snackums here. But John Newton, thank you so much and happy Thanksgiving, sir.
Happy holiday to you as well.
All right, awesome. Courtney Dominguez, thank you again for joining us. Appreciate you being here as always.
Thanks for having me.
Kristen Myers, thank you as well.
Sorry, you said snackums.
I did say snackums. I'm proud of it. I can look myself in the mirror despite it. Stay tuned to Yahoo Finance. We're headed to the New York Stock Exchange in 60 seconds time. All right, let's check in with Scott Gamm on the floor of the New York Stock Exchange. Scott?
Zach, I'm joined now by Danielle DiMartino Booth, CEO of Quill Intelligence. So, Danielle, we've got stocks flat but still elevated, but the VIX rising about 3% today.
3%? What's going on with that?
Yeah, are investors missing something?
I think the VIX is starting to kind of reflect stress in the marketplace because we're almost to December here, and we know what happened in September with liquidity issues and the Fed stepping into the repo market for the first time. And I think there's a lot of uncertainty right now in the market about what December is going to bring, if Jerome Powell and his magical printing press are going to have to bump it up even more than it already is in order to get through year-end window dressing at banks. So we'll have to see. But I think the VIX is starting to sniff out a little bit more volatility than we've had of late going into December.
Well, when you bring up liquidity in the balance sheet, when we were at peak balance sheet, the market was at a much lower level than it is now.
Right.
So that begs the question, is the balance sheet too small right now to justify these stock levels?
I think any bond trader would tell you absolutely it's way too small. Let's bump those $60 billion a month in buys up to $100 billion a month. That was the original survey data, by the way, when asked months ago, if the Fed was to roll out QE4, what would it look like? And bond traders all across Wall Street said $100 billion a month is a starting point. I wouldn't be surprised to see that number start to rise, even if the Fed's not cutting rates. They're still injecting more liquidity into the system, which is easing.
Meanwhile, you're starting to notice some cracks in the labor market. What are you seeing?
It's interesting, Empire State, Philly Fed, we're seeing future inventories rise, so it looks like we might get a bump in the ISM, while at the same time, this whole thought that the consumer is strong seems to be getting weakened here a bit. We've had 7 weeks in a row of continuing jobless claims increasing on a year-over-year basis. That is the number of Americans collecting unemployment insurance. It's going up for the first time since December of 2009. And lo and behold, in the Fed minutes, they start, they make mention of whether or not the labor market might be starting to weaken for the first time. I think the Fed's starting to pay attention to the possibility that we're finally seeing a turn in the longest labor market run in U.S. history.
So would another rate cut help reverse that employment trend that you're worried about?
Possibly. Interest rate sensitive sectors, such as housing, obviously would appreciate another rate cut. John Williams of the New York Fed alluded to as much a few days ago in his speech that there would be the potential for more rate cuts in the future. So I think it's out there. I think the market is underpricing at September of 2020, the next rate cut. I think we'll see it sooner.
All right, Danielle DiMartino Booth, thank you so much. As always, Zach, we'll send it back to you.
All right, coming up, a major deal that could shake up the brokerage industry. The details, as Charles Schwab is reportedly eyeing rival TD Ameritrade. Next.
and welcome to the Ticker on Yahoo Finance. I'm Akiko Fujita. We are breaking down the biggest stocks to watch today, and we are seeing red arrows across the board on this Thursday afternoon. The Dow is pretty flat right now, down 23. The S&P 500 down 4, and the Nasdaq down 21. Let's start with our big four tickers of the day. Charles Schwab and TD Ameritrade are leaping on reports of an acquisition. Macy's is delivering another gloomy outlook to investors again, and Tiffany sparkling after a report of a new takeover bid from LVMH. But first, to the online brokerage space, certainly in focus this afternoon. Charles Schwab reportedly in talks to buy TD Ameritrade. That's according to multiple reports that have been out there. The deal could create a massive wealth manager with more than $5 trillion in combined assets. Brian Chung is with me. And so, Brian, let's talk about the scale of this. $5 trillion in combined assets. Certainly, it's not just these two stocks that are down. E-Trade also seeing a big move on the back of this.
Right, absolutely. So if we think about the brokerage space, there's not many players in it. There's maybe 5 major players, and Fidelity, which is the only of those 5 that's really private right now, takes up the majority of the market share for right now. So I believe we have an image that kind of expresses what the market looks like right now. Schwab, rather, has about 21% of the market currently if you're measuring this by accounts. When I say accounts, so it's how many millions of people are using their platform. So when we talk about this brokerage platform, Charles Schwab has 12.1 million. Fidelity, as you can see, the vast majority there, 29.6 total accounts there as they reported. Again, it's a little hard to tell because some of these private companies, they don't have the granularity that some of the other public companies disclose. But let's compare that to TD Ameritrade, which has 11 million accounts. So if you were to combine both Charles Schwab and TD Ameritrade as is proposed, again, it's a rumored transaction. It hasn't been official yet, but it would be 23 million accounts, which would really pair up with Fidelity. But we have to consider that it isn't just these 5 players, that Robinhood is another big startup company that's really sparked a lot of the consolidation because of the zero commissions. But largely when we talk about the operating space right now, this would be a humongous company. Total, you mentioned over $5 trillion in combined client assets. The deal is rumored to be about $26 million or $25 billion as the Financial Times reported. So no small change there, but again, a kind of necessary to survive in this really rapidly shrinking brokerage firm industry.
You talk about the zero commissions. That's certainly been the focus in this space. And Yahoo Finance recently spoke with Charles Schwab about brokerage firms dropping that commission fee to 0. Take a listen.
So it impacts our revenues negatively about 4% by this move because we do so many other things at Schwab in terms of wealth management. We help people if they need information or need advice about, we help them also. We charge them a little fee for that too. But transactions free.
And so that was just last month, I think, when we did the interview there. How does this acquisition, again, if it does go through, because these are still reports, allow Charles Schwab to stay competitive in the space?
Well, they need to figure out different ways to make revenue. So nothing comes for free. That's no surprise. So when Charles Schwab and the other brokerages went to zero commissions, they're making money some other way. And the way that they're doing that is by selling the order flow to third-party market makers like a Citadel or a Virtu Financial. They're making a cut of the spread when those market makers ultimately put some of these stock trades in the market. But we also have to consider that Charles Schwab and TD Ameritrade are not companies that rely entirely on trading revenue. They have a number of asset management lines of revenue that they can rely on as well. So they just have to they've come to terms with the idea that, look, we're not going to make as much money on the brokerage business as we have in the past, which is why we need to have these other businesses. TD Ameritrade, for example, has a pretty substantial banking business, which actually might raise some questions about how Charles Schwab would integrate with TD Ameritrade if that were to happen. But you mentioned earlier, the big loser here is really E-Trade and those other firms that have not consolidated. I showed you that pie chart earlier. So it's going to be Fidelity and Charles Schwab, TD Ameritrade combined that are going to be dominating this market. So if you're E-Trade, if you're not part of this party, if you're not merging with somebody else, you're not going to have the scale to make that order flow number, which means that you're not going to succeed in the brokerage industry. You'll have to find some other line of business to succeed in. So when we talk about this consolidation, this is not the end of the story.
Yeah, no question. All eyes now shifting to E-Trade to see if they will be the next to make a move. Thanks for that, Brian. Well, we are also watching Macy's today. Shares there are sliding after the retailer reported quarterly revenue that missed expectations. The company also slashed its outlook. Emily McCormick is with me. Emily, we've been talking about Macy's struggling for some time, but looking ahead, we're right in the thick of things in the holiday season. What's the outlook on that front?
Well, the fact that Macy's cut guidance heading into this key holiday season is what really is spooking investors now. Really weak results on this fiscal third quarter that we saw today as well. So those third quarter adjusted earnings actually came in positive. That was at 7 cents a share versus a loss of a penny expected. If we look at those comparable same-store sales, though, those were down 3.5% on an owned plus licensed basis, worse than that negative 1.2% expected. Now, the company blamed a couple of factors for this miss. They said third quarter sales were impacted by the late arrival of cold weather, continued soft international tourism, and weaker than anticipated performance in low-tier malls. They also said they experienced a temporary impact on its e-commerce business, due in part to work on the site in preparation for the fourth quarter. Now, if we actually look at those margins, those came in a little bit ahead of expectations. That was at 40% versus 39.9% expected. Part of that was actually due to the fact that they were having some trouble on the e-commerce side and on delivery, since that tends to be a lower margin business because of those costs associated with same-day shipping and some of these other delivery initiatives. The other thing that Macy's has also been pushing forth is its Growth 150 strategy. So it has been trying to turn around some of its higher profitability stores, but that's kind of spilled over, and it's now something that they've really implemented in about 50% of their brick and mortar locations. So that's also been something that has been a high cost for the company.
And staying in the retail space, shares of L Brands popping in a big way. Take a look at that, down up more than 9%, despite missing revenue expectations. The parent company of Victoria's Secret is jumping on its fourth quarter forecast. Emily, that seems like a big jump there, given that earnings per share was pretty much just in line. Same-store sales were actually, we saw steeper losses there than expected. So why are we seeing the big pop?
Well, the street is accepting just in line results for L Brands, especially since expectations had been so low heading into this. We saw that similar bifurcation between L Brands' two main companies. So that's Victoria's Secret and then Bath & Body Works. So Bath & Body Works comp sales did beat expectations. Those were up 9% versus just 4.4% expected. We saw Victoria's Secret comp sales actually fall 7% over last year, so much steeper than that 4.7% drop expected. Similar narrative here. Really, the Victoria's Secret brand, that marketing, the overtly sexy image just isn't resonating with buyers. It's something that they're continuing to really see drag sales away. We have heard continuous reports that the company will likely come under activist shareholder pressure to really have a restructuring, possibly the ousting of CEO and founder of L Brands, Leslie Wexner, although the company has reportedly come out and denied that this ousting would actually take place. But that's something that's also helping push shares higher today.
Okay, thanks so much for that, Emily. Well, our third ticker of the day is Tiffany & Company. Shares popping after Reuters reported luxury retailer LVMH is raising its offer to buy the jeweler for nearly $16 billion. You may recall Tiffany rejected LVMH's initial takeover bid of $120 per share last month. Heidi Chung is with me. Heidi, what's the likelihood here, now that that bid has been upped, that this will in fact go through?
You know, Kiko, it could honestly go both ways here, but let's take a step back and revisit that initial report that came out at the end of October about maybe LVMH's interest in potentially purchasing Tiffany. So as we know, LVMH, which is Louis Vuitton Moet Hennessy, is a huge conglomerate of luxury brands. So they own everything from Louis Vuitton and Moet Hennessy, like I mentioned, and Sephora, as well as Bulgari. So while LVMH is a huge company with a huge presence internationally and just globally altogether, they don't really have a strong footing when it comes to luxury jewelry aside from its Bulgari brand. So the initial bid at the end of October sent Tiffany shares soaring more than 30% on October 28th because, you know what, Tiffany's just hasn't been doing all that well. So investors were were believing that, well, maybe if LVMH comes in and takes over Tiffany's, they could help this company with its strategy and turnaround plan. So the original bid was an all-cash bid that would value Tiffany's at approximately $14.5 billion, or about $120 per share. But the revised proposal that's being reported right now is for about $130 per share, which would value Tiffany's at approximately $15.7 billion. Now, if this deal were to go through, this would be the largest ever deal for Louis Vuitton Moet Hennessy. But I want to go through why this sort of makes sense. So a couple of reasons here. First, LVMH just does not have that big of a presence when it comes to luxury jewelry, like I mentioned, besides its Bulgari brand. But the jewelry business is a really, really fast-growing business within the luxury market, so it makes sense that Louis Vuitton Moet Hennessy wants to penetrate that market. Second of all, Tiffany's is in a sort of turnaround plan right now, and it hasn't fully taken hold yet. So they could really use LVMH's help in all of this, in the entire process. Now, LVMH would also get better exposure to the U.S. market. We know that Tiffany's has about 300 stores globally, but here in the U.S. is where the majority of their stores are. So if LVMH could sort of penetrate the luxury jewelry market here in the U.S., that would really help out the company. Now, LVMH and Tiffany's have not said anything about this revised proposal, but the company did say that they were in preliminary talks back in the end of October.
At least based on the stock move, it looks like Tiffany's investors are liking what they hear. Thanks for that, Heidi. Well, coming up, the president of MasterCard North America joined us on the company's outlook for the big holiday shopping season. Don't go away. Well, the payment industry is in focus with Black Friday right around the corner. And joining us with more insight is Craig Vosburgh. He is the MasterCard North America president with me here in studio. Craig, we're a week out from the big start of, or official start of the holiday season, although you could argue that we've been getting sort of the notices for sales coming in. You've got a good visibility on the space. What are you seeing as you look to the holiday season?
Well, we've continued to see positive trends in consumer spending. Consumers are continuing to demonstrate that they seem to be feeling good about their financial situation, and spending has continued to trend up each month when we look at it on a year-on-year basis. Through September and October, we were seeing year-on-year increases on the order of 3.5%, as compared to the prior year. And that's underpinned by some pretty solid fundamentals. Unemployment continues to be low. Consumer confidence continues to be high. And I think as we look ahead to the holiday season, we expect that to translate into healthy spending levels for the coming season.
I know we talked about this before, but how much of an impact do you expect the tariffs to be, given that there's still uncertainty right now? December 15th is kind of the marker we've been looking at for sort of consumer-facing tariffs. Do you expect that to weigh on shoppers at all as they look to sort of pile up on the holiday season?
I don't think in the near-term holiday season, I don't think that's a top-of-mind issue for most consumers as they're thinking about Christmas shopping and holiday season shopping. I think the potential impact of that could be longer term as the impact of any tariffs that may manifest themselves begin to work their way through supply chains and ultimately through potential pricing changes down the road. But depending on where things land with the negotiations, that may or may not happen, but not something that I would anticipate being a short-term implication.
Let's talk about a headline that came down in the payment space today. PayPal announcing it is acquiring shopping and rewards platform Honey for approximately $4 billion. Now, you yourself had an announcement a few weeks ago, I think, to launch the one-click checkout with some of your partners, including Amex and Discover as well. I mean, this kind of seems to speak to sort of the increasing need to reduce the friction as shoppers go increasingly online. Mm-hmm. When you look at what's happening with PayPal today, how do you see that panning out in terms of competition for what you have, the efforts that MasterCard has pushed through?
Well, I think I'd look at them as being different things, really. They're aligned with an overall trend, which is trying to invest in things that deliver a better consumer experience and deliver more value to consumers. The PayPal news is very recent, new news, but I think it's consistent with the idea of them extending the value they provide to consumers as part of the shopping experience. PayPal is a great partner of ours, and things that they do to enable consumers to be more to purchase more conveniently and make more purchases using MasterCard products as the way to pay for them, which is the way that many PayPal transactions are actually paid for. In our view, that's a good thing. And we like to see that depth of engagement, and we work closely with PayPal to make sure MasterCard products are an important part of their offering, and that it's that they're being provided to consumers in ways that are easy to use and very safe and secure. So that's all good. The one-click checkout, click to pay, as we're calling it, is an industry initiative that's also aligned with the same objective. So many payments industry objectives are about making sure payments are convenient, ubiquitous, and secure. And this is an initiative that's focused in particular on the guest checkout experience that we all encounter when we're shopping online, to enable consumers to basically click one button and go through a very seamless checkout process that's also a very secure process because of the technology that we put behind that to ensure that those payment credentials are being used appropriately. All aligned with that same objective in a digital age where consumers are increasingly accustomed to engaging with the world around them through these digital devices and very seamless experiences. We need to make sure that the different ways that they have to engage with MasterCard are keeping pace with that.
One of the things that we've seen over the last several weeks are these headlines coming out of tech companies who are increasingly pushing into the payment space. Google coming out with news that they are looking into checking accounts. Facebook has been looking into their own payment system as well. You know, when you look at that, we know MasterCard, for example, has partnered with the likes of Apple. Do you see these tech companies as potential competitors, or do you look at what they're doing and say maybe that's an opportunity for MasterCard in terms of a partnership down the line?
Yeah, we look at these much more as being opportunities. And again, it all comes back to the idea of serving the consumer on the terms that the consumer wants to be served. And so many of the great experiences that we've come to expect as consumers are digitally enabled. There's a lot of great value and great work that payments networks like MasterCard provide, that banks can provide. Fintechs and other large technology platforms play an increasingly valuable role in the ecosystem of developing and delivering these digital-first, very intuitive, easy to engage with experiences to consumers. That's a way for us to deepen our engagement in commerce because oftentimes those digital interfaces become a gateway to transacting. A way for consumers to purchase things, to move money between individuals, to make payments for things. And that for us is an opportunity to play a role in that. And that's exactly what we're doing by developing our own digital assets, ensuring that we have the right level of security behind those transactions, partnering with those kinds of organizations to deliver the kinds of services they want to. The Google example that you mentioned, they're partnering with Citibank, a great partner of ours. And of course, that just deepens the opportunity for both Citibank and then MasterCard by virtue of our relationship with them to serve a broader array of consumers.
You talked about fintech, and a partnership that you recently severed is the one with Libra. Obviously, MasterCard's not the only one. There are others that severed that partnership. Where do you see the future of that right now? I'm wondering, number one, why MasterCard decided to opt out, and is this something that you think eventually maybe you can revisit once the regulation, once sort of the specifics around it are more firmed up?
Well, I think I'd look at it this way. That initiative really, it centers on a couple of converging concepts, the utilization of blockchain technology and a development of a cryptocurrency to serve the broader objective of increasing financial inclusion. Those are two things that we are also very invested in and very committed to. We as a company have had a long-standing commitment to increasing financial inclusion and ensuring that as many people around the world as possible have access to one of the networks that powers the modern economy. The electronic payments system is one of those networks, and being connected to that is an important means of ensuring that individuals benefit from economic growth and opportunity. So we remain very committed to that objective. We have a number of initiatives that we're pursuing on our own, and we will continue to do that. Some of those may take advantage of blockchain technology. We feel the better path for us at this point is to stay on the course that we're on. We made a
Say
commitment.
pursuing on your own. You're talking about cryptocurrencies with a partnership with somebody else, or
With the financial inclusion initiatives, virtually everything we do is in partnership with somebody because of our model being a B2B model. But the financial inclusion initiatives are, we're on a path to deliver on a commitment we made a few years ago to bring 500 million people into the modern economy by connecting them to our payments network. We're well beyond 400 million. We'll exceed the 500 million in the next few months. That's the kind of thing we want to stay focused on while we develop our own blockchain capabilities, our own blockchain technology, and look for different applications to make that technology useful in the market.
Okay, Craig Vosburgh, great to have you in studio.
Thank you. Great to be here.
Well, this week on Influencers, Yahoo Finance's editor-in-chief Andy Serwer sits down with Darren Walker. The Ford Foundation president weighs in on everything from his personal journey to those Americans at the lower end of the economic scale. Take a listen.
They're invisible often to elites. They're invisible often to people in our milieu in a city like New York. But they have a life, and they have a narrative, and they have aspirations and dreams. And my concern is that their dreams and aspirations are being asphyxiated by a kind of pernicious inequality that makes it impossible for them to believe in the American dream. And when the American dream dies, America dies.
And you can catch the full episode of Influencers tonight on Yahoo Finance. Coming up, a grim new assessment for global growth from the OECD. Stay with us. Welcome back to the ticker. Let's do a quick check of the markets. We've seen red arrows across the board, and it's been pretty flat so far. The Dow is down 9. The S&P 500 pretty flat right now, as is the Nasdaq. Let's get to Scott Gamm on the floor of the New York Stock Exchange. Scott.
Hey there, Akiko. Stocks building on yesterday's losses when we were worried about trade tensions between the U.S. and China. No evidence that those tensions have dissipated at all, although when you look under the hood at the Dow, you will notice that some of the trade-sensitive stocks that were down big yesterday, like Caterpillar and Dow Inc., are actually rebounding today and are among the best performing stocks in the Dow, which, by the way, is still below that critical 28,000 mark that we reached earlier this week and at the end of last week. Now, one notable part of today's market action is the surge in the VIX, up over 3%. It's still at a depressed level, just above 13, but it is interesting to see the VIX surge on a day when stocks are largely flat or slightly in the red. So that suggests that some investors out there are preparing for more volatility after several weeks of big gains across the markets. Now, Akiko, we're also keeping an eye on L Brands. The stock is surging. It's the best performing stock in the S&P 500. It's up about 9%. Its earnings were lackluster for the most part, but investors were impressed with the company's fourth quarter earnings guidance, hence the surge in the stock today. Akiko.
Okay, thanks so much for that, Scott. So straight ahead, a major new warning from the OECD on global growth. We'll be back in a minute. world economy is growing at its slowest rate since the financial crisis, and the OECD warns government's indecision partly to blame when it comes to elected officials dealing with concerns over trade wars, climate change, or the digitization of their economies. The chief economist states in the report, quote, "It would be a policy mistake to consider these shifts as temporary factors that can be addressed with monetary or fiscal policy. They are structural." Joining us is Julian Emanuel. He is Managing Director and Chief Equity and Derivative Strategist at BTIG. Julian, that's a pretty grim warning to say that it's not enough to push on the monetary side or the fiscal side. Do you agree with that assessment?
We do, actually. If you look at the last 2 years, it's a convergence of a number of things. China, we know, has been slowing for some years now as it makes the transition from a manufacturing-based economy to a consumer-based economy. At the same time, you've obviously had these trade wars, which is arguably redrawing the rules of what's worked very well for the last 40 years. But at the same time, there are other aspects, places like Europe, which have the capacity to engage in fiscal stimulus, but aren't. And so, really, what we've come to the conclusion at this point is that monetary policy, which has done most of the heavy lifting in the last few years, is really sort of running out of its effectiveness. So what we think you need going forward is really the concerted effort. The good news is that this slowdown in growth has been expected, is largely discounted by markets. And from our point of view, if you get some positive geopolitical news, there's potential upside in 2020.
Well, that's a big if, right? If we're talking about something like U.S.-China right now. You talked about the structural issues. I mean, if you look at something like the U.S. right now, there is an argument to be made that, yes, maybe the markets are relying too much on the Fed. And you look at the fiscal side and that growing debt. Even Fed Chair Jay Powell saying, look, that's a warning sign right there. Maybe not in the next 10 years, but down the line. What are some other structural changes that you think that need to happen to get the growth back to where the potential is?
Well, there's no question about the fact that, the deficit as it's been, you've already engaged in modern monetary theory in a manner of speaking, given the fact that we're about to run $1 trillion deficit and have done so for a number of years. But, there are prudent ways of actually doing it, and clearly the part of the political discourse is thinking about changes in tax policy, but also changing the spending geared towards infrastructure, which we think really is a major part of any sort of push that's going to send the economy to the next level.
Looking to year end, you said you expect there to be a bit of a pullback. How much of this is about the geopolitical headlines we are expecting, whether it's a positive or a negative? How much of it is just about what we're seeing, at least as it relates to central bank policy?
Well, the fact is the market has had an absolutely extraordinary run, not just year to date, but in particular in the fourth quarter so far. So from that perspective, a breather actually would be reasonably healthy for the market. But yes, in fact, there's no question that there is enthusiasm built into prices here, that there is going to be an outcome to the trade war. Perhaps by year end, it wouldn't surprise us at all if it carried into 2020.
Have we seen that expectation shift already based on some of the headlines we've gotten over the last few days?
They seem to shift over a course of hours or minutes sometimes. Look, I guess the last headline was the Chinese side basically expressed optimism, and obviously there's some concern around what the Hong Kong bill is going to cause in terms of a reaction. But from our point of view, it's all posturing. When push comes to shove, both China and the U.S., the president is in a re-election year. Consensus GDP growth for next year is 1.7%. The fourth quarter looks like it's looking sub 1%. Those kind of growth numbers, the president needs to create upside surprises to those numbers to help his re-election chances. We think there's a deal.
Okay, we'll see if that forecast holds. Julian Emanuel, great to have you on today. Well, how Charles Schwab's plans to reportedly take over TD Ameritrade may impact the booming ETF industry and retail investors. We're going to be discussing that on the other side of the break. Don't go away. Well, a potential mega merger could shake up the brokerage industry. According to multiple reports, Charles Schwab is interested in buying TD Ameritrade for $26 billion. This comes after Schwab slashed commissions to zero, causing other brokerages to follow its lead. Joining us is Sean O'Hara. He is the president of Pacers ETF. Sean, let me just get your thoughts on this possible merger. What is the potential impact to the ETF space?
Well, first off, Akiko, thanks for having me. I think this is long-term probably great news for the ETF business, but let's just talk about the merger for a second. This is about scale for Schwab. They're making a big transition into asset management and full-service asset management, and in order to do that, there are significant costs that are involved in running those types of investment platforms. And I think they feel like in order to compete with the big players in the space, they need to have scale. And that's what I think this transaction's about. What it means for the ETF business long term is that more and more people get involved in the asset management side of it, and particularly in helping people invest and providing advice. I think the trend that has been going on recently with ETFs continues. There's been a significant growth in the ETF business over the last several years, and that trend is continuing again this year. In the United States, there's roughly $4 trillion in ETFs. And I think most people expect that that will continue to grow. And it will put pressure on the traditional mutual fund business to continue to grow alongside of it. For every dollar that's come into ETFs over the last several years, it's almost as if an equal dollar has come out of mutual funds. And so I think as these platforms grow, as the services that they provide, which are great for investors, continue to be put into the marketplace, more and more people will choose exchange-traded funds as a part of their investment portfolios and their solutions for savings and retirement. And so I think this is a good thing for the industry.
Yeah, no question. If you look at the brokerage space as a whole, there is this expectation, it sounds like, based on today's news, that there could be more consolidation. We were talking about E-Trade earlier with Brian Chung, given just how much they get revenue from the commissions themselves. Where do you, when you look at somebody like an E-Trade, what are the potential acquisition targets do you think they could be looking at?
There's probably some smaller competitors in their space. We're starting to see this consolidation take place on another part of the business, which is the TAMP business, which stands for Third Party Asset Management Platform. The big player in that space is Envestnet. They're a publicly traded name. But you're seeing some of these smaller TAMPs, in order to compete with Envestnet, start to merge, or you're seeing acquisitions. And so I think this is the beginning of a trend where you'll see bigger players taking out smaller players, or players of equal size perhaps deciding to join forces so that they can continue to grow and they can compete on the cost side with these big behemoth platforms and absorb those fixed costs and spread them over a bigger asset base.
Sean, you pointed to the growth you've seen in ETFs and a lot of the money moving from mutual funds to ETFs. What do you think is driving that?
Well, I think a couple of things. There's been a tremendous amount of innovation. If you just think of us as an example, we didn't exist as an ETF company a little more than 4.5 years ago. In the last 4.5 years, we've accumulated about $5.3 billion in assets under management. And it's mostly because we are, sort of pushing the envelope and creating innovative and unique strategies for investors. And so that's part of it. There's been a tremendous amount of work done in creating new solutions in the ETF space. I think some of it has to do with the low-cost nature of ETFs versus traditional mutual funds. I think it has to do with the ease of ownership. There's not a lot of paperwork, if any, involved, and you can buy and sell during the day. And so, I think this evolution in the ETF business is born out of what the ETF is delivering in the market, which is a better way, perhaps, for investors to put money in pooled investments and accumulate their wealth over time.
Some good takeaways there. Sean O'Hara, appreciate your time.
Thank you so much.
Coming up, what investors and car lovers should expect from Tesla's big electric pickup debut tonight. We will be back in just a few minutes. Welcome back. Let's get to our next group of tickers. McDonald's is being sued by a group of employees over issues of workplace violence. BJ's Wholesale Club is sinking after reporting a slowdown in one key metric. And Tesla is preparing to unveil its hotly anticipated electric pickup tonight. But first to McDonald's. 17 Chicago area workers now suing the fast food chain, saying it has failed to address violence in the workplace. Heidi Chung joins us now to help break down this lawsuit for us. Heidi, what are the specifics here?
Hey, Akiko. Yeah, so like you mentioned, 17 employees across 13 different McDonald's locations in the Illinois area are suing McDonald's and essentially saying that there aren't proper things in place to protect them from workplace violence when it comes to these violent customers at these locations. So what these plaintiffs are arguing is that McDonald's was essentially just negligent, and they're asking the court to take immediate action because their safety is on the line. So a couple of the main arguments that they are making include first, McDonald's failed to protect workers by extending work hours late into the evening. So these plaintiffs are arguing that the 24-hour locations are dangerous because more crime typically happens late in the evening. And second, they're saying that the store redesign initiative that McDonald's launched recently has actually made it more dangerous for these workers, because if you remember, old McDonald's locations, the physical locations, have a barrier between the cashier and the customer. But with the new redesign, these futuristic redesigns of these McDonald's locations, there are two separate counters. So there's a counter for the cashier, and then there's a walkway in between that and another area that you can pick up your mobile order or your kiosk order from. So they're saying you're opening up this area for potentially more crime to occur. And third here, they're saying that the company provides inadequate training for these employees to protect themselves when there is a violent situation. So a couple of the incidents that these plaintiffs have put into this lawsuit include a customer jumping over the counter and threatening employees with a gun, a customer jumping over the counter and then disrobing themselves, and they threw kitchen equipment at workers. So these are very serious issues, and these plaintiffs are asking the court to take immediate action. Now, I did reach out to McDonald's for a comment. They sent me the following response, quote, McDonald's takes seriously its responsibility to provide and foster a safe working environment for our employees, and along with our franchisees, continue to make investments in training programs that uphold safe environments for customers and crew members. In addition to training, McDonald's maintains stringent policies against violence in our restaurants. Now, Akiko, when we look at McDonald's as well as a lot of other fast food restaurants, they are franchisee owned. So McDonald's has a ton of restaurants globally, 90% of those restaurants are owned by franchisees. So it'll be very interesting to see how this plays out. But of course, very, very serious concerns here.
Okay, and I know you will be following or tracking the very latest on that front. Thanks so much for that, Heidi. Our fifth ticker is BJ's Wholesale. The membership-only warehouse chain is slumping after reporting mixed quarterly earnings. The retailer also narrowed its full-year profit guidance, but same-store sales rose year over year. Brian Chung is back with me. So, Brian, it looks like a little good news mixed with the bad news?
Yeah, well, good news, but for a retailer, you never want to see the top line number going down. So when we talk about their performance, I mean, it seems like it was kind of mixed. They actually missed on the top line. So revenue came in at $5.17 billion. That fell short of the street's estimates of $5.3 billion. On the bottom line, that meant 7 cents of adjusted earnings per share, which actually beat the street's estimates for a loss of 1 cent. So, okay, great that they had some capital changes that they could get to, make sure that they beat on the bottom line. But on the top line, you're actually missing on what the street was expecting. And a lot of that was because of group revenues. So group revenues actually were flat to last year, $3.23 billion. And that's short of estimates. Actually, the street had expected maybe another $100 million in revenues there. Now, BJ's is a wholesale club. They do compete with the likes of Costco, although they are much smaller in scale, don't have the international footprint that Costco has. Comparatively, Costco, they actually reported in early October, but consider their group revenues growing 7% to $47.5 billion when they reported last month. So, look, BJ's is just not juicing the top line revenue like Costco is. And even though because of the scale, it's not necessarily fair to compare BJ's to Costco because they have a different demographic, because they're both still at the end of the day wholesale retailers, you do wonder if BJ's maybe isn't capitalizing off of some of the same retail trends to do as well as Costco is doing. For what's worth, Christopher Baldwin, the CEO, saying on the call that, look, there are some bright spots. We had the highest number of paid members in history, but said, quote, we've made so much progress, but we all know we have more work to do.
And this is more regional, right? I mean, we were saying this earlier, that these stores are much more sort of in the East Coast as opposed to Costco, which has an international footprint. So not exactly an apples to apples comparison.
Right, yeah, California colleagues like yourself apparently not familiar with BJ's. I grew up around a BJ's and a Costco where the two of them were really kind of right next to each other, and people would basically price shop to see which membership they wanted to sign on with. But at the end of the day, it's all about memberships with these clubs, right? It's not necessarily about even the revenue for people that are walking in the store. You can still monetize a customer that doesn't buy anything because they buy the membership. For what's worth, BJ said that that's maybe a good bright point because they have the highest number of paid members in history. They said a lot of that is actually even a younger demographic, so kind of bullish for the future. But on the other hand, you have them facing these headwinds right now of lower top line revenues. So they said that's why they had to kind of narrow their final fiscal year projections for the end of the year. They actually said it could be 2 cents higher on the bottom end, but it would actually be also 2 cents lower on the higher end. So I think analysts are maybe not so excited about the idea of, okay, yeah, on the lower end it's a little bit higher, but at the same time, the ceiling is now lower for what this company can deliver by the end of this fiscal year. So I think that's why you're seeing some of the dramatic stock movement today by it being down over 7%.
Yeah, that's a pretty steep sell-off. Thanks so much for that, Brian. Our sixth ticker of the day is Tesla. CEO Elon Musk expected to reveal the company's first electric pickup, dubbed the Cybertruck. This comes after Ford revealed its first electric SUV this month. Emily McCormick is back with me. And Emily, Elon Musk teased the truck as Tesla's best product ever. That's a pretty high bar to set there.
It absolutely is, but there has been a lot of anticipation around this Cybertruck launch. We have been getting hints and bits and pieces of what this actually might entail. Some of these may have been a bit exaggerated, but we'll actually be getting these specs later today in LA. So looking at some of the things that Elon Musk has teased previously, he said its starting price will be below $50,000. He said it will be able to parallel park automatically and have a 360-degree camera and sonar. He's also said you'll be able to plug power tools into it. Said last year that a Tesla pickup truck would have a range of at least 400 miles. And then one of the biggest claims he's made so far is that it would be able to tow 300,000 pounds. Now, analysts are saying that is extremely unlikely. If we look at the 2020 Ford F-150, that's available convention tow rating is just 13,200 pounds. So hopefully we'll actually be getting some of these more realistic specs from Tesla later today.
Yeah, I mean, what is the demand, you think, for a truck in this space? We've talked a lot about the demand for SUVs and trucks in non-electric cars, but this is sort of new territory for Tesla.
Well, Musk has acknowledged that the buyer of the Cybertruck might be different than your typical pickup truck driver. I mean, if you think about it, Tesla is known for more of its slick design, just that consumer who really does want that electric vehicle. That's one of the things that analysts are concerned about, though, is that is this going to cannibalize some of the sales of Model 3, Model X, and the forthcoming Model Y, which we now know is going to be rolling out hopefully in summer 2020. That's the last update we got. Now, Tesla does have quite a bit of competition. We know that Ford has an electric F-150 on tap for late 2021. GM is planning its own all-electric pickup to debut in late 2021 as well. And then we know that EV startup Rivian, which is backed by Amazon, that's also planning a launch for late 2020.
Okay, we'll be watching for that big reveal. Thanks so much for that, Emily. Well, our seventh ticker of the day is Salesforce. The company's co-CEO, Mark Benioff, stressed the importance of activism in the community at its annual Dreamforce event. Take a listen.
Well, I try to model for other CEOs how to actually use their business as a platform for change, how to improve the state of the world with their companies. I am a part of different CEO groups, and when we get together, I'm not afraid to actually talk about what we're doing. It's one of the reasons why I wrote the book Trailblazer, so that CEOs will have tools and guidance and know how to move forward. This is really important today. There's not enough tools for CEOs. There's not enough role modeling for CEOs. And we have to give them the permission, the psychological permission, that it's okay to act this way. They don't have to just be about shareholder return. They can do more. That's why I'm so excited that the Business Council and the Business Roundtable specifically have started to talk about being more about all stakeholders. I think also very important, the overall education of our children in our public schools. I think every CEO has to adopt a public school. I have. Salesforce has adopted 107 public schools. We've given over $70 million of direct cash investment to our local San Francisco and Oakland public schools, plus the volunteerism, the mentoring, the technology that goes with it, a full package in partnership with the superintendents and the principals. These are the things CEOs can do. If you're the CEO of a company like Salesforce, let's say you're not in San Francisco, you can ask yourself, have you adopted your local public school? Just go down, knock on the door of the principal, introduce yourself. You'd be surprised at the power your company can have to improve your local public schools. And do you want to know who are in those schools? It's the children of your employees.
Right.
So it's in your interest to do that.
Yahoo Finance's Julia LaRoche, who spoke with Mark Benioff, here with me at the desk. Mark Benioff has never been one to hold back. He's been quite vocal in his criticism of some of the tech companies who he says aren't doing enough in the community. What else did he say about the need for maybe corporate America to maybe step in more to be involved in the community?
I mean, Mark Benioff has always been this way. When he started Salesforce back in 1999, well, actually it goes back to earlier when he was at Oracle and he left because he said something was missing in his life. And it was this idea of, a different type of business model, a different type of company, which they built at Salesforce. And now he's saying, look, capitalism as we know it is dead, that you need a new type of capitalism. And he is not afraid to call companies out, especially when they violate trust. He's called Facebook out. He called them out before Cambridge Analytica even broke. I thought it was interesting when he said that CEOs need to get comfortable with the psychology of sticking their neck out there, of taking a stand. And also, that's a really great challenge. Go adopt a public school. He went and knocked on the door of the principal's office at a middle school in the San Francisco area, and he adopted it. He just mentioned that all of the executives there have to adopt it. So imagine the change you could have in your community if you just adopt a public school.
Yeah, you talk about Benioff saying, he's been quite critical of saying capitalism is dead as we know it. Did you get to ask him at all about how he sees the 2020 Democratic race shaping up?
We didn't talk specifics of how it's going to play out, but I did bring up the criticism of capitalism from candidates. And one of the takeaways is he's okay with higher taxes. He does think wealthier individuals should pay more. He thinks companies should pay more. He supported Prop C in San Francisco. He did not give specifics on what that looks like. He acknowledged, look, I'm not an expert when it comes to it. But you have to look at taxes as the business school mindset is, oh, don't pay taxes. Taxes are bad. Say no. Your company say no to taxes. But really, you have to address some of these societal issues, and sometimes that means, paying a bit more, whether it's homelessness in San Francisco or other societal issues we face.
Okay, Julia LaRoche, appreciate you bringing us that interview. Well, straight ahead, the surprising number of consumers looking to bricks and mortar stores for their holiday shopping this season. The CEO of RetailMeNot joins us with the details. Well, retail is in focus, with Macy's and L Brands recently posting quarterly earnings. After the bell today, companies including Gap, Nordstrom, and Williams-Sonoma slated to report results as well. Joining us is Marissa Charlton. She's the CEO of RetailMeNot. Marissa, great to have you on today. Let me just get your read on earnings so far, because you've talked about how the department store earnings aren't exactly matching the big box earnings.
Yeah, that's right. And thank you for having me. What we see in Q3 is actually a tale of a couple of different cities. So we see that there's certain retailers that are doing really well, and department stores, unfortunately, didn't necessarily trend as well with regards to Q3. So consumer preferences from RetailMeNot data are much more oriented around big box department stores and shopping at stores that are really embracing this intersection of mobile commerce and in-store commerce and investing in store experiences that are breaking through. So when you look back at Q3 earnings and you look at some of the retailers that are not necessarily faring as well, you see that these are retailers in transition and maybe not moving as fast as, for example, Target is or Walmart is with regards to this intersection of mobile and exceptional in-store experiences.
How do you think that translates into this holiday shopping season? We've heard a lot about sort of this omni-channel experience of making sure that you've got your digital strategy, but at the same time trying to increase that foot traffic into these bricks and mortar stores. Who do you think is best positioned right now as we go into the heart of the holiday season?
Yeah, great question. I mean, I think so far, optimism for Q4 is actually really strong with predictions of growth upwards of 15%. But November alone, really strong progress with 2 multi-billion-dollar days, our RetailMeNot Cashback Day, of course, and then Veterans Day. And what we saw with those particular brands is these are retail experiences that are capitalizing on both mobile shoppers as well as taking advantage of the fact that consumers in November and early December are really loving to go into a store. So RetailMeNot data says that 80% of consumers still plan to go into a store in addition to shopping online. So the retailers that are investing in pop-up shops, store-in-store experiences, and even influencers in store as a way to sort of capitalize and take a little bit of a competitive advantage in addition to what they're doing in their mobile efforts are the ones that are really winning.
One of the things that we've all noticed is these holiday promotions are coming earlier and earlier. When you look at the landscape over the next several weeks, we've heard that the consumer sentiment is still very strong. What do you expect, or what is your data pointing to in terms of the amount that shoppers are willing to spend this holiday season and how that compares to years past?
Sure, it's actually up. So in particular, so a few things. One, yes, it started earlier. In fact, it started with Amazon Prime Day. That is the official kickoff of the holiday season. And because there's 6 fewer days in this holiday season, because of how late Thanksgiving is, we actually saw Black Friday start now. It started around November 1st, and the offers are out there and available for consumers already. But we are seeing that there's an increase specifically in the Black Friday to Cyber Monday intended spend of about 15%. So consumers just over that weekend will spend upwards of $800 on everything from electronics to apparel to gifts, even things for themselves, which is up about 15% versus last year.
Okay, Marissa Charlton, great to have you on today. Thanks so much for joining us.
Thanks for having me.
Well, coming up, there are smartphones, smart TVs, smart fridges, and smart lights, and now Amazon debuting a smart shelf. We will explain next. It is our last tick of the day, and it is Amazon, the e-commerce giant, debuting its Dash Smart Shelf. It's a scale that doubles as a shelf for office supplies, so when products run low, it automatically reorders the items. We've got Yahoo Finance's Brian Chung, Emily McCormick, and Heidi Chung all back to weigh in. Brian, what do you think?
Well,
Seems pretty convenient.
Amazon's strategy is to throw things at the wall. Remember that they have a microwave that actually has Alexa built into it. And you really question about whether or not these are products that people would actually buy. But look, Amazon has the resources and the money to try these types of things. So Sure, why not a smart shelf?
Why not try it? But Emily, will the idea stick?
Well, right now, this is really geared at small businesses. So Amazon is launching a trial for the next month with some of these small business partners before broadening this out to some of Amazon's business partners starting early next year. So we'll see if this ends up catching up steam.
And Heidi, the last word to you.
Honestly, I see a lot of things going wrong here, Akiko. I get the incentive, 15% off the supplies, but what if someone doesn't know that these are weighted and they come in and take a bunch of supplies and then Amazon automatically orders it and then there's a big problem? So I don't know how sticky this will be, but I guess we'll just have to see.
It's like that subscription model, right? Where you just add your credit card and it just renews before you even know it. All right, we'll see if the idea sticks. Thanks so much for that, guys. Stay tuned for the final round. That is coming up next.
Hello, everyone. I'm Jen Rogers in New York, and this is the final round. Stocks peeling back for a third day from record highs, despite some positive trade reports. For once.
And on Miles Up, this says retailer Macy's reported another downbeat sales and guidance outlook, further dividing the haves and the have-nots in the retail space. We'll cover that in the market action coming up in just a bit.
Plus, brokers unite. Schwab looking to take out TD Ameritrade, what it means for the industry and Main Street investors. And WeWork layoffs are happening. Will right-sizing the business get it back on track for an IPO? Plus, why is Mark Benioff comparing Facebook to cigarettes? We hear from him later this half hour. With us now, Yahoo Finance's editor-in-chief, Andy Serwer, to talk about all of today's market action. Or inaction.
I mean, this is tough.
This is
tough.
I took a screenshot of it about 15 minutes ago when it was literally it was 000 on the Dow and the Nasdaq. I mean, it's what is going. We have stocks trading lower, barely. Third straight day, investors were trying to figure out what's happening on the timing of the Phase 1 trade deal with China. maybe it's now coming again. Dow's off its lows for the session. We're looking very close to the green. Sector-wise, we've got some movement. So we've got energy, XLE's up 1.4%, communications services, XLC's up 0.5% here, and we've got a 1% move down in real estate. But let's just start here with the broader market picture, because I think it's actually kind of fascinating to see where we are right now.
I think that actually for the bulls, if you want to be constructive on this market, I think you feel fine with some rotations because you're right on the sector level. So materials are doing nothing, but no sector outside of materials is moving less than 0.3%. So there's still stuff happening on a sector basis, on an individual name basis. The overall indices are kind of just floating right there, but they're sitting essentially at all-time highs. You can't just go up every day, and also you don't want to see days add up where you're down 0.5% over and over. So I don't think that 3 lackluster days really shows the market weakening at all to me, Andy.
Well, first of all, you don't think it's a little groundhoggy when we say, well, there's trade news that's sort of ambiguous. Oh, and Macy's sales are down. Wow.
Yeah.
Boy, that's a rerun if there's ever been one. And then, but really there's that coupled with the paucity of news when it comes to earnings and interest rates. So, it's not earnings season and there's no news out of the Fed really. So this is what we got. I mean, the headline to me that I actually find the most interesting today in business news is that Congress wants to hear from Lighthizer and Mnuchin about the trade talks. And so I like that. Like, what the hell's going on? Yeah. Will you guys stop whipsawing us, the country, the economy, the global economy? I mean, really, this is like, it's getting to be enough is enough here. I mean, it's just crazy. Bip, 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 bip.
So maybe we'll get some more information on that.
I'm sure it's just going to be.
Could be a market.
I'm sure those will be
event.
super productive.
I know, but I'm glad someone's saying this is kind of getting a little out of hand here.
Well, it came up in the debate last night, and the answer was kind of just nothing, right? It was like, well, we need the farmers, but I guess we got to bail out the farmers, but like they just kept saying farmers. That was it. There was really no view on whether the trade war was necessarily good or bad.
Iowa primary is coming up.
Like I didn't get it. Right?
Well, Cory Booker did say that we have alienated so many of our allies that we need to be working with Canada, say, and mention them, but name drop Canada.
The winner
of the name drop
debate,
the EU,
right?
but that we've alienated a lot of people in the trade war, and now we have no friends to go fight China.
Everyone's got
New York
problems.
Times said won the debate.
Yeah.
Cory Booker. Well, they gave him the highest rating.
We got to talk about Macy's right now before we go.
Do we?
Do because
You don't want to do the debate?
No, it's not that I don't want to do the debate.
Which train wreck shall we talk about?
It's just Macy's here grabs a lot of attention and airspace for me personally as a person that used to hang out at Macy's, and now it's not good. It is really ugly here. Look at this. I mean, what we're watching right now, the retailer missing on their third quarter sales estimates. They slashed the full year outlook. This coming after the Target news.
Yeah.
Is this like a brand identity issue? That's what I kind of feel here. I have no idea what you go to Macy's for. And if I don't
think Jeff Gannett knows.
Well, that's even worse.
Right? I mean, our old friend Jeff Mackey, I kind of cited him in my note this morning. He's like, look, dude, speaking to Jeff Gannett, you have one store that is a tourist location, and yet in your press release, you're saying that continued soft international tourism is part of hurting your results. It's like, I know it's a big store. It has many levels, but it's not a well-run business right now with a coherent thesis.
And let me tell you something. I mean, any retailer on the planet would kill to have the foot traffic outside of that store. I mean, you have no excuse. I don't care about foreign tourists being down. I mean, it must be, and you can check me on this, 250,000 people a day walk by that store. And the reason I know that is because that's the number of people who walk through the Oculus, which is 250,000. So I bet it's more than that.
Yeah, it's going to Penn Station.
So think about that. I mean, hundreds and hundreds of thousands of people walk by that. So if you can't turn this into a destination, which it is not, then that's your problem.
Then you're back to a real estate play, maybe.
Right.
Because you talk about the foot traffic and where they are.
Yeah. Someone could do something there.
We just had it up. 5-year chart pretty much says it all. The stock's now 75%. 75%.
But you mentioned Target, and we talked about Target yesterday when they turned in those BAFO numbers, and stock at an all-time high, by the way, which is a far cry. In fact, it's just the opposite story. But they have this identity, Jen, And it is kind of has the coolness, and it's got a whole thing. It's inexpensive but cool. Now I understand that concept. There it is. Inexpensive but cool. Quick, what's Macy's? You just said it. I don't know.
No clue.
Right. You got to have an elevator pitch, and they don't have one.
Yeah.
Right?
They have a lot of escalators.
You need an escalator pitch or something, right?
Just full on escalator at 34th Street.
I bought a shirt there before the junior prom in 2005.
Oh, that's so cute.
There we go.
Last
That's it. Let's go to Scott Gamme. He's live on the floor of the exchange for more on this market. Scott, we were laughing about it earlier. I mean, just nothing going on in the headline indexes right now.
Well, yeah, Miles, and I don't want to look at today's action in a vacuum. So as you'll recall, we were down over 100 points in the Dow yesterday. Today we're down another 20. And of course, yesterday there were trade headwinds, or at least trade worries. So it may seem like we're still worried about trade just because the broader indices haven't rebounded from yesterday's losses. But then when you look under the hood, you'll notice, at least in the Dow, that some of the trade-sensitive stocks that were down big yesterday, like Caterpillar and Dow Inc., are actually rebounding today. They're some of the best performing Dow components. So there certainly is more action going on in specific stocks. And of course, you have to wonder if investors are buying the dip. Perhaps they're confident longer term that some sort of trade deal will be reached in 2019. Now, another sort of bizarre part of today's market action is the surge in the VIX. This is Wall Street's fear gauge. It was up 3% earlier today. Now it's up about 2%. It's still at a depressed level at a little over 13, and during past market sell-offs this year, we saw a VIX at a level almost double that. But still, you have to wonder, why is the VIX up 2% when the broader indices are barely negative? And so that perhaps suggests that investors are bracing for more volatility ahead. And stocks are still a stone's throw away from record highs, so there is room for stocks to come in, especially, when we have the holidays and a shortened trading week coming up. That historically tends to be volatile times for the market, guys.
All right, Scott Gamme live on the floor of the New York Stock Exchange.
Charles Schwab is in talks to buy TD Ameritrade, this first reported by CNBC. Technological advancements in recent years have popularized online trading, and those are part of the reasons that this merger seems to make sense. Charles Schwab joined Yahoo Finance's On the Move recently to discuss some of these changes. Take a listen.
In our case, our cost of doing business has gone down dramatically over the last 20 years because of technology. We're down to 15 basis points. We're probably the lowest cost provider of stocks and information and things of that nature, which puts us very competitive, being a low-cost provider. So technology, thank you very much. We would like more of it.
The acquisition, which Fox Business reports will be worth about $26 billion, would create a firm with around $5 trillion in combined assets. $3.8 trillion of that comes from Schwab, $1.3 trillion from TD Ameritrade. Now, of course, we've been seeing this zero commission fee move across the space. Was consolidation just all but inevitable here? It's just all about, you got to have scale?
It's another leg. I mean, first of all, TD merged with Ameritrade, Scottrade also, and one stock down, by the way, today we should mention is E-Trade, because it is not the target. And so, but I don't think that with this consolidation you're going to look for prices to go up. I think that the zero commission genie cannot be put back into the bottle, number one. And number two, I think you're going to start to see more and more of the new fintech companies get into this, so it's not like you're not going to have other choices. I mean, Venmo will introduce it next week or something like that.
Well, we all learned a lot about this space as the fees went to zero over the course of the fall. The fees don't matter, right? I mean, a business only cuts something to zero if they weren't making money from it in the first place. Now, for TD Ameritrade, they were still getting about a third of their revenues from trading commissions. They have pretty much a different business, I think, than Schwab. Schwab is cash management. I mean, they have almost 70% of their revenues from the money that you keep in your account at Schwab. They lend it to someone, they get a small fee, and if they do that with enough trillions, they end up with a couple $100 million. Their annual revenue is about $10 billion. So they end up with enough money to keep the whole thing going. That's really where it's all headed. And to Charles Schwab, that was the actual Chuck on the show there. To Chuck's point, like, it's the digital advances in this business are as obvious perhaps as any other. It allows them to create scale cheaply, right? You don't have to go and call up people and say, hey, do you want to put your money with us? Do you want to buy this stock, and then upsell them to make money? All you need is for Jen to put some money in an account, take that money, lend it to someone else, and make 10 basis points every single day, and all of a sudden you've got a real business.
And then they have products also with, reoccurring fees for those
They've
customers.
got advice products, they've got in-house mutual funds, and that is a part of the business, but really it's so cheap now to acquire that scale for that cash management, and the $5 trillion, if you can earn 8 basis points on $5 trillion.
Right.
That's a lot of money.
And the only bad news is just the environment that everyone has, Miles, which is it used to be 12 basis points this year.
Oh, sure.
Everybody's gotten
But everyone
squeezed.
has that problem.
I find it interesting that both stocks are higher. TD Ameritrade and Charles Schwab are both higher in here. We saw that when we got the first news on the HP Xerox deal as well. So it's these companies that where you're seeing maybe 1 + 1 could equal a little bit more, where they're kind of beaten down, especially with the TD Ameritrade, where scale is going to be able to help get you a little bit further towards victory. Also, TD Ameritrade, though, only coming back basically to where it was in September. It was a $50 stock in September before we had the zero commission action there. So it's just kind of back to business as where we were.
Yeah, it suggests that the acquirer is not overpaying, and that because there's not a lot of growth in the business, that this is a rational avenue towards that.
Combined player will have more scale.
Right.
There you go. All right, coming up here on the final round, WeWork layoffs sound like they are happening. Will right-sizing that business get it back on track for a potential IPO? We'll discuss, but first let's take a look at where European markets closed on this Thursday.
WeWork is now laying off 2,400 employees in its latest attempt to trim costs and refocus its business. In a statement, a WeWork spokesperson said the company is, quote, making necessary layoffs to create a more efficient organization. The beleaguered office sharing startup has endured several months of public scrutiny and internal turmoil, catalyzed by a failed IPO and the subsequent ouster of its CEO and founder, Adam Neumann. So, I mean...
Do you remember when they said that they needed money to lay people off?
Yes.
Right? That was one of the worst stories,
That's what they
business
just
stories.
did.
Then this is it.
Yep.
This is that today. Remember they said, yeah, we're raising capital to fire people. And then they got that capital, and now
they're
those
doing
people
it.
can be severed.
Yeah.
Yeah, I mean, this is like a true. There's a human cost here. I mean, these are people that are actually losing their jobs, and so you don't want to make light of that. However, it is, as you've been watching this train wreck in slow motion, it's even harder, I think, because 6 months ago they all thought they were on top of the world. Like they all, if you know people there, they all thought they all drank the Kool-Aid and thought this was going to an IPO.
I think what's interesting about the story from this distance now is like, if we go back 2 years, right? So let's take out all the hype that happened in 2018, 2 years ago. I mean, it's a pretty good business. Like it makes sense that there's an opportunity to basically just take some of the costs of putting your employees in a place off. I mean, a lot of their large customers, or a lot of their main customers, are large enterprises. You know, IBM. I think Verizon might have some WeWork offices. Like, it's a good business. It just didn't work with the whole like changing the world vision that Adam Neumann was working with. And I think the amazing part about it is like there was no middle ground between the two, right? It either had to be the world's most transformative thing of all time, or it has to be a massive train wreck. Like, why couldn't it have just been like a fine business?
Like, just be a real estate company that's for workplace sharing.
Right. I mean, IWC.
Simple. Just be the business.
There was all that other
It's IWC, right? There's an actual company that does this.
That's valued way
Like
lower.
they have a rival. They could just, you could get a small premium to them because of the shtick or whatever.
Right,
But
you can
somehow
have
it just,
ambitions.
they went to zero-ish.
Yeah.
I feel, they're drinking, apparently Reuters is reporting, and we would join you if we could. They're drinking Fireball over there right now at WeWork as they're waiting
Really?
to be called in.
Is that the layoff drink?
I guess so. I don't know, Fireball.
Hey, I didn't make the rules. Coming up here on the final round, we'll talk about why Mark Benioff is comparing Facebook to cigarettes. We'll hear from him right after this. But first, let's take a look at some of today's trending tickers right here on Yahoo Finance.
Reuters said they do. Salesforce co-CEO Mark Benioff is weighing in on Facebook's security and privacy controversies. And Yahoo Finance correspondent Julia LaRoche caught up with Benioff at Dreamforce in San Francisco earlier this week. She's back now. How was Mr. Benioff?
It was great. We had a wide-ranging conversation. There were a huge, massive tech conference, 171,000 people in
right?
San Francisco.
171,000 people
on the
totally?
ground, and
Totally.
then about 10 million that stream online.
The whole
171,000.
population
Okay, let me tell you this. Just to before we get into this discussion,
Jen's whole family was there.
I went to Chipotle and they ran out of everything. I've never seen
What a
Chipotle run out of
tragedy.
anything.
That's a
Starbucks, the line at
Good,
Starbucks was
nickel.
massive. It took me 33 minutes to get my coffee at Starbucks. So that just gives you a little taste of
Go to
how
Pete's next time.
massive it is. I'm a Starbucks loyalist. But anyway, I got to get to this. We talked to Mark Benioff about Facebook, the privacy concerns, and going back to Davos 2018, he compared them to cigarettes. So I asked Mark Benioff if it's too late for Facebook to turn course. Take a listen.
Well, you can see Facebook has in many ways become the new cigarettes. It's not good for you, they're addictive, they need to be regulated heavily. They've come out and said they don't care about truth in advertising. The government is going to step in and make changes in Facebook. It's their own creation. Instead of them being proactive and taking care of their own issues, they're waiting for the government to come in and take care of it. And not just the US government, European and Asian and Latin American governments are all going to take action against Facebook because of what they're doing and the behaviors that you can see. So that's a wake-up call for everybody. That is trust your highest priority. What are your highest values? What is the most important thing to you? How do you think about your business, your products, or your relationships with your customers or society? Every CEO has to ask themselves that question. What is their highest value?
Your wife calls you the regulator. What smart regulation would you recommend for those social media giants, the tech companies, Facebook in particular? What would be a smart policy, a smart regulation?
One thing that I think is so important if we want more trust in those companies is 100% transparency. How is that data being used? Where is it going? That's why I've supported not just the GDPR in Europe, which is their Data Protection Act, but also right here, we just put in place a new California Data Protection Act that I helped support as well. This is to help protect consumers in this new era where technology is operating in a way that even you may not fully understand. We have to have full transparency. We also need our own national data privacy law. I've called for this, I've written for this, it's extremely important. The government needs to act. This is something that we need to protect all of states and all consumers and children, not just here in California.
Yeah, and guys, he's also a father of 2 kids. So I asked him about how does he talk to his kids about social media, the use of social media, and he referred to Common Sense Media as I was looking it up later. It's a tool that helps parents decide, what on the internet or whether it's entertainment, technology, is good for their kids. And then also he praised Apple and Google for their iOS, their operating systems, using things that let you understand how much screen time, putting parental controls on those things. And this is a conversation that parents are going to have now. I don't have kids yet, but I'm just thinking about it. At some point I'm going to have kids, phones, social media. How do they use these technologies?
You know what's interesting?
They run roughshod over you, right, Jen?
Is that
I have them locked down.
the Silicon Valley is a pretty small community, right? And he has really called them out, and he's sort of, got Tim Cook on one side, and Tim Cook was there, and they sort of are able to criticize Facebook, and then Google is sort of in the middle, it seems like, and he criticized Amazon, but
They have a partnership with Amazon now.
Right, that's right. Salesforce has business relationships, Julia, with a lot of these companies. I don't know where they have one with Facebook, but it would almost be inevitable.
I think they do.
Right.
Yeah, and that's a question of how do you square that? How do you draw the line of when you do business or you don't do business? Because I know Salesforce doesn't do business with certain gun sellers. I know they have this office of ethics, and they look at different lines of business contracts that they have, and they'll review those. I don't know if we've reached that point where they would draw the line in the sand and say, no, we're not going to do business with you. And it is interesting that you're seeing a CEO call out another CEO, another management team, because historically it's like you don't talk about your competition, you stay in your lane. But maybe we do need more of that.
Yeah. It's interesting. I mean, it's right down the road. It's like, as I said, it's a small world, and he's doing it.
And he's done it with Jack Dorsey on Twitter as well.
Right.
Did it
head to head
on Prop C, and he also did this. He called them out before Cambridge Analytica. Also, George Soros, I know he's a hedge fund manager. He called out Facebook before Cambridge Analytica broke.
And then Sheryl Sandberg asked why. Remember that?
Yeah, well,
we're going to have to have you back, Julia.
There's more fodder to call them out on, the political ad spending, and more stuff to talk about.
Welcome back.
All right, coming up here on the final round, we'll talk about the Fed, the dollar, and markets with trader Amelia Bordeaux. But first, let's take a look at where financial names are trading right now, 35 minutes to go in the session.
calm before the storm. Our next guest is looking at whether unresolved global macro issues like trade and Brexit could trip markets up in thinner liquidity conditions at the end of the year. Amelia Bordeaux, founder and CEO of Market Compass, joins us now. So before we get into the possibility of a hiccup at the end of the year and some thin volume that could exacerbate that, can we just talk about what's happening right now? We've had a number of days in the market where we've just been sitting at the flat line. What do you make of that action? What should we be taking away from it?
I think investors are just really cautious right now heading into year end for hedge funds and real money funds. If they're up for the year, they don't want to make a mistake into year end and give back any of those gains. So especially everyone's just sitting pretty quiet here, waiting to see if we're going to get the phase 1 U.S.-China trade deal signed and what's going to happen in the UK general election. October 19th was Super Saturday in the UK when they were supposed to pass the withdrawal agreement, and that didn't happen. The BIN Act kicked in and Brexit ended up being delayed. So everyone's just kind of on hold. The global macro traders are on hold. These themes, like you said, Brexit and the U.S.-China trade wars have simmered down, but they're not unresolved. And so that can come back to bite people, to bite big macro traders into year end. So post Thanksgiving, we'll have the end of the month of November, and people will be kind of closing their books for the year. And they'll probably just trade the UK general election, but we'll probably be sitting pretty quiet unless volatility, really spikes in December, which it could. We'll see what happens.
Now, we've certainly had, Amelia, the possibility of a recession, I think, in the near term priced out by markets. You look at the curve, you look at what equities have done, and I think the bond market kind of on the longer end telling you there's not quite acute fears about recession. But as you look at the landscape in 2020, I mean, do you think that we're perhaps sleeping on how quickly fears about a recession could get priced back in if we do have some of these hiccups from events that we know are coming up on the schedule?
They can fear a recession, or recessionary fears can get priced in, especially to the yield curve, very quickly. I think first and foremost, we just have to get through year end, meaning the holiday shopping season. And it's shortened by 1 week this year because of the date Thanksgiving falls on. But let's see if we have a strong holiday shopping season. I mean, we should, just because there's good job gains. But remember, about a month and a half ago, we had a bad ISM read for manufacturing, and that really plunged bond yields and kind of spiked the VIX. So right now, U.S. data have been behaving. They've been stable, and that's a great thing. I hope it continues that way. But one of those indicators, especially like a manufacturing or services ISM, could turn down again, and that would make investors and traders nervous, and you see that reflected in the yield curve for sure. But for now, the Fed's on hold. The minutes just came out, and they were strongly on hold in the minutes. So that's going to help support the dollar. The dollar is actually it's being supported in two aspects.
Right.
One, it's safe haven bid because macro themes are unresolved, and the other is actually it's a high yielding currency now in the G10 because the Fed has actually halted cutting rates in the meantime.
Hey, Amelia, I mean, there's a lot on the one hand, on the other hand. Like, for instance, you were talking about the ISM, and actually there was another read that was just a little more positive. So here we go back and forth. I mean, are there really any trends that you can see, maybe even going into 2020 even, to hang your hat on? I mean, what would be a thesis like, I think this is going to happen, therefore that?
I think the yen is going to remain strong, and the dollar is also going to remain strong. Safe haven assets and safe haven currencies are going to remain strong throughout all of 2020 because we have the U.S. election coming up, and we also possibly may have way before that in December, we could have a House voting here for the impeachment of President Trump. Brexit is still unresolved, meaning even if the UK government wins a conservative majority in their general election, January 31st, 2020 is now the Brexit exit date. And we have to get through that and all of the subsequent trade negotiations that have to happen separately now between the EU and Great Britain and the United States. So there's a lot of things that are going to continue making the markets nervous into 2020. So we're really not out of the woods yet. And so anytime falls, the VIX falls like we are seeing now, it's down around 13. I'm a buyer of volatility through 2020, and I like to stay long with safe haven assets that year as well.
Amelia Bordeaux, founder and CEO of Market Compass. Thanks so much.
Thank you.
All right, coming up here, we'll have more on the final round. Plus, Elon Musk's cyberpunk vision is almost here. The Tesla pickup truck reveal coming in just a few hours. We'll talk about what truck guys and investors want to hear. We're back with that right after this. Back to the final round here on Yahoo Finance. Miles with them with you in New York. I'm joined by my co-host Jen Rogers and Yahoo Finance editor-in-chief Andy Serwer. The table here was talking mostly about truffles in the break because there's nothing going on in the market.
We're at all-time highs.
Let's look at what we got.
Talk about truffles.
We need a truffle pig.
That's right. Talking about expensive appetizers and $250,000 Mustangs.
Yeah.
None of the major averages right now moving more than 20 basis points. Of course, just a little bit below all-time highs. Of course, underneath the surface, got some big moves today in the retail space. Once again, Macy's in the spotlight. For more on today's market action, let's go to Scott Gamm, who's live on the floor of the New York Stock Exchange. Scott, 25 minutes to go. What's on your radar?
Well, Miles, I'm also watching retail, and you're really seeing some maybe erratic reactions in the retail space right now. Take L Brands, for example. The company reported pretty lackluster results. Comps were down, although they did reaffirm their full-year guidance, and yet the stock is surging over 9% today. It's the best performing stock in the S&P 500. This is the parent company of Victoria's Secret and Bath & Body Works. And, look, the stock has been punished so far this year. It's down over 30%, but perhaps a move that big is not exactly commensurate with the results we saw from the quarter. And then on the other hand, you have Macy's, which you guys have been talking about all hour. Really disappointing results there. Comps were down 3.5% year over year. That was much worse than expected. And yet Macy's stock is only down about 1%. Now, that stock too has been punished this year, down 50% so far in 2019. It's at a 52-week low right now. And the stock is down something like 80% since 2015. So when we were talking about a retail recovery in mid-2018, that has really not materialized for a lot of these retailers. Now, I think the only thing that Macy's really has going for itself is the fact that it's got a dividend yield of over 10%. But when you see stock declines of 50%, you have to wonder if that dividend yield is really worth it, guys.
All right, Scott Gamm, we'll talk to you after the closing bell.
It's time for Tech Howl. The auto industry is awaiting the release of the Tesla Cybertruck later this evening. Okay, I guess this is maybe what it's going to look like.
No,
It's
that's
the-
ridiculous.
I hope it doesn't look
It's
like
like
that.
a regular truck pasted on the back of a. It's like a, looks like a golf cart.
It's a golf cart, yeah. It's a golf. It's the longer like John Deere like
You know what?
lawnmower.
You know the thing that traffic cops drive, like the fake
Yes.
cars, like campus security. That's what that is.
It's like a bad Batmobile.
Did you guys ever play with those Duplo blocks?
Yes.
Like pre-Legos? It
Yeah.
looks like that to me. Dan Howley is here to help us sort through all of this news. Like, is this the truck? When's it coming?
God, I hope that's not the truck. If it is, then Elon Musk has a terrible. So he wants. This is basically the way he's laying this out. It will be Blade Runner-esque.
Okay.
Cool. Blade Runner's awesome. That is not Blade Runner. That looks like what the Weebles who wobble but don't fall
Yes,
down.
exactly.
What they
That's
drive.
it.
Oh yeah. Nice.
Look, that is just atrocious. I really hope it doesn't look like that. He said it's going to cost less than $50,000, and
Okay.
it's going to be better than Ford's F-150.
The thing is, if it's going to cost 50 grand, that might be the design that you can afford.
I hope not.
That might be all you can come up with at 50 grand.
I mean, so pickup trucks are the bread and butter of Ford, Dodge. You know, they're real Ram. Sorry,
Best-selling vehicle in America,
Chevy.
the F-150.
Absolutely, and you know they Ford. I'm assuming they're coming out with a similar electric truck at some point. They already have the all aluminum styling or more aluminum in them, so they could decrease gas mileage on them. So they're really focusing on that. But I really hope that it doesn't look like this. And Elon Musk says it will be better than an F-150, and Ford has said people have tried that
Bring it
before,
on.
but you're not going to do it.
You know what's what I agree with you. I mean, this is like such an opportunity because, as you say, pickup trucks. I mean, there's nothing more important to America. Well, there's probably about 5 or 6 other
Or to
things.
car companies.
Right.
Yeah.
Number one.
Cheeseburgers.
And then, right, yeah.
The NFL
Right.
pickup truck.
Used to say Chevrolet. We'll say pick. So, and then you got Tesla, this super hot brand, and like, okay, we're going to put these two things together right here at this moment. And this is an incredible opportunity. I hope they don't blow it.
So here's the thing.
Incredible opportunity.
They can't get out their own cars that exist already. They're falling behind on cars that have been announced, right? The Semi isn't out yet, the Y isn't out yet, and now they're announcing another vehicle, and God knows when this will be available for people to buy.
They need another
and how
U.S.
long it'll
factory.
take.
They talked
Yeah.
about one in Germany where they're opening up one.
Right, yes, but they need to get their just manufacturing straightened out before they come out with something else.
Good to have demand.
I actually say something about that because I find the same issue with some of the other cars that we've been doing stories about. These electric vehicles that are getting announced and then the long runway to when they're actually available. And maybe because we live in New York, we have other options while you're waiting.
Your kids
but in
will be
a
driving.
way, it's like, well, I'm waiting.
Right.
I'm going to do a shorter lease. Like, what am I going to do? Do I buy a car now? Maybe this is just a personal problem that I'm trying to work out. But I just wonder on a macro level if it does push off purchases because we're waiting for all these cars to come out.
It could. People might do something in the interim, like a shorter lease, or it could give them the opportunity to get ready to make a big purchase like that. Because a car is a lot of money.
Right, and maybe this thing hurts Ford. It's not hurting Tesla because Tesla doesn't have one.
Right.
Right.
And I got to say, as much as we hit Elon Musk for his grandiose diatribes about how he's basically the electricity god, he has made electric cars really freaking cool. I mean, we wouldn't have the Mustang, which, don't get me started on calling it a Mustang. That is just wrong.
Well, there is a real electric Mustang.
There is, yes, and those are awesome. But he has made electric cars really awesome, and I'm very excited for this. Whether or not it'll play with people who buy F-150s and who buy, Chevy Silverados or Rams, I mean, that remains to be seen. It'll have to have off-road capabilities, and we haven't really seen Tesla kind of take their vehicles off-road as much. We saw with the X that it can, sure as hell pull stuff very well, and that's something this pickup's going to have to do. But whether or not it's going to be able to be everything that current pickups are, I mean, I'm not so sure. But he's saying that it could have up to 500 miles range, which, whoa, that would just blow away everything else that he has.
You
out
drive
there.
right into Death Valley and get lost.
Yeah, right.
Which is what everyone else does, and then
you can
Death by GPS.
What time is the announcement?
It's later this evening. I assume it's about 9
tonight. That's like very
on the Pacific Coast,
Muskian.
West Coast.
Well, we'll introduce
8
a
p.m.
car in the middle of the
Pacific,
night.
So I'd have to wait up till 11
Right.
p.m. I
Yeah.
was just up late for the debate. I don't think it's going to happen.
I'd rather watch the cars.
Yeah, I
introduces
know.
a
It went
car in
on
the middle
for
of the
so
night?
long.
And then he rolls it out on stage. It's gonna look. It looks awesome. He's a good job at
We
it.
haven't talked about Elon in a long time. Dan Howley.
It's got a pickup truck.
Thanks for
Dan Hellie, not Elon.
No, I'm not. I'm sorry.
Thanks for bringing back a past frequent topic of
There
conversation.
you go. I'm sure he'll be back. Coming up here today in the final round, the Ford Foundation's Darren Walker on what the ideal president should believe in, why justice and fairness in our system of capitalism is key. But first, let's take a look at some of the most active stocks today here on Yahoo Finance. This week's episode of Influencers, Yahoo Finance editor-in-chief Andy Serwer spoke with the Ford Foundation's president, Darren Walker, about capitalism, the American dream, and what the ideal president should believe in.
Yeah, so Darren Walker is an interesting story, running the Ford Foundation, which of course is one of the nation's biggest NGOs, and he gives away millions and millions of dollars. So I said to Darren, you're a very popular guy. And he goes, yeah, I get a lot of phone calls. But he does have to meet with, and does meet with, captains of industry, CEOs and the like. And he engages with them in conversations about capitalism and the future of society, because that's really the Ford Foundation's mission, which is to understand and help our society progress, really, if you will. And so I talked to him a little bit about capitalism and the President of the United States and how he should engage with our society. Take a listen.
Well, at the Foundation, we are not a partisan organization, so we don't look at this from the standpoint of who is president. Ideally, we want to have an administration wherever we work in the world that believes in justice and fairness and equity. And so in this country today, there is no doubt, irrespective of who is president, that the scourge of growing inequality is having a huge toll. It is part of the reason why we are an increasingly divided nation, because people who work hard, play by the rules, find themselves feeling as though they are being left behind. And the data would indicate that too many of them are being left behind.
So I think what you're hearing there is Darren Walker trying to frame inequality as a nonpartisan issue. And that gets a little tricky because, first of all, do we agree on both sides of the aisle that there is inequality, number one? And I think most people do. And then the next step is that a bad thing? There are actually some people who don't necessarily think it's such a bad thing. Yep. And if it is a bad thing, how do we address it? And of course, the answer to each one of those questions gets more and more complicated and more partisan.
And I think also in this kind of post-neoliberal moment, right? Being an NGO 20 years ago, it was uncontroversial. Great, you're an NGO, you do great stuff. But that whole idea that you can be nonpartisan, I think, is somewhat of a quaint one in our current moment.
Yeah, and it's a difficult line to toe, to your point, Miles. And I think, he's a sophisticated guy, obviously, so he understands, it's a balancing act, but, it's part of his job.
Yep. And of course, you can catch Andy's full interview with Darren Walker of the Ford Foundation right here on Yahoo Finance. That starts at 5 p.m. Eastern, about an hour and 15 minutes from right now.
Coming up, is the road less traveled for investors and for possible outside gains paved by investing in small cap stocks? Our next guest says yes. Right now, take a look at some of 2019's big IPO stocks and how they're trading as we head towards the bell.
are lower on a Thursday, but small caps are underperforming, and it's a theme we've seen come up time and again this year. So what do small caps need to do to get back on track? Nancy Pryl is co-CEO and senior portfolio manager at Essex Investment Management. She joins us now to discuss. So Nancy, the Russell underperforming the S&P by about 6 percentage points this year. In your view, what kind of is behind that underperformance, and do you expect that 2020 will be a little bit more positive for the small caps?
So we are very optimistic, and thank you very much for having me. We're very optimistic that 2020 will be a better year for small cap stocks. What we have seen in the market really since the great financial crisis has been a move into the larger cap, more well-known, more well-recognized high growth names, much of that driven by both the position of the Fed as well as by an aversion to the perceived risk and volatility in the small caps part of the market. What we see today, though, are relative valuations that have not been this low since either 1989, 1990, or 1999, 2000. I would note the symmetry that here we sit in 2019, that perhaps there is some rhyming that will go on in history. What we think will lead to the outperformance of the small cap sector is a reemergence of improvement in the PMI and economic growth, as well as continued improvement in interest rates and strong earnings growth.
So is it just everything in small caps, or are there specific stocks that you like right now or sectors?
So we are focused on finding growth stocks within the small cap space. And we're particularly excited today because we think there are a lot of very dynamic, strong, multi-year growth themes where we are able to capitalize through our research bottoms-up stock identification process. Some of the areas that we like are the areas of security software and cloud-based software, innovations in healthcare, the energy transformation that we're seeing not only in this country, but around the world, as well as a reemergence of entry-level home building in the U.S.
So specifically then, where does that lead you to in terms of stocks that you like?
Right. So some of the names that we highlighted a moment ago on the screen are companies that would play off of those themes. Let me talk about a few in particular. Skyline Champion is a company that is involved in manufactured housing. And what we're seeing in manufactured housing today is, in fact, very different than what you might have thought of as manufactured housing a number of years ago. Manufactured housing, what we now call factory-built housing, has an advantage for the home builders as well as for the employees because you get consistency of manufacturing, and from the employee point of view, you get consistency of work hours. And we've seen a recent move by some of the smaller home builders to outsource their home building to the manufactured housing companies, and they then deliver prefab, pre-made housing pieces that can then be assembled in place on location. We think that is leading to a gain in market share as well as to improved margins by both Skyline Champion as well as its major public competitor, Cavco.
All right, Nancy Pryl with Essex Investment Management. Thanks so much for your time. We'll talk to you soon.
Thank you very much.
And Andy Serwer. See you later this evening.
Me too.
Influencers,
Yes.
5 p.m. Eastern, right here on Yahoo Finance.
Thanks, guys.
Coming up, we've got the closing bell on Wall Street. It's just about 7.5 minutes away, and we're going to get technical with our chartist friend, Brian Shannon. We are back in 2 minutes.
stock market on a tear this year. The S&P 500 up 24% year to date and up about 9% from those October lows. But is it too late to get involved at these levels? Brian Shannon, CMT and founder of AlphaTrends.net, joins us now to discuss. So Brian, let's just start with the market overall. We've got stocks sitting right near record highs. How do you play a market like this that's shown pretty much relentless strength for almost the last 2 months with basically no givebacks?
Yeah, Miles. I mean, it's been a phenomenal time to be involved if you're already long. But if you're looking for new new stocks to put into your portfolio and own, it makes it more challenging. And you want to be sure not to chase things too much and really give up your edge in terms of what's a proper entry so that I can manage the risk properly. And that's the issue, is that it becomes more difficult to find those opportunities the higher we go and the less that we, pull back and digest.
So let's talk about one of those names that you're looking at right now, International Game Technologies. Smaller name, not a lot of people have heard of it. What are you seeing in this specific chart, and is this one of these names that's catching your eye right here?
Yeah, IGT, it trades 2.5 million shares a day, so it's a pretty well capitalized stock. And the stock, if you look at that chart there that we have on the screen, we've got a 50 and 200-day moving average that are starting to flatten out after a pretty good decline from last year's highs. Now we're looking at it. Last week, the stock broke past that level of resistance we have drawn in there on big volume. It came with earnings. The issue is the earnings weren't great. So I wouldn't say, this is something to go aggressively big size into. But I do like the way it's setting up here. And it looks like that big volume event last week could have been an ignition. They will see this stock continue higher.
And then, Brian, just quickly, conceptually, I guess, with the market at this level, the way it's behaved, are you looking at names on is there a market cap level that you're targeting right now, right? Everyone knows the stocks that have been killing it this year. Are you going to be looking maybe down the chain at this point in time just because of what we've seen in the overall market so far this year?
Yeah, that's a great point, Miles. I mean, but, we had a great setup 2 weeks ago in Facebook. So there's still opportunities in even some of the bigger names, but it becomes a lot more difficult to find them because so many stocks haven't been, having these phenomenal runs and get extended in that. So, naturally, your universe has to broaden out a little bit to find the opportunities. But, if you're selective, I think you can find them in pretty much any area of the market right now.
All right, Brian Shannon, AlphaTrends.net. Thanks for joining us. Talk to you next week.
Great. Thanks, Miles.
Coming up here today on the final round, we've got the closing bell on Wall Street. Plus, Rick Newman stops by for the moment you've all been waiting for. We are going to grade the week that was with this week's Trumpometer score. We are back right after this.
Welcome back to the final round on Yahoo Finance. I'm Jen Rogers with Miles Udlin and Rick Newman, just in time for the closing bell, where it's looking a little bit red. Of course, we are very close to record highs still. And you know what? The market just giving us a little bit to talk about here.
Softening up a little. Softening up.
A little bit of weakness.
I've never seen a close above 28,000 in my life.
Still, I can't believe it.
Unreal.
If you don't get a close this week.
I've never been in America for a 28,000 close.
Gosh.
Where were you?
He was in London.
I was in London.
Covering Brexit.
Right. Is it different over there?
Honestly, if you live in New York, it's the same thing.
Closing bell on Wall Street, looking at live pictures of the New York Stock Exchange and the NASDAQ market site. We've got stocks in decline here for the third straight session. Again, we are in a tight trading range. It's a treading water kind of day, but we are very close to the all-time highs. And within the sectors, we are continuing to see rotation here. Energy up again, up about 1.5%. Real estate lower by the tune of 1%. So, Rick, we had a market guest on earlier, and she said this kind of time period when nothing's happening, maybe you're just like preserving the gains you have. You don't want to make any mistakes as you're heading into the year end. Do you think that's at play here, or in closer to your wheelhouse, do you think people are watching impeachment and just not doing anything?
I don't. Who knows? I mean, but we do seem to be in a situation where this is kind of a hated rally. I mean, so many of us are waiting for something bad to happen, and consumers, nothing bad is happening with consumers, but we're looking at corporate profits flattening out, corporate business spending is flattening out or declining, depending on how you measure it. You're getting, I seem to be a totally manic set of forecasts from Wall Street. We're going to lose 10% going into the year. No, we're going to gain another 10%. So it's just a melt up. It's been a melt up all year. And of course, the headlines out, the geopolitical headlines are generally bad, but the markets don't care. Or do they?
Well,
markets are trying to figure out, should they care?
Yeah, I mean, I think people get a little bit. We're all sort of losing our minds here, in a sense, right? Because everyone wants to be able to say definitively clean.
I'm actually having a great time, but okay, I know what you're saying.
I am as well.
I'm having a lovely time.
I'm saying, like, the commentariat that wants to be able to say the market is doing this because of that, right, is just sort of grasping at nothing, because the market has basically been defying all expectations since the second Donald Trump was elected.
Yeah.
Right? I mean, the market immediately went down, then it went straight up. Then we spent all 2017, I was in the camp of there'll never be tax cuts, I don't know what we're talking about. Guess what? They cut taxes. And then what happened the next year? Stock market went down. So I think it's always kind of not really made that much sense.
I tell you what, let's flip this around. I hear from, I write about political issues, political economic issues a lot. And if I'm criticizing Trump, I hear from a lot of people who say, my 401k is up 25% this year. The guy can do whatever he wants. I'm making money, so what do I care? And I think that I think it's actually the opposite of us trying to establish cause and effect between geopolitical news and the markets. I think the geopolitical news would be worse. In other words, support for impeachment would be stronger if markets were doing worse. I think a lot of people who otherwise don't like Trump and they don't like what they're hearing about Ukraine, personally, they feel like they're better off during the last couple of years, and they're saying, what do I care?
It's a little bit more Bill Clinton than it is Richard Nixon.
Yes.
The economy is incredibly important, and that's why he leans into it so often.
Well, I'm not sure if he knows that he's getting away with it, but I think Trump has a false sense of confidence because he thinks it's him. He thinks he is personally invulnerable, and he's not. It's the economy is supporting him. The economy has his back. If we had a falling market like we did last December, and we started to see a couple of quarters in a row of slower declining growth, this would totally change. If we start hearing about layoffs, I think Trump's support just falls through the floor. But that's not what anybody's really forecasting.
Right.
Not happening today. For more on today's market action, let's go to Scott Gam on the floor of the New York Stock Exchange. Scott, a little bit more weakness here on the close. Winners and losers, walk us through.
Yeah, that's right, Jen. Another day with the Dow below 28,000. No big down days really this week. I mean, yesterday we were down 100 points, but it's been this kind of slow grind lower. But the worst performing Dow stocks today were names like Procter & Gamble, Boeing, and Walgreens. Remember, Boeing had a late session surge yesterday. Today it was down over 1%. Boeing is a powerful Dow stock. So that's one reason why you saw the Dow's losses intensify in those final moments of the trading session. The best Dow stocks were names like ExxonMobil, Dow Inc., Pfizer, and Caterpillar. And of course, Dow Inc. and Caterpillar are some of those trade-sensitive stocks which were down big yesterday when we saw those worrisome trade headlines, but they recovered nicely today. So maybe that's the silver lining here, is that some of the trade-sensitive stocks are rebounding. Maybe not the broader indices, but when you look under the hood, there is more action. Outside of the Dow, Jen, we want to update you on L Brands. That was the second best performing component of the S&P 500 today, ending near session highs, up over 10% in just one day. The stock is still down about 30% so far this year. This is the parent company of Victoria's Secret. The earnings report wasn't that great. Comps were down 2% year over year for the quarter. But it was the reaffirmation of the fourth quarter guidance that really sent the stock surging. And that's a reminder to not just look at the earnings report, but also the guidance as we move towards the latter end of earnings season, guys.
It's all about the guidance. Scott Gann, we'll talk with you tomorrow.
Bing, bing, bong. All right, let's do it. This week in Trumponomics, Rick, I can't imagine what the story is.
Well, I'll start the story with a question. Has anybody seen the Phase 1 trade deal with China? It was here just a little while ago. Has anybody seen it lately?
The man wants nothing. He wants nothing. There was no quid pro quo.
Was that China or was that Ukraine? It all runs together.
It was a perfect call.
So the story on trade this week, I am just getting so sick of talking about this, but Trump keeps putting up goose eggs. So now the expectation of a Phase 1 trade deal is drifting away. We may not get anything this year in December. We're going to have to deal with that December 15 deadline for new tariffs on Chinese imports, more tariffs on Chinese imports. It might go into 2020. It might never happen. And Trump is, now you can tell in Trump's the tone of Trump's rhetoric how these negotiations are going. So when he starts saying, I don't need a deal. I don't care about a deal. The Chinese care more about a deal than I do. Well, we all know he desperately wants a deal because he has to fulfill this campaign promise. But now, once again, the Phase 1 trade deal has just turned into a mirage. And And I think there never was a Phase 1 trade deal. So that is the story, and that is what's been moving the markets down this week.
Let's talk about something else before we get to the rating this week. Trump's meeting with Tim Cook yesterday, Tim Apple, as Trump likes to call him. So we had some tape from him yesterday during the program, but we didn't really know what was going on, and we got more color after we came off the air. Well, Trump went down there to Austin. This is a plant that Apple has had since 2013. Trump went around saying, "I opened this. What a great day." Tim Cook declined to correct him, basically just sort of rolled along with it. And then we get reports that there's a suggestion perhaps Apple would be exempted from any tariffs. I think it's kind of an interesting relationship because Tim Cook, more, in my view, guys, than any other executive, has leaned into the whole Trump thing and said, well, this guy can help me, and I import really expensive stuff from China. It's probably good if I find a way to slip in with one of these exemptions.
I think you're right. And nobody was paying attention to the Apple factory in China until Trump went and said, I just opened this factory.
He's got the EU ambassador telling everyone on TV there's quid pro quo, so he goes down to do a tour.
So now there's all this reporting into the backstory. What is going on here? And the backstory is that in order to keep that factory functioning and make those expensive computers here in the United States, Apple did ask for exemptions from tariffs for a lot of components they import from China that go into those machines that are made in Texas. And they did get some of those exemptions. I think not all of them. Apple doesn't get everything at once, but there is this behind-the-scenes process. This is another reason the tariffs are absurd, is that you can basically petition the Commerce Department and say, can we be exempt from this or that tariff? And sometimes, one product at a time. They go through all these. I mean, there are thousands of these requests. And it turns out Trump actually did not dig the hole and build the factory himself and open it. It's been open for 6 years. But I think corporate executives have just learned, this is going to get the press is going to fact check this. Why would I be the one to tell the president you're lying? The media is going to do it for me, so I'm just going to,
I think it goes into what's happening with the impeachment, though, because with the Republicans saying, well, why didn't Zelensky say anything? Why didn't anyone say anything? Why doesn't Tim Cook say anything? Because it's not in their best interest to say anything. They're just going to stand there and let him say whatever it is.
Plus, Trump is completely unpersuadable. So if Tim Cook were to say, Mr. President, actually, you didn't open this factory. It's been open for 6 years. Trump would say fake news.
Yeah. So.
And then his supporters would say, "Oh, don't take him literally. He's just joking around.
He just
you don't
the
get
increase
Trump."
in jobs.
So one other factor, there's a report in Politico today that the White House is now also looking for some way to intensify trade pressure on the EU after the expiration date on those auto tariffs. I'm not sure that there's anything there, but yet another thing for markets to worry about. So this has been pressing down on markets. So you want to get to the score? So this is last week's.
Let's just press it.
What do you think it is this week?
I don't know.
Almost
we
missed
can't
there.
go sad. I feel like we've set sad up to be
sad as a recession.
Sad as a recession or impeachment or something. Okay.
I'm sorry. 3 failings in a row, but I don't always ding Trump. He had 2 big leads. earlier in
There's
the
been
fall.
there's been some weeks where it's like, here's a ton of bad Trump news, and Rick does it mediocre. So
Yeah.
always keeps you guessing.
But come on, man, make a trade deal. We will improve the grade when that phase 1 trade deal materializes. Bring on phase 1, baby.
Get into the green. Nordstrom out with third quarter results. Let's go to Emily McCormick in our newsroom for a breakdown. Emily.
Well, strong sales results for the fiscal third quarter for Nordstrom, seeing those top expectations. So we have total revenue of $3.67 billion, coming in ahead of expectations for $3.58 billion. Then on the bottom line, we had earnings per share of 81 cents. That's an increase year over year versus 39 cents in the comparable year ago period. Not immediately clear whether this directly compares to those adjusted earnings per share estimates for 63 cents, according to Bloomberg compiled data. Some other strong internals, if we look at these results, gross margin was wider than expected, coming in at 34.3%. That also was ahead of last year's 33.3%. And Nordstrom also narrowed its guidance and actually raised the lower band of that. So it now sees adjusted earnings per share in a range of between $3.30 to $3.50 for the fiscal full year. That's ahead of its previous guidance for between $3.25 and $3.50. Now, if we look at some of the events that took place over the quarter, Nordstrom just opened a new flagship store in Manhattan. So that's 7 floors, 320,000 square feet. That's something analysts will definitely be listening in to hear how these sales have been performing, since we know with some other stores like Macy's with some of these big flagships, those had been lagging. So far, we are seeing that Eric Nordstrom, co-president of Nordstrom Incorporated, is pretty ebullient about these results. He said our third quarter earnings exceeded expectations, demonstrating substantial progress in the delivery of our strategy and strength of our operating discipline. We do have Nordstrom shares up in after-hours trading because of the beat that we had right here.
Emily McCormick with Nordstrom's results in our newsroom. So Nordstrom moving around here. We've seen some ticks up there as much as 6%.
Ebullient.
Brilliant. So we talked earlier about the winners and losers. Macy's loser. Yep. I think there's more of a question mark around Nordstrom, people trying to figure it out. But what's very clear is that they are trying to move the needle here in a different way. They are really not just sticking with the We Are department store. We know that just from the New York opening here as well, but the mix that they have, doing those little local format stores as well. There's one in your neighborhood.
There is.
That's just, it's like smaller than this studio, but you can go, you can pick things up.
2,000 square foot store.
Yeah, and they basically say here that we are, linking our business to serve our customers in new and differentiated ways.
Yep. Look, there is a chance, there's an ability here for companies to succeed in retail, to do interesting things. Customers will respond to them. I think Target's had a lot of success with their smaller formats. Very interesting to see Nordstrom do the same. I think that touch point is important for people to remember that you have a website, right? There's so many websites. You need to have a reason why people would go to yours instead of someone else's.
The year-to-date stock chart on this is interesting because they had tanked going into August. And then there was, investors writing them off. And then there was a big recovery from August until recently, and now we're seeing it again. So people are rediscovering faith in Nordstrom, I guess.
Yep.
I think that is indeed the case. Watching it here, up and after hours. Coming up is Amazon on the verge of completely dominating the cloud. What it could mean for rival companies right now. Take a look at where big tech names traded today. call it the cloud, but it's really an entire weather system of different clouds. There's Amazon's AWS and Microsoft's Azure and Google Cloud, just to name a few. And many companies are deciding that they don't want to be locked into one cloud provider, but going between them is its own challenge. Gravitational is a startup trying to solve the portability problem. Ev Kontsevoy is the CEO of Gravitational, and he joins us now. So, I don't know, for people that aren't dealing with the cloud on a B2B level, set up the problem for me. What is the issue that you're trying to solve?
Absolutely. The issue with cloud-native applications or with cloud-native computing in general is that you want your software, you want applications to be located closer to where data is, simply because applications, they work on data, so the latency, the time you need to wait for something to happen needs to be lower. And also for privacy reasons, because if your data is over here, you don't want to be giving your data somewhere to be processed on. So, and that's the problem that Gravitational solves. We allow software developers or companies who develop software to freely move their cloud-native applications across multiple cloud providers. Or even you could transfer your entire application into someone else's company's data center. So maybe someone doesn't want to upload their data to you, but you still want to be in business, so you can allow them to download and run your software on their own cloud.
So as you see the cloud space right now, do you feel like more big customers, whether they intend to or not, are finding themselves all of a sudden stuck inside of AWS or stuck inside of Azure, where they're running all their applications through there, they're doing all of their development through there, and that they might not be able to have the flexibility of the cloud? It might end up being like an on-premises sort of situation in the cloud before they know it, right? And you're trying, I guess, as I understand it, to get companies away from having to do that.
Absolutely. And look, I was a cloud provider myself. My prior job, prior to starting Gravitational, was at a cloud provider called Rackspace. Mm-hmm. And it's something that we've heard repeatedly, that companies said, look, we don't want to be just on Rackspace, but we don't want to be just on AWS either. We want to have a choice. We want to be able to freely pick the best cloud partner for different projects that are going on. And frankly, they were citing that as to be number one reason they were even talking to us, to see if there was an opportunity we could help them. So that's where I saw that something needs to exist, technology needs to exist to help the world not be locked into a single provider.
Is it possible that there will ever be interoperability directly between these clouds we hear about from Amazon, Microsoft, Rackspace, all the others?
I would say that right now there is a wave of new technologies and new companies that are aiming to do exactly that. And the key here is to focus on open source and open standards. And throughout the history of computing, not just cloud computing, but any computing in general, there has always been this tension between proprietary and open, closed source and open source.
It's Apple and IBM.
Oh yeah, absolutely. Or Linux versus Windows, and so on and so forth. So if you're running a technology organization or just a tech part of an organization, and if you're placing your bets on open technologies and open source, you are kind of sort of making your processes compatible with this multi-cloud capability, which we also enable. But if you are focused on getting the best proprietary technology, then you're asking to be locked in.
Mm-hmm. Ev Kontsevoy, Gravitational co-founder and CEO. Thank you so much for telling us about your company.
Thank you for having me here.
Gap third quarter results just hitting the tape. Let's head back to Emily McCormick in our newsroom for a breakdown. Emily.
Better than expected results for Gap, and the street looks pleased with the company actually beating some of these low expectations. So if we look at adjusted earnings per share, those came in at 53 cents ahead of expectations for 50 cents a share. Then on that top line, sales of $4 billion were ahead of estimates for $3.97 billion. Remember that Gap had actually pre-announced third quarter comparable same-store sales results for its three major brands. Those had been disappointing, and it went ahead and it reiterated those in today's release. So at flagship Gap, sales were down 7% over last year. At Banana Republic, they were down 3%. And at Old Navy, those comparable same-store sales were down 4%. Gap also reiterated its full-year guidance that it had released earlier in November. It says it expects to earn between $1.70 to $1.75 per share. That was down from previous guidance for between $2.05 to $2.15 a share. Remember that Gap had also recently replaced CEO Art Peck with Robert Fisher. He's now the interim CEO and president as the company does an executive search. Here's what he had to say about results. He said, quote, "We are not pleased with the third quarter results and are focused on aggressively addressing the operational issues that are hindering the performance of our brands. We continue to make progress against our separation plans, which will provide improved focus and a further catalyst for transformation." Now, Gap is still pursuing a spin-off of Old Navy, which has typically outperformed against some of the other internal brands. Analysts will definitely be listening in for more details on that during the earnings call later this evening. Right now, we do have Gap shares up 4% in the after hours.
Emily McCormick with Gap results in our newsroom. Again, watching Gap shares here up nearly 5%. Such a lot going on for this company right now, and a lot of questions.
Not
certainly.
a lot of it good.
It's a real it's an execution challenge right now.
Well, it's not dead.
Very diplomatic.
Come on, they had a good. They beat. Come on, give them a break. They're not dead yet.
Yes, they beat. You are 100% right.
Look, stock's up 4%.
The interim
and there's talk of a retail. There's
and
talk of a
Chief
retail rally
Executive
tomorrow.
Officer, he said we are not pleased with the third quarter results.
Well, he's not happy. He's not accepting mediocrity. I think this is the beginning of a revival for the once great Gap.
Hey, Gap, you're looking for a CEO. Rick Newman. You know?
He could take his Trumpometer there.
I think it's great. The Gapometer with Rick Newman.
I've actually never shopped at a Gap either, so I don't even know.
Hey, look,
I wouldn't even know where to find one.
Sometimes it seems like the executives haven't either. If you look
they sell blue jeans and white sneakers, I think.
Yeah,
that's what I think.
Those are among the items.
White T-shirts, I believe.
Those are among the items.
Stuff for babies.
That are in a Gap.
Innocuous stuff for babies.
All right, Gap shares up about 5% after their latest quarterly results. We'll have more on that as we go along here in the after hours. Coming up here on the final round today, we'll have today's sector winners and losers in the market. But first, take a quick look at what were some of the best performers in the Dow on this Thursday. Let's take a look at today's sector winners and losers. Sectors in the red today. Consumer discretionary, XLY, down about 0.4%. Macy's weighing on the sector there. That stock was lower after the company reported a weaker than expected revenue in its third quarter. Also lower was the tech sector. XLK off about 0.5%. Applied Materials, AMD, and Keysight weighed on the sector there. Energy higher, XLE up over 1.5%. Devon Energy, Noble, and Exxon Mobil led the way higher there. Energy up for a second straight day amid what's been a slightly negative market over the last couple of sessions.
Coming up, what we're watching tomorrow in the look ahead, plus fresh from angering Taylor Swift and her legion of supporters, Carlyle Group has another acquisition in mind that has punk fans up in arms. Here's Miles with a look ahead at what will be making headlines on Friday.
Well, 2019 will mean a lot of things to a lot of people, but for the online brokerage industry, it will be known as the year that the whole model sort of broke down. Just a few months ago, all the big players in the space in quick succession cut commissions on their trades to zero. It was an admission that these businesses, your Schwabs, your Ameritrades, your E-Trades, weren't actually making money per se on the trades. The money is in the money. And so when reports surfaced Thursday that Charles Schwab is eyeing a buyout of TD Ameritrade, the only thing that really mattered was the $5 trillion, as in the $5 trillion that the new co would have under management. Now that's money that this new company will be able to lend out and make a small fee on trillions of times over. Now for Schwab, this business already accounts for about 2/3 of its revenue. For Ameritrade, cash management is a smaller part of its business, but it's the fastest growing part of that company's business lines. And while people still often associate the brokerage business with talking babies and the dot-com boom, having customers that make trades obviously doesn't really matter to them. What matters is having customers that keep their money in accounts on your platform, and then you can earn a few pennies on each of those accounts. Have enough of them and you'll have enough money to have a nice little business, and if you need more of that money, you just go out and buy a rival. Now turning to the calendar for Friday, on the economic data side, we'll get the first look at manufacturing and service sector activity in November from IHS Markit. The University of Michigan will also publish its second and final look at consumer sentiment in November. And then on the earnings side, J.M. Smucker, the only notable company expected to release quarterly results.
So, private equity firm the Carlyle Group is reportedly considering a bid for none other than British bootmaker Doc Martens. That's according to Bloomberg. The two companies are only in the early stages of deliberation, but this, of course, comes following the whole brouhaha with Taylor Swift and Carlyle involved in that. And when Miles and I covered that story, it was, hey, kids are going to go complain to their parents at work at Carlyle. Mm-hmm. Hey, Mom. Hey, Dad. Let Taylor sing. What do you think about this? What are the Carlyle kids
Doc
saying
Martens
now?
is already owned by a private equity firm.
Right. Primera.
So it's not like, it's just moving the deck chairs. I don't think that it's like that big a thing. But, look, the story is about how this comes on the heels of Carlyle trying to do the thing with Taylor Swift,
Nate, did you ever?
The most interesting thing I learned is, you know why Doc Martens are famous? You know who made Doc Martens famous?
What's that?
Pete Townsend of The Who. It's the first. The company was started in the 40s, and Pete Townsend was the first celebrity to start wearing them.
He's a boomer. Boomers love private equity.
That's
it's fine.
He probably invests in the. He's probably a feeder
rich.
to the Carlyle.
Already rich. All right, Jen Rogers, we'll see you. Jen's on assignment for the next half hour. We'll see you back here tomorrow. Coming up today, we'll have more on the final round, plus our top take. If you can't beat them, join them. Brokers Schwab and TD Ameritrade looking to merge. We'll talk about what it could mean for the industry and Main Street investors. We're coming back with that right after this. Back to the final round here on Yahoo Finance. Miles London with you in New York. You're hearing the computer there of Yahoo Finance's Rick Newman. Let's take a look at where we stand right now. All three majors finished Thursday's trading session lower. We had, the NASDAQ taking the biggest loss there, off 24 basis points. Not a whole lot doing, but this is 3 down days in a row for the Dow. It's the first time we've seen that since early August. Now, in the month of August, the market had a little 5-6% slide. The recent low would be that August 23rd day where the Dow lost 800 points. There was some trade news. Not saying all this is going to happen, just saying there was weakness that followed from that last 3-day slide in the Dow. You can just barely see it there on the left side of that chart, the remnants of the August sell-off. Since then, a little bit of weakness in October, but pretty much straight up and to the right over the last 6 weeks or so. And after hours trade, a couple names on the move. Retail names higher. We've got Nordstrom and the Gap both up in after hours trading following their results. Now the Gap slightly better than the pre-announcement they made last week. Nordstrom coming in, raising the bottom end of its guidance, and the stock responding in kind. Of course, both names have been under considerable pressure so far this year. Nordstrom up now over 10% in after hours trading. Rick, I went to the new flagship store. It was fine.
That's how I feel about Nordstrom. It's not really for guys like us. You can buy like a fancy gown there.
Right. So you're saying I'm not fancy? Speak for yourself.
I'm saying I'm not fancy.
There you go.
Sorry.
Speak for yourself, Rick.
I mean, I don't think they have all your brands of sneakers there.
I don't think they do. Let's turn now to our top take stories we're watching in today's market. Story I'm most excited about, Rick, that would be the broker potential merger. Hasn't yet been announced. There was reports from multiple outlets on Thursday that Charles Schwab is going to acquire TD Ameritrade. Now, both stocks were higher on the news. E-Trade was lower on the news. Rick, this continues what's been a very interesting 3 months here for the discount brokerage. It seems like this business is having an existential crisis. What's kind of your view here on what this means for the investment management business?
Well, I like Matt Levine at Bloomberg had some interesting insights on this today. So go back to when Schwab said they were cutting fees to zero in September. Everybody had to match that immediately, right? And some of those brokerages were in a better position than others to absorb that hit. So at Schwab, it was a very small percentage of revenue, but at Ameritrade, it was a much bigger percentage of revenue they gave up. So Ameritrade stock went down, the value of the company went down, and now 2 months later, Schwab comes in and buys them. So was that deliberate? I mean, it's a great question. Was that deliberate? When did these sort of merger discussions begin? Before Schwab did that move that basically pushed the value of both companies down, but Ameritrade down more? Or was it after the move? We will probably find out when some of the documentation comes out. But so now it looks like we could have consolidation in this industry. And you know, the irony is what often happens with consolidation. Well, you actually get to raise prices or you have more pricing power. But I think Schwab, having done what they did, they're probably not going back.
Well, I think for me, the theme I've kept going back to, and I read Matt's piece this morning, and I kept thinking about how they still, again, the thing with the commissions going to zero is, while, okay, that was about, I think it's 40% of revenue for Ameritrade. It was
only
like
7.
It was like 7,
Schwab.
right? It was nothing for Schwab. And the theme I've kept going back to, and this will be in the newsletter tomorrow morning, is about you need to have as much cash as possible because that's where you make the money, the net interest revenue, right? So you're basically lending your cash out short term to someone. So I have a money market mutual fund. I get paid 2 1/4. Well, they lend it out for 2 1/5. And they keep the spread, right? So that's the whole business. That's an easy business. I think it just kind of obviates that the trend is towards low-cost passive stuff, right? You can get it from Fidelity. You can get it, and they've been a laggard, frankly. Fidelity has Vanguard, of course, at the vanguard of this trend. BlackRock now has $7 trillion in assets, and that's just huge pools of capital. And scale is really the only thing you need in this business, because guess what? People don't trade as much as they used to. I think that's probably good for investors overall, but it has forced these companies on the fly to figure out what they really are. And I think what they are is just cash management tools, right?
I mean, Vanguard started this trend in the 1970s, and
they were seen as idiots then.
In a way, until it caught on, I know. So this is really, in a way, more of the same. And the way I think about I always think about what happens when the environment turns. So we're in a very positive investing environment right now. So this will mean a lot more when there's a downturn in the market. So it's one expense that people won't have to be dealing with when they're worried about just watching their principal.
Yeah. Certainly a very interesting trend. I don't think this is going to be the last time that we're seeing some mergers and acquisitions happening.
I really do wonder, like, what was the plan, the strategic plan at Schwab all along? How long did they take to get their assets lined up in such a way so that eliminating the fees would be favorable? I mean, they could have been in this process, a long process, for 3 years for all we know. And this could have been part of some strategic plan to say, let's do this and let's see if we can buy a competitor.
I mean, I think all that's probably...
Maybe not.
No, I mean, the thing that Matt did in the piece is he's like, look, you're basically buying it for a discount because of what happened. I don't think they thought it through that. You don't know what the market's going to do, but I think they knew they were going to have to buy something eventually.
Yeah.
So more to come on that coming up here today in the final round. We'll talk a little bit about what Elon's Cyberpunk pickup could be like, what features we're expecting. It'll be released at 8 p.m. Pacific tonight. We are going to discuss coming up after the break. few hours, Tesla will unveil its electric pickup truck that's been dubbed the Cybertruck. Joining us now to discuss is Akshay Anand, executive analyst at Kelley Blue Book. So Akshay, when you think about this truck, we've seen some of the mock-ups. What are your kind of expectations for what Elon Musk and company unveil tonight?
It's going to be a fun one, right? Elon Musk unveils are always fun. We do know a few things about the truck. He stated that he wants it to start under $50,000. And price point is obviously key when it comes to Tesla vehicles, particularly the truck segment. We know that trucks can vary from $25,000. You can, customize them and outfit them for much higher than that. So that's going to be a big one. Range is going to be another big one. We know that the two reasons consumers still don't buy electric vehicles are range anxiety and where they can charge. And I think the design of the truck is going to be critical, right? Because in the renders we've seen, it looks like it could be very different. So I'm really keen on seeing the design.
Akshay, Rick Newman here in New York. There's often a large gap between when Tesla introduces something and says, oh, it's going to be the greatest thing to transform transportation, and when it actually hits the market. What is your expectation for a reasonable time frame for when this thing might actually go on sale?
I think sometime in 2021 is probably reasonable, maybe mid to late 2021. And you're going to see other EV pickup trucks hit around then too. So I think 2021 is going to be a big year for electric pickup trucks, and into 2022. That's my educated guess.
You think anybody's looking for an electric work truck? I mean, people who buy an F-150 or a Silverado, is there any chance they're going to go electric?
So I think there's two different types of truck buyers. I think you have a very needs-based truck buyer who's, using it for work-like things, and then you have a very wants-based truck buyer who might be looking at it from a little more, lifestyle perspective. Let's take our surfboards to the beach on the weekend kind of thing. I think that latter, the more wants-based truck buyers, might be interested in this as a more lifestyle-based truck. I do think the more needs-based, work-based truck buyer is going to be a tougher sell for Tesla for sure.
And Akshay, I just want to go back to the cost of the truck, or what Elon Musk wants the cost to be, because part of the reason why Ford and others love trucks so much is because they're actually kind of expensive. I mean, is there a chance that Tesla could actually keep this thing at a $40,000, $45,000 price target? I mean, what does that look like in terms of capabilities, and is there how skeptical are you that they will be able to pull that off, because the truck segment has really become so much more upscale in the last couple of years?
It has. You're absolutely right. And I think that's why one of the things I'm definitely going to look for is that customization, right? Can it tow? Can it haul? Are there going to be a bunch of different packages? Because to your point, trucks are one of the most profitable segments in the entire industry. So, it could very well start at 40, 45, 50,000, whatever it is. But as we see with pretty much every other truck on the market, if you customize it, if you outfit it, that cost can, double or whatever it is. So I think that's going to be a big one, is in order to maintain profit. Yeah, you're right. I think there's going to have to be a lot of customization. And I think that's something that's necessary in the truck market, because there's so many different things that people need and want in a truck in and of itself. They're very different than SUVs and sedans.
All right, Akshay Anand is an executive analyst over at Kelley Blue Book. Thanks so much for joining us.
Sure, thank you.
And Rick Newman, have a great evening. I know you'll be
I
staying
wasn't
up.
planning on it, but now that you instruct me to, you got it. You got it, man.
You have an average to below average evening tonight.
I think we need a pneumanometer.
Yeah, exactly. We'll see how.
I will have the best night ever.
Mediocre. How about that?
Sure.
There you go. All right. Coming up here today on the final round, Magic Johnson and the CEO of Cigna talk about their partnership with Achilles International and the healthcare challenges that are facing this country. We are back with that conversation right after this. International is a global charity that empowers people with all types of disabilities to participate in mainstream athletics. Yahoo Finance's Brian Salzi caught up with NBA Hall of Famer and longtime Laker Magic Johnson, along with the CEO of Cigna, David Cordani, at the 29th Annual Achilles Gala about the challenges right now in healthcare and communities at large.
Yeah, so our company actually partnered up with Achilles International a little over a decade ago because we saw the power of putting their program with people who are confronting health or other disabilities and challenges, be they physical or mental and otherwise. And we had a good bond with them because of the mission of our company. I had the ability to see a bunch of the Achilles athletes at the Disney Marathon one year that I was down there, and I volunteered after that to be a running guide. And the first time I served as a running guide with Matthias Freire, who's here, I was bitten by the bug in terms of supporting individuals, specifically military individuals, to say thank you for their service that protects our freedom each and every day. And then watching and being motivated by people who set goals that are that lofty after confronting life-altering challenges. And I've been fortunate to do it now for quite some time, just guiding in the Marine Corps Marathon a couple weeks ago.
And you're also a hardcore runner.
I'm getting a little old.
I think you can still take them down the court, though, Magic.
Yeah, I'm getting a little old, but having goals like guiding actually helps to keep me motivated. So when I commit to guide somebody, I got to get myself in shape to be in service to them and make sure I can carry the backpacks and all the other support. So it's a good source of motivation.
And Magic, what does it mean to you to be involved with an organization like this?
Well, it means the world because, you know, as David mentioned, these men and women have put their life on the line for our country, for our safety, and for us to say, listen, you come home and you may be dealing with a disability, but we're here to say we want to help you in any way that we can, and this organization is doing a wonderful job. Achilles International is doing a wonderful job of doing just that because most of them are so strong that they can recover from what has happened to them and still live a great life and get involved in sports, whatever that is, whether that's running or even just playing basketball or whatever. And so I'm just happy because I've gone through a challenge in my life and I had to overcome that challenge, and I have so far for 28 years. And so I understand when people go through challenges.
David, do you think veterans are getting the health care they need and deserve?
That's a very personal question. So when you think about veterans, it's such a diverse group of individuals. Increasingly, I think the answer is yes. I think we're more open as a society of understanding what we call at Cigna the whole person connection, so the mind-body connection, and not to label it PTSD or otherwise. So there's a physical need, there's the behavioral need, and then there's the acceptance back into society. So for example, we employ right now over 2,500 veterans today. We have a Veterans Colleague Resource Group as an organization providing support. They're awesome coworkers. And that's a way to get a level of engagement and a level of kind of support for individuals. And then from a healthcare standpoint, we're starting to push the limit beyond the VA to get more access to care and services. But we got to challenge ourselves to do even more for our veterans.
Magic, you are out in the communities a great deal. What are some of the biggest challenges you're seeing right now? Is it poverty? Is it access to health care? Is it just living from day to day?
Well, I think what David just touched on when you talk about giving 2,500 jobs to those who have been in the military, it's the same challenge for those who live in the urban communities and inner cities. They want job opportunities. And so I think that's a challenge. I think also education, because that goes hand in hand with job opportunities. And then last but not least, you touched on healthcare. That's a challenge in our community as well. But when you think about living up under the poverty level and all of that, that's when you ask a mother what's her number one challenge, she would say that in the inner cities of America.
David, you have written extensively about micro-communities. What is that?
So the term micro-community essentially was hatched out of my experience with Achilles, and I think Magic knows it well, he lives it well, and he's actually brought it to life in many communities. But what it comes down to is a small group of individuals have the ability to provide a level of support to have a great impact. So symbolically, it's one or two individuals supporting a wounded veteran to set the goal, to train, and then to overcome the obstacles during the course of a race. A micro-community as well as going into an inner city, like we're doing in the south side of Chicago right now, working with faith leaders where the violence is out of control, and working with faith leaders, grandmoms, great aunts, etc., to re-engage the community one block at a time. So it's taking big problems and opportunities and making them very small and personal and engaging one individual at a time. That's what a micro-community is.
Magic, 2 quick ones for you before we let you go. What do you make of the Lakers' start this season?
Been
It's red hot.
amazing. I mean, they're best record in basketball right now. LeBron's playing at an MVP type level. I think he's the favorite right now to win the MVP. And then Anthony Davis came, and I think really we got another superstar to go with LeBron. And the Lakers are playing great defense, and also their offense is fluid. They're playing well together.
And lastly, you're quite the entrepreneur. You have a lot of big investments through your company. What's a big investment regret that you have made, and what'd you learn from it?
A big investment.
Big investment regret.
Regrets?
What'd you learn?
Oh, I wouldn't say a big investment regret, but I'll tell you the only thing I really regret, and I'm not a guy who goes backwards, I'm always going forward. So, but I will go back. I was 19 years old, just won the national championship, beating that Bird guy at Indiana State.
I've heard of him. Yeah.
And I was about to sign a shoe deal. Converse came in, and everybody at that time was wearing Converse because of Dr. J. And so Converse came in, offered me some money. And then this guy named Phil Knight came. And Nike was like only 1 or 2 years old. I don't have a lot of money, but I offer you stock.
Oh, no. Oh, no.
And I was 19, didn't know a lot about stock. And so the rest is history.
Oh, wow.
Well, 1979, didn't know a whole lot. Take the money and run.
Phil Knight and you turned out quite okay.
Yeah.
Thank you both. Appreciate
All right,
it.
thank you.
All right, and coming up here on the final round, we'll have what you missed today right here on Yahoo Finance. We're back after this. Time now for all the best moments that you missed today right here on Yahoo Finance.
I think that we're going to see non-commission related revenues, those fees really start to creep higher for the very reason that there will only be a handful of competitors. And as we've seen, particularly on the move to zero commissions, what do? They tend to follow suit of what the leader does.
When they look at the debates, who do you think they see as better for stocks in 2020?
Right. Well, they certainly see Warren and Sanders as bad for stocks. Yep. So I think ultimately anyone but those two is probably fine with them. If there was a world where someone like Mike Bloomberg was president, and they would love that.
It, for most of us on our side, does not rise to an impeachable offense. And I don't think you're going to have anyone change the lens you're looking through, but the merits of the case ought to be determining how any of us would look at it.
And let's say Bernie Sanders wins, wake up and the market's down 25%. It's not going to happen. Nothing even close.
Thank you for saying that, by the way.
Right. So I've heard
there are some money managers and investors out there who are saying the sky is going to fall.
Having worthy rivals means that their strengths reveal to us our weaknesses. And if we know our weaknesses, it means we can build upon them. Mm-hmm. And ultimately, the only true competitor in an infinite game is ourselves.
Yeah.
And so when we know what our weaknesses are, we can become even better at what we do.
Consumers are continuing to demonstrate that they seem to be feeling good about their financial situation, and spending has continued to trend up. each month when we look at it on a year-on-year basis.
If you're looking for new new stocks to put into your portfolio and own, it makes it more challenging, and you want to be sure not to chase things too much and really give up your edge in terms of what's a proper entry so that I can manage the risk properly. And that's the issue, is that it becomes more difficult to find those opportunities the higher we go and the less that we pull back and digest.
All right, let's take a final look at where the market settled on this Thursday. All three majors were lower on the session. Not a huge move, but we did see the NASDAQ down 24 basis points. That's 3 days in a row lower for the Dow. First time we've seen that since August. After hours, we have Gap, Nordstrom on the move. Both stocks higher after their earnings report. Nordstrom shares up as much as 10%. The Gap up about 4% following a not quite as bad as feared report from that retailer. Still a lot of work to do, I think, at both of those companies over the years ahead. But for today, taking a look at Gap shares, they're up 2%. For today, that's it. From New York, I'm Miles Udland. This has been the final round on Yahoo Finance. We'll see you back here tomorrow at 3 p.m. Eastern. Influencers with Andy Serwer is next. That's coming up in just 2 minutes.
Warby Parker, the eyeglass company, now getting into contact lenses. The new category is called Scout at Warby Parker. They will be sold in-store and online, and the company will offer a comprehensive eye exam and lens fitting at select locations. Here to discuss is Warby Parker co-CEO and co-founder Dave Gilboa. Dave, thanks for coming on.
Yeah, thanks for having me.
Tell us about the contacts. You guys have been around for a number of years now, so why now?
Yeah, so we're 9.5 years in, and our approach has really been a deliberate one where we want to make sure that every product and service that we offer is the best in the world. And we've known for a while that about 40% of our customers wear contacts regularly, and so it's a product that we've wanted to introduce for a number of years, but we wanted to make sure that we had a great product at a great price point, and we're really excited to introduce Scout to the world. So it's a daily disposable lens, it's super breathable, comfortable, and it comes in this innovative flat pack, which looks very different from other contacts you might have seen. It takes up 80% less space, creates 80% less waste.
Did you find that a lot of customers were saying to you guys, well, why don't you do contacts? I need those.
Yeah, for a while, customers that were getting their prescription from us had to go to a different doctor to get their contact lens prescription. They had to go to another place to buy contacts. And so we really wanted to create a holistic shopping experience where people could come to us for all their eye care needs, from their prescriptions, glasses, and contacts all in one place.
So when we talk about glasses, I mean, I think what has made Warby Parker so successful is the designs of the glasses themselves. But with contacts, it's kind of a little harder to differentiate your product from another product. So how are you doing that? Is it because of the brand experience that you get from the ecosystem of people that might already have Warby Parker glasses? Like, what's the strategy there?
Yeah, so I'm wearing our Scout lenses now, which you wouldn't be able to tell. So it is different than if I was wearing our Warby Parker glasses. So there's less conversation that happens. But we do think that the design of the packaging itself is pretty unique. So this is a 90 pack, so this is a 3-month supply. And so it looks very different from kind of bulky contact lenses that you might have. We make the shopping process really convenient and easy, whether that's online or offline. And the price point is like with all Warby Parker products and services, we wanted to really focus on affordability. So we're introducing a really premium lens at 20 to 50% lower prices than you'd find for comparable lenses elsewhere.
And what's your strategy for growth? Because I know that you guys started online, but then you had a bunch of brick and mortar stores, and you've expanded to about 120, both in the US and in Canada. And last year, you guys were valued at $2 billion. So what's the next step for your company? Do you think you might possibly dip your toes into the IPO market?
So for now, we're really just focusing on our customers. The company is growing really quickly, both online and offline. Our growth is actually accelerating on a percentage basis this year versus last year. But we operate in a massive market. It's well over $100 billion globally. About a third of that is in the US. And so we still have a lot of room to run. We have plenty of cash on the balance sheet. The company's profitable. And so we're not rushing for a public offering. We feel like we're well positioned to continue to invest and introduce new products like contacts, continue to open new stores, and really focusing on delivering value to our customers.
Especially after the unicorn IPO struggles.
Yeah, right.
Oh, so many this year.
I imagine.
Something that I want to ask too, I mean, so Warby Parker is also unique in that it's not necessarily part of insurance plans, vision insurance plans. Do you see that because of the cost point that you've been able to bring down for glasses and now with contacts, that maybe there's a world where there shouldn't be a need for vision insurance maybe?
Yeah, so we are in network with United Healthcare, and customers can submit any product or service that they buy as an out-of-network benefit through their carriers. But we do think that we're offering such great value that for most people, even if they have vision insurance and they go in-network, that they'd be better off just paying out of pocket. They'd get more value just coming to Warby Parker. But vision insurance is a big opportunity that we will focus on in the future to try to make that even easier for customers to use their existing benefits.
I'm glad you asked about the brick and mortar thing. I just want to end by pushing on that because I think that's so interesting. It comes up on our live shows a lot. The idea of these companies that started as DTC, online only, and then they open one or two maybe guide shops, whatever they want to call them, and then suddenly they open a lot more stores. And you start to see that really you want a little bit of both. You know, I talk about Bonobos a lot. That's an example. The Thai Bar, which has a store here in New York that I like a lot. What do you find is the benefit of having the brick and mortar stores? I mean, people go in and they're able to see and touch, but obviously, largely, I'm sure it's still an online business.
Yeah, I think it's largely dependent on the product category. So for us, in particular with glasses, people really want to try them on. And even a 1 or 2 millimeter difference in the size of a pair of glasses can make a big difference in whether they look like they fit well on you or not. There's also a service element to our business where we have opticians in all our stores that can adjust your glasses. And then we have optometrists where you can go in and get an in-person comprehensive eye health exam. And so, for us, it really makes sense to have a presence nationwide. I think for other product categories, it might be easier for people to buy those products online, and we think in general the kind of the future of brands and retailing is an omni-channel experience where people can kind of self-select how they want to shop, whether that's on their phone or physically walking into a store.
All right, Dave Gilboa of Warby Parker, new product category. Thanks so much for talking about it.
Great, thank you.
According to the Aspen Institute, 57% of kids play a team sport, but those rec leagues that many kids join can often come with prohibitive costs like jerseys and equipment, and they need funding help. LeagueSide connects brands with youth leagues to boost sponsorships, and co-founders Evan Brandoff and Zubin Tehrani are joining us now. Hey, guys.
Hey,
how's it going?
Thanks so much for having us.
Tell us about the idea. Why was there a gap here that you guys needed to fill to connect companies to youth sports?
Yeah, so Zubin and I were both part of this fellowship program called Venture for America. We were living in Detroit and New Orleans, respectively, used to volunteer at youth sporting events. And what we would notice while at these events is that, one, they couldn't participate if it wasn't for the local businesses sponsoring these leagues. But two, more importantly, we looked around the audience and realized there's no better way to reach an engaged group of families than in the community when they're together watching their kids play sports. So we thought, well, my favorite pizzeria growing up was Mike's Pizza because they sponsored my baseball team, my soccer team. What if we could create a network of the thousands of community youth sports leagues across the country, connect them with regional national sponsors to create a hyper-local, effective marketing channel while simultaneously helping tens of thousands of kids play sports?
Yeah, we all played on a t-ball team or some Little League team where we had the name of the local business on our jerseys. But as a result of you guys, I know you work with some big companies, Chipotle, Uber, as I mentioned. Are there now kids somewhere in the country whose jerseys say, Uber baseball team, or does it say the local business instead and the big company is behind the scenes?
It's both. So we're bringing these national companies to these youth sports leagues that they couldn't have access to otherwise. And they're alongside the Mike's Pizzas of the world still in this wholesome, family-oriented setting.
So what kind of sports do you cover? Because I think we know that there are some sports that are cheaper to operate a league for. Basketball, where all you need is the court. Soccer, you just need a net and a ball. But some of them are more expensive. Baseball, hockey, you need a lot more equipment.
Golf.
So what are you kind of leagues that you focus on? Are there any sort of sports that you're trying to kind of grow? Things like lacrosse or maybe other sports that people don't think about as maybe the first 3 or 4?
Yeah, so the main sports we work with are baseball and soccer. We're predominantly working with team sports. Team sports are the best way to reach the most families in the community. So we're all about win-win opportunities where we're achieving marketing goals for these larger brands while simultaneously helping kids play sports, which is actually how we got our logo, the Win Grin. This when we create win-win opportunities, exactly. We make everyone win, and therefore we make everyone grin.
By the way, Venture for America, wasn't that Andrew Yang's?
It was. Yeah, we were the second class of Venture for America fellows ever. Yeah.
So you guys Yang supporters?
I've learned a lot from Andrew. He's one of my mentors, yeah.
Yes, I am personally a part of the Yang gang. And know Andrew extremely well, and he's an incredible human.
So in terms of the companies that you've partnered with, we were listing them, Chipotle, Uber, but when you go to these companies and make this pitch, what is that conversation like? How do you get them on board with this idea? Do you try to get the teams involved too in those conversations? Like, hey, here's an example of a team that you could kind of impact by helping us out.
Especially because that kind of sponsorship for these big companies, it doesn't really have the exposure of, SoFi, buying the naming rights to the Rams stadium.
Right.
Not everyone's going to see this.
Yeah, so for youth sports, think about your youth sports memories. It's carpooling with your friends, it's families on the sideline, it's eating those orange slices at the end of the games. So for these companies, it's a chance to authentically connect with the community. So for them, they are thinking about it as marketing. It's exposure, it's authentic. Think about when you're driving on the highway and you're angry and you're in standstill traffic and you see a billboard. You compare that type of advertising to what we're doing through our platform, and you can see the effectiveness there.
And the reception of that has been pretty good in those boardrooms. Because, like you said, it is a difference between saying, hey, you want to get your name on a stadium or you want to sponsor this team in Springfield, Illinois, right? But it's an interesting pitch that you guys have there.
Yeah, so what our platform allows companies to do, like Chipotle that mentioned earlier, we're now able to reach a youth sports league within a mile or two of all of their Chipotle locations. Okay. So it's hyper-local marketing at scale, is what we like to say.
And we've added a little tech flavor to it too. So these brands are sponsoring leagues through our platform. They just upload their creative. All these campaigns happen at once. And they see pictures of their sponsorship in action, and those marketing metrics push their online dashboard in real time.
All right, anything that helps youth sports is okay by me. Thanks, guys. That's the guys from League Side. Thanks for joining us.
Awesome. Thanks so much.
Salesforce co-CEO Mark Benioff says that capitalism as we know it is dead. He's calling for a new form of capitalism. Yahoo Finance correspondent Julia LaRoche spoke with Benioff at Dreamforce in San Francisco this week. So what's this new capitalism look like, Julia?
Yeah, well, Julie, that new form of capitalism that he's calling for is one that is more fair, more equitable, and takes all stakeholders into account. It's no longer that Milton Friedman school of thought that the business of business is business, basically maximizing profits for your shareholders. You have to think about all of your stakeholders. So we talked about how Mark Benioff built Salesforce. He had this basically an epiphany when he was at Oracle in the mid 90s that he was not satisfied with his life there and that he wanted to build a different kind of company. I also asked him, is it too late for companies that are far along in their journey to pivot and actually change? So take a listen.
Along the way, business itself changed. It meant that business became the greatest platform for change. That's what really inspires me today, that I can see this amazing company that's all around me and how I can improve the state of the world with it.
Well, when you were younger, back in 1996, you took this sabbatical. You basically had it all when you were at Oracle, and you realized that something was missing in your life, and you had this realization of, I want to build Salesforce, I want to build a different kind of company. You pioneered this 1-1-1 model. Do you worry that there are other Mark Benioffs out there who just might be in that corporate grind and missing out on a bigger purpose? Does that worry you?
Well, I think you're 100% right that business has to be more than just making money. Because if all you're focused on is making money, you're not going to have what you really want in your life, which is happiness and fulfillment and having that great feeling every day that you deserve. And the way to get there is giving and generosity. And that can be linked with business. That's why 21 years ago, we put 1% of our equity, our profit, and our time into a foundation. Now, it was very easy because we had no employees, we had no equity, we had no products. But now, 21 years later, we have 45,000 people. We have a market cap over $125 billion. All of that pays out. That's why we're able to give 4 million hours of volunteerism, $400 million in grants. That's the good feeling I get with Salesforce every day. That's the good feeling that you feel here at Dreamforce. It's that people are committed to giving back.
Well, you all started from the beginning. I guess if companies are further along in their journey, is it too late for them to start, or do we need something to change? Does it have to come from Wall Street, like change their expectations of what they need from a company or expect from a company, or does the SEC need to come and step in? And I mean, how do we come up with a new form of capitalism? How do we actually change that paradigm?
Well, it's never too late. And I think that this is about keeping everything we had, have a shareholder return. Salesforce has had a great shareholder return, 3,500% since we went public in 2004. But we've also had a great stakeholder return. That is, we're able to give back. I mean, we're even a net zero company because the planet is a stakeholder. We're trying to take care of the planet also. You can have a great shareholder return and a great stakeholder return, and if you manage that way, you're going to have a better company, stronger values. And Peter Drucker, a really great management professor, said it well. Your strategy, well, it's going to get eaten by your culture for breakfast. The culture is the values. That's the heart and soul of the company. That's where you want to nurture. That's where this stakeholder idea comes in.
Yeah, and guys, that 1-1-1 model that he was talking about, the percentages going towards volunteerism, resources for nonprofits, those sorts of things. A lot of companies have actually signed up for that, and collectively, they've basically contributed $1 billion to philanthropy because of that.
Sonos reported better than expected sales in the most recent quarter on Wednesday night, but earnings did come in a little light versus estimates. It also disclosed its first ever acquisition as a public company. Sonos CEO Patrick Spence joined us now. Patrick, good to see you in person this time. We'll talk about earnings in a second, but your first acquisition as a public company, $37.5 million on Snips. What is that acquisition? What will they let you do?
Well, Sonos is all about experience. And so what this allows us to do is make the voice experience on Sonos even better than it is today. You know, we've got Amazon's Alexa, we've got Google's Google Assistant on the platform, and this just will allow us to round it out and create something even better for Sonos customers.
And you know, people are calling that out. They're saying, wait, is this your play at Alexa or Google Assistant? What's the differentiator here for you?
We're not going to create our own kind of general purpose Ask Anything assistant. This is to make music, podcasts, all the audio things that Sonos does so well, even better on the platform. And even as you think about setup, you think about customer care. And the other thing is privacy, right? So Snips is an on-device, local, privacy-focused voice solution. And so we think there's some interesting opportunities there.
Do you envision yourself getting into content creation?
I don't think that's an area that we really have a lot of capabilities. You know, we are strong in software. It's 2/3 of our engineering team. We're strong when it comes to the overall experience of hardware as well and the way you mesh those two. And I think that's where we want to play as we think about the future.
Talk to me a little more about the privacy, because that's something where Amazon and Google have really been taking it on the chin. When it comes to these voice assistants, what will you be doing with the data, if anything?
Well, we've got a clear privacy statement today in terms of the fact that we don't, sell data. We try to collect as little as possible just to keep the experience a really great experience. And so you can imagine we'll continue to operate in that way. And we think there's a lot of customers that think that way. We just recently introduced a product that doesn't have microphones as well, because we were hearing from customers that, hey, there's some rooms where we really don't want microphones, and we think it's important to give customers that choice.
You called out on the earnings release a $30 million hit from tariffs. How are you responding to that? That is real money for a company.
It absolutely is real money. The good news is it's a one-time hit. We've accelerated our global diversification of manufacturing. So we're just getting up and running in Malaysia. We've been doing that for a little while, but it is a short-term hit. Long-term, it'll be fine.
So you'll be completely out of China?
We are diversifying, so we'll actually be producing in China. We'll be producing in Malaysia as well, which is something we've planned for a long time, but we have accelerated it given the tariffs coming into place. But I think good news for consumers is we're taking the brunt of that tariffs. Not so good news for us, but good for consumers going into the holiday season.
Would the December 15th tariffs, if they go into effect, impact you?
The September 1st tariffs actually started to hit us. So in fact, of that $30 million, we'll take about half of it in this quarter.
You mentioned also, too, in the earnings release, a robust and ambitious product roadmap. What does that mean?
It means we got a lot of exciting things
Anything
coming.
to disclose?
One of the best things I think is that over the last few years we've really accelerated our new product velocity, and so we've done at least 2 new products every single year. We've announced a recent collaboration with IKEA as well, so 2 products with IKEA that have been going very, very well. So we're going to keep that up, and we've just started to go beyond the home. So everybody knows us. We're in over 9 million homes now. We're the leading sound experience company in the home. We're going beyond the home with Move, and we're going to do that more with new products in the future.
Autos?
We're interested in every category. We're interested in every category of audio.
So you got that partnership with IKEA. Are you looking to partner with any other retailers?
It's off to a great start. We announced that there were 30,000 units that sold on the first day. We've seen sellouts across a variety of different countries, so we're super excited about that. We think there's opportunity to do more with other partners.
One more for you before we let you go. You also mentioned that you pursue strategic options, organic and inorganic. Are you looking at more acquisitions?
I think there's a lot of interesting companies out there. I think as we think about our experience, we'll certainly be interested in other companies that help round that out for us.
Let's talk more about last night's Democratic presidential candidate debate with Bradley Tusk of Tusk Ventures. Bradley, thanks for coming back on.
Thanks for having me.
Who do you think really stood out last night? And as Jess was saying, I think she was being kind to describe it as one of the more mellow debates. There wasn't much fire last night.
No, there wasn't. And really, ultimately, when you think about who won or lost the debate, it's who did the narrative change for in a good or bad way. The debate in and of itself only matters and how it impacts the next poll and turnout and everything else. So if you're Buttigieg, nothing, you were ahead in Iowa, you came out fine. Warren didn't have a great debate, but I don't think the narrative around her really changed. Biden probably continued to reinforce a negative narrative, which is just like he kind of can't take his foot out of his mouth. And people like Klobuchar and Booker had a good performance last night. We keep seeing those two or Harris do well in debates, and it doesn't really translate into anything else. So, it's only relevant to the impact on where people stand in Iowa and New Hampshire, and I don't think it really changed anything.
So it seemed to me that Cory Booker actually got a lot of time, especially towards the end of the debate, and I think that he actually took some really good shots at Joe Biden on marijuana, the incarceration of African Americans who have been caught with possession of marijuana, and then at the end, I thought that his closing with John Lewis seemed to play pretty well with the crowd and based on social media with the broader electorate as well. Do you think that Cory Booker, because he is still lagging in the polls, has really kind of gained anything in the debate yesterday, or is he still kind of in trouble?
I think he's still in trouble. I do think that he's positioning himself really well to be the running mate with someone else on that stage if that's what he wants to do and if they want him, and I think he would be a really good pick. But the one thing that's interesting is, in terms of timing, voter attention span is so limited these days, all of our attention span is so limited these days, that in a weird way, surging a little late is not the worst thing in the world. It's like Warren seemed invincible a month ago, and all of a sudden now it feels like it's passing a little bit. Buttigieg is having his moment right now. We'll see if it holds. So whether it's the late entrants like Bloomberg or Patrick, or someone like Klobuchar or Booker kind of gaining steam heading in.
Obama surged late.
Yeah, absolutely. So, and I think we're just in a world now where, in a weird way, once people are kind of used to you and get tired of you, they move on. And by the way,
basically,
fatigue, if you will.
Yeah, and you guys do also, right? It's more fun to talk about something new than because at the end of the day, like Bernie Sanders last night sounded like Bernie Sanders, right? So like it's
I
no
wrote
different.
the damn bill, right?
Yeah, right. He sounded like that in
That's mine.
2016. That's what he is, right? So yeah. So in a way, while it doesn't seem likely that Booker would all of a sudden surge, it's a weird year in the sense that I don't think the timing is the way it works conventionally.
Well, talking about Wall Street investors, so when they look at the debates, who do you think they see as better for stocks in 2020?
Right. Well, they certainly see Warren and Sanders as bad for stocks. So to a certain extent, I think if you ask them, there's sort of three categories. There's someone like a Bloomberg, a Deval Patrick, maybe a Steyer, who they think, okay, this person would actually be genuinely good at dealing with the economy. Then you have people who they think probably are somewhat harmless, so that's a Buttigieg, a Biden, a Booker, and people they think are really harmful, Warren and Sanders. So I think ultimately anyone but those two is probably fine with them if there was a world where someone like Mike Bloomberg was president, and they would love that.
Yeah, you mentioned Mike Bloomberg, and I know that you have worked with him in the past, still talking to the campaign. What is the status there? And as I just asked our colleague in D.C., Jess Smith, I mean, he wasn't on this debate stage.
Right.
He's unlikely to make the cut for the next debate. So does that matter? I mean, not being present in the debates, how does that affect things?
I mean, it's a good question. And unless the DNC changes the standards, Mike's never going to qualify because he only has one donor himself, right? He self-funds. He believes that makes him totally independent and therefore less susceptible to all kinds of special interest politics. But that's not the 200,000 people you need to qualify for the debate. So look, I think he'd rather be in the debate than not. But again, this is he's running an unconventional campaign in an unconventional year. He's not really worrying about those early states like Iowa and New Hampshire. He's going much more for the bigger states later on. And so, I guess the question really is, if we get to a point where he's in that very top tier as we're moving on, but of course, he's never going to have more than one donor. Does the DNC have to change the criteria at some point? I think they will eventually.
Guys, I want to read to all of you just quickly this comment from a New Republic piece today, recapping the debate. I thought this was interesting. The writer says, these increasingly stale cable news outings are starting to feel like America is on a long drive with nothing to think about. And this writer said that last night's debate especially felt curiously inconsequential. Do you guys agree with that? I thought that kind of nailed it.
Yeah, because they didn't come out with new ideas. It was all the same platforms, the same plans that we have already heard of, and no one really stood out as like that big of a change.
But we keep doing them. We feel like we got to do them.
I took issue with the format.
We're getting kind of bored a little bit.
I took issue with the format where each candidate was getting one question and then they would move on to another candidate with a separate question. So there wasn't a lot of vis-a-vis comparisons between different candidates on the same platform. I would have liked a substantive discussion on something like M4A or the wealth tax in a longer format than it was yesterday.
Yeah, I think that's right. I mean, look, it's the same thing over and over again. They have their views. They're not going to change that dramatically from debate to debate. But if you said, okay, we're going to talk about Medicare for all or the wealth tax or universal basic income or whatever they want to do, you could probably have a much more substantive conversation.
Right. Really interesting. So they should be taking some structural tips from Brian Chung. You should let them know. Maybe Yahoo.
I'm available.
I'll connect you to the game.
To moderate or be on stage?
Moderate,
okay.
please.
Okay.
No more entrance.
Bradley Tusk, thanks so much.
For having me.
Good stuff.
Climate change is a growing issue for voters ahead of the 2020 elections. And in last night's Democratic debate, presidential candidate Mayor Pete Buttigieg talked about the importance of getting the message out on the issue.
I believe that the quest for the carbon negative farm could be as big a symbol of dealing with climate change as the electric car in this country. And it's an important part of how we make sure that we get a message out around dealing with climate change that recruits everybody to be part of the solution, including conservative communities where a lot of people have been made to feel that admitting climate science would mean acknowledging they're part of the problem.
Well, there's a new bipartisan caucus focused on bringing passable climate legislation to the Senate. It launched recently, and it's already grown to 8 members. Joining us now is Indiana Republican Senator Mike Braun, who is a co-founder of the caucus, and New Hampshire Democratic Senator Jeanne Shaheen, who is a member. Senators, thank you so much for joining us. Appreciate it.
Good to be on.
Senator Braun, I want to start with you about why you decided to co-found this caucus with Senator Chris Coons of Delaware. What specifically are you all hoping to achieve here?
Well, for me, it was easy in the sense that I've been interested in conservation since I've been a kid, have taken that idea of being a good steward of the land, involved in farming and forestry, building a distribution and logistics business. It was just part of what I always thought conservatives weren't, out there talking about it enough. Our conservatism, conservation, almost spelled the same way. I think we, many times as conservatives, are foot draggers on the issue. I compare it to like healthcare, where we've been apologists for a broken industry. I want to be involved in the conversation, and when Chris finally found a Republican that said yes, then it cascaded to where we actually now have 4 others. So Marco Rubio joined as the last member.
Senator Shaheen, I want to bring you into this because information from the Energy Information Administration, the federal government, shows that, for instance, coal. In the United States, over the last 15 years, we've gone from generating 40% of our electricity from coal. It's now down to about 30% and falling because no one's building new coal plants. It's natural gas. So what could this bipartisan caucus do to advance those kinds of changes, which already seem to be underway?
Well, I think there are a number of things, and we had at our first meeting heard from 7 CEOs of major companies, many of them in the energy industry. And what they said to us is they would like to see policy at the federal level that helps drive some of their business decisions. So that's one of the things this Climate Caucus can help work on. And I think it's a very positive step. When I first got to the Senate, this was a bipartisan issue, and it is, again, a bipartisan issue because it affects people across this country. In New Hampshire, we're seeing it in our wildlife. Our moose population is down 40%. The threat to our coastal infrastructure. It's something that people see, and they know we've got to do something about it. And that's one of the things that this bipartisan coalition can help address, is come up with policies to make some progress on responding to climate change.
But is there a specific that you can point us to, whether it's legislation or real change that's going to happen, say within the next 12 months? Share it with us, please.
Well, I think we have to get it passed, but Rob Portman and I have had legislation around energy efficiency, which is the cheapest, fastest way to deal with our energy needs. It's passed out of committee for about the fourth time. We now have a House that's going to be willing to listen when this bill comes over. It has bipartisan support in the House. So I'm very optimistic that we can get this done. It would be the equivalent of taking about 12 million cars off the road and save consumers about $16 billion a year. So that's a very real deliverable that we could get done this session of Congress.
Senator Braun, bipartisan support for all of this is obviously quite important, but what about support on your side from the top? In other words, the White House has been very resistant to making changes related to climate change, obviously pulled out of the Paris Climate Agreement, and has decreased regulation on this issue. So how do you push these changes forward when you're not getting that support from the administration?
So when you look at those signals, it would maybe say, hey, there's not an interest. But when it comes to the Paris Climate Accord, we've got a lot of heavy lifting to do with China, India, many others, when our trajectory's been on a pretty good angle for some time. I don't think that means that conservatives aren't interested. I think we would probably take the approach of using technology, innovation, the low-hanging fruit like pushing conservation, reforestation. I think we're going to find those commonalities, and I even believe the White House, when they know that we're trying to do this in a way that we agree on the simple things, it'll evolve. And until I guess I decided to be on the Climate Caucus, look at Lindsey Graham, Lisa Murkowski, Mitt Romney, Marco Rubio. That's a pretty good cast across the board in our conference that, that's how you start to change things. And I think it's an easy argument to make because I believe it's the biggest issue in the future. Healthcare costs are currently. This will drive the equation down the road.
I got to ask both of you, as a citizen of the United States, it's encouraging to see two senators who on other issues you are polar opposites, the wall, for instance, polar opposites come together on an issue like this. But I got to ask you, kind of the elephant in the room, we're watching day 5 of the impeachment hearings, and there was a topic that took center stage in last night's debate. Listen to what the candidates who were trying to get the Democratic nomination had to say, and then I'll follow up.
We have a president who is not only a pathological liar, he is likely the most corrupt president in the modern history of America. But we cannot simply be consumed by Donald Trump. Because if we are, you know what? We're going to lose the election.
We have to establish the principle, no one is above the law. We have a constitutional responsibility, and we need to meet it.
The impeachable conduct that we have seen in the abuse of power that we're learning more about in the investigations.
Senator Braun, I want to start with you because you are a supporter of the administration and the president. And just today we had Fiona Hill say the narrative about Ukraine meddling in our election in 2016 is just false. It was Russia. What do you say to the president, or how do you react to those Democrats who are trying to become president?
Well, what we just heard there was very caustic, and I think none of us know exactly what's going to eventuate in November of 2020. So I think there is a little bit of damage done when you're out there with that kind of vitriol. And all I can tell you is I'm a newcomer here. But when I look at what was happening before President Trump got here, we weren't knocking it out of the park. And I think even Jane would acknowledge that we've got a lot of ways to improve the federal government running
Senator, but forget about the Democrats last night.
Yeah.
What about what you're seeing for the 5th day on Capitol Hill in terms of, in some cases, lifetime government employees or public servants who are making these allegations about the commander-in-chief?
Here's what I see. It's a political process from when it originated. It goes back to November of 2016. And I don't think you're going to have anyone change the lens you're looking through. But the merits of the case ought to be determining how any of us would look at it. And I think clearly, regardless of the witnesses, which I don't discredit their origination, their point of view, it, for most of us on our side, does not rise to an impeachable offense. And even the public opinion polls hit a peak about 3-4 weeks ago, and I think independents in swing states, which I know Speaker Pelosi would be looking at, don't think so either. So it depends on which political lens you're looking through.
Except Senator Shaheen, polls aren't necessarily facts. And again, I got to reiterate, Fiona Hill sent a warning to Republicans who are going on a narrative that is just inaccurate. So what do you say? Well, I mean, you guys are clearly talking to one another, which we are appreciative of. What do you say to your colleague?
Well, I have a different view. I'm very concerned about Russia's meddling in our 2016 elections. We've heard very clearly from the intelligence and national security establishment they're doing it again. I think we need to take measures to address that. It's not the Ukrainians, it's the Russians. And we need to see what happens as the result of the proceedings in the House. There are very troubling allegations that have been raised. I think we need to let that information come out. We need to see what the House sends us. And in the Senate, we will be juries if there is an impeachment proceeding that comes over, or the equivalent of a jurors. And so I'm not going to prejudge the case. I'm going to wait and see what gets sent to us. And I continue to believe that we have an agenda that we need to work on in the Senate. I hope the leadership in the Senate will let a lot of the legislation that is bipartisan come to the floor so we can get it done. And as Senator Broad and I both agree, there are efforts that we can make to address climate change in this country, and we need to get working on those because it is an existential threat to the planet.
And it is encouraging to see, people from other sides of the aisle coming together on this issue. Senator Mike Braun from Indiana and Senator Jeanine Shaheen of New Hampshire, we greatly appreciate your being here on The Move.
Thank you.
Let's turn to the pet industry. It's expected to reach a total $281 billion by the year 2023, and retailer Petco is hoping to cash in on that with something that maybe the others aren't doing, and that's despite the rise of Amazon. Here with us to talk about it, Petco CEO Ron Coughlin. Great to have you here. Last year, you launched an initiative. You don't sell food product for animals that have what? That have food colorings or even artificial
ingredients.
How's that working?
So a year ago, we made the decision to eliminate products that had artificial ingredients. So propylene glycol, which can be found in antifreeze, or butylated hydroxylene, which can be found in laundry detergent. We eliminated all those products, which means we took off about 1.5 million pounds of foods from our shelves. And our adage was, what's good for the pet's going to be good for the business. And not only did we save a bunch of pets, but at the same time, our business went from a declining business to growing 3 to 4%.
So as I was reading about this initiative that you guys are doing, it seems as though you're sort of positioning yourselves as the Whole Foods of the pet world, in a way, sort of that natural alternative. Is that the way you stay competitive? Because you do have as we talked about Amazon, you've got Chewy, you've got other mom and pop pet stores. Is that kind of how you're positioning yourselves?
For the food part of our business, absolutely. If you think about, we're really in the business of improving lives, pet parent lives, and our folks in the stores' lives. And so the food part is eliminating the artificials, but at the same time, we're doing the fastest build out of a vet network in history, all on the premise of affordable vet care, because a lot of pets don't get the vet care that they need. We're also, through our foundation, which just had its 20th anniversary, we save 400,000 pet lives a year that would otherwise be euthanized. So we really see ourselves in pet wellness, a part of which is this nutrition move that we're making.
David, do you have any pets?
I will tell you that I have grandchildren who have pets.
Excellent.
And teaching pet wellness is teaching the owners of the pets wellness.
That's right.
So I congratulate you on the
Thank you.
initiative. And my grandchildren don't know that they should congratulate you too, so I'll do it for them.
Thank you. Well, you know, education's a big part of it. 30% of customers don't know that they're feeding their pets artificial ingredients. There's over 1 billion pounds of food that has artificial ingredients that people don't even know.
Ron, what's the breakdown for you between e-commerce sales and in-store? Because it does seem to me, you know, as a dog owner, that pet food, hypothetically, should be something that it makes sense to just get online. I don't necessarily see a reason to go to the store. And yet, even as I say that, I'm not someone who's transitioned to buying it online. I'm used to just going around the corner. I mean, I'm lucky enough to have a place walkable from my house that sells the dog food, but I haven't become, you know, I have never used Chewy, I've never ordered from Petco online, never ordered pet stuff from Amazon. But what's the breakdown right now, and are you headed toward a time when most of the sales are e-commerce?
Yeah, so e-commerce is around 10-15% of our business, but it's growing 20% plus. And if you looked at the Amazon and Chewy's, they were somewhat disruptive, and we had to go back and retool at Petco. But in the last year, we've launched buy online, pick up in store, which is now shockingly 60% of our online sales.
Like Target, yeah.
Like Target. I am amazed at just how much that is taking off. Repeat delivery, we have our app with 1 million downloads now. So we're very much, now digital is a tailwind to us before it was a headwind.
But you offer something, and I picked up in an earlier response to a question, that Chewy cannot offer, that Amazon cannot offer. It's the vet services. And we keep hearing from retail earlier in the program, you know, traditional retail at department stores, one way they might be able to save themselves is the experience. Is the experience of being able to take my pet for a more affordable veterinary service something that only you offer, or is your competitor, you know, the other guys, PetSmart, I think it is, are they offering that kind of thing, or are you alone on this?
No, they have vets in a bunch of their stores as well, but we believe we can do something more holistic. It's not just the vet service, it's the grooming, it's the food without the artificials. We believe we're the brand that's looking after the pet most.
How does the cost structure work for the vet services in particular? How do you offer it in a more affordable way? Because for all of us who have pets, I mean, especially medical care for your pets is indeed very expensive. How do you get the cost down?
Absolutely. We work on cost initiatives. We're trying to automate. I come from the IT industry. I ran HP's PC division for 10 years. So we believe there's a lot of automation we can do and working with our vets on productivity. But you talked about you know, the affordability of vet care. My dog, Yummy, he's 11 years old, and he got diagnosed with cancer this summer. And after diagnosed, the vet tech came in and gave me a bill that it was going to be roughly $20,000. I'm lucky I could afford that. But it struck me at that time that a lot of people can't. And that's why affordable vet care is so important. And we're also going to work with the foundation on helping people who can't afford to make sure that the pets do get taken care of.
Last question for you, privately held right now. Any need to go public, any plans to possibly go public, to raise the kind of capital that would allow you to take on competitors in a different way?
So we have great partners with the PE firms of CVC and CPP. We have no need to do anything. Right now we're focused on growing. We've been growing you know, for the last 4 quarters. And now we're focused on driving EBITDA growth, which we'll share with our lenders next quarter. So we're on the right track, and who knows what will happen in our financial future.
We look forward to having you come back to discuss what will happen in the financial future, and we wish Yummy all of the best. Petco CEO, thank you for being here very much, Ron Coughlin.
My pleasure.
Competition continues to grow in the world of streaming. Disney Plus debuted last week, and another subscription platform, Topic, joins the streaming universe today. First Look Media owns Topic, and CFO Drew Wilson joins us to talk about what subscribers can look forward to with this brand. And there's a great deal of competition out there. So what are we getting from Topic that we don't already get from, say, a Netflix or a Disney Plus?
Sure. So we have spent the last 3 years cultivating and speaking to our audiences through our journalism and through our studio successfully. And now we're doing the next step forward in our progress of our business model, which is to offer a premium channel to these, what I would call socially conscious, world-minded people who like the kind of content that we've been doing and now able to get it both for dramas, comedies, documentaries, shorts, all of those types of contents to them through this service.
So Drew, this was built in-house at First Look?
100%.
So we know First Look as Pierre Omidyar's thing. We know that The Intercept is one of the news sites in there. So are you guys going to be incorporating content? Should we expect to see stuff from the news sites that First Look Media owns on Topic? You know, news programs with some of those reporters. How will that work?
So there's two ways that we leverage that relationship of the reporting. One is those kind of stories create formats for which we can then produce into television and film. So from that perspective, we've had that, and we will continue to have that operation for us. Secondly, what will happen is we are able to produce for ourselves stories that are in the formats of shows, talk shows, and deep issues around subject matters that we focus on across the company. That is available to us as original productions that we'll make as well, separately.
Now, price point wise, I believe you guys are at what, $5.99 a month?
$5.99 a month.
So a little bit more than Apple, a little bit less than Disney. And I think Topic is, just in terms of name, not as well, you know, it's not a known brand at this point. So besides the price point, how are you getting the word out? How are you getting people to sign up for this thing?
So our model is about a niche channel. We're a niche channel, and the behaviors of niche audiences are very different from the aggregators, the big channels. And so we know who our audience are, and we've spent the last 3 years getting to know our audience, and they like the content we make, and we've given them very high-end, premium, award-winning journalism. We know what they want, and they're already engaged with us for the last 3 years. So this for us is just providing the next level of access to our content to them. So in a niche format, unlike the big ones, the criteria to make it to
profitability
and scale is not the same. We don't need to be at 80 million households.
What would that number be? Because you do have essentially the not-for-profit, the news sites. Then you've got the for-profit entertainment sites. And when I ask you the number, the magic number, if you can share it with us, it's because there's this ridiculous bubble that people are writing about of hundreds of millions, billions of dollars being spent to buy content. I can't imagine you're about to jump into that game.
No, that is not our lane. We're and another thing I would add is, we're programming specifically to our niche audience. We're not programming as a general entertainment site. That's not what this is. And so for us to get to profitability is a far less number. It's less than 500,000 subs. It's a tiny amount of subs that is required to make this engine run quite profitably. Now, that is the behavior of people who subscribe to niche channels is so different in that when you think about channels like WWE, Crunchyroll, Acorn TV, which I used to work at, the ability to super serve this distinct niche audience. And to be clear, niche is not small, it's distinct, right? And so we know who those people are, and they're already engaging with us from social all the way to our direct lines, and we've been engaging with them for 3 years. So we're confident we can hit that group.
Drew, I just want to push you a little further on the idea of competing, and it's smart, as you say, we're not trying to be in that lane, we're not competing with the big guys, although at the same time, even if you're niche and you're saying we specialize, we're distinct, you are competing for share of wallet, right? And there's 100%. So many of these things now. You know, last week I had the chance to interview the CEO of Discovery, yes. David Zaslav, and you know they own all these channels and Food Network now and THC, and he was saying that TLC rather. He was saying that he predicts a lot of carnage. That was the word he used in the next few years because everyone is launching a streaming service. There's no way they're all going to thrive and survive. So is that something you worry about? At some point, we'll hit a time where people look at their plate of all their OTT subs and they say, "I'm just paying for too many of these things."
I think from our view is that there will be a category of large players who will win, the Disney Pluses, the Apples, the Amazons, and the Netflixes at some level. And then there's going to be this category of niche players who are the consumers making a different decision around them as why they're subscribing to them. That group, those two groups can exist very nicely together. The guys in the middle who are non-distinguished channels who are making premium content, but they are a cable channel who thought they had a relationship directly with a consumer, but now realize it's a much harder proposition, will struggle. We'll struggle because that is a commodity decision between that and the large aggregators. What we know about niche players and niche consumers around is that when they decide whether to continue to pay for our channel or not, they're making that decision in the wallet against all household costs because it's a passion for them. It's not just a source of entertainment. It's giving them something that's super serving, something that's passionate for
Well, a
them.
great many people already know The Intercept and some of the product. The platform is topic. We wish you the best. It was good to have you here, Drew Wilson. Thank you very much.
Thank you so much.
All right, well, navigating the secrets of success in the workplace is a question that has stumped many, but our next guest explains it's not about finding a mentor, but rather finding a worthy rival. The leadership expert with the most popular TEDx talk of all time joins us now on how to be a more effective leader with the help of tricks from Steve Jobs and Martin Luther King as well. Here in studio is the author of The Infinite Game, Simon Sinek. Simon, good to see you.
Nice to see you.
Thank you for joining us. I mean, when we talk about it, it does seem counterintuitive to think of focusing on a rival in the workplace that might actually burn you out a little bit more competition. But why is that a good thing?
So business is, there's no finish line in business. There's no such thing as winning business. And if you think about sort of how business works, it's this infinite game. There are finite games and there are infinite games. According to James Carse, a philosopher, finite games are defined as known players, fixed rules, agreed upon objectives. Any sporting event, there's a beginning, middle, and end. And if there's a winner, there has to be a loser. An infinite game is defined as known and unknown players. The rules are changeable. You can play however you want. And the objective is to perpetuate the game, to stay in the game as long as possible. And so when we think of other people that we work with as competitors, or even other people in our industry, other companies as competitors, that's demonstrating a finite mindset, the false belief that we can win in a game that has no finish line. It's much healthier to view them as rivals. And some of those rivals are worthy of comparison, which means they're actually better at some things than we are. Having worthy rivals means that their strengths reveal to us our weaknesses, and if we know our weaknesses, it means we can build upon them. And ultimately, the only true competitor in an infinite game is ourselves.
Yeah.
And so when we know what our weaknesses are, we can become even better at what we do.
So kind of use them as a foil to kind
exactly
of reflect inside.
Should you constantly be changing up who your rival might be as you attack your own weaknesses and turn them maybe into strengths or get better? Should you say, so right now, Zach might be my workplace rival.
Yeah, she always fills in whenever I'm out.
But maybe next week it's instead Yahoo Finance's Brian Chunk. So I mean, like, as we evolve, should our rivals, I guess, also evolve?
Of course, as we get stronger and better at what we do, there are going to be others out there who challenge us more, or they may no longer represent a challenge. There's something that they do that's no longer better than us. I wouldn't change them every week, but you can, of course, select your own worthy rivals. You can have as many as you like. They can be companies, they can be individuals. It's whose ever strengths reveal to us our weaknesses, where they absolutely do something better than us. We all know what it's like when we view each other as competitors in a workplace. It's unhealthy. We've all had the experience where someone we work with maybe got a promotion and we got angry. Like, think about that for a second. We got angry at somebody else's good fortune, right? The odds are there's something about that person or their personality that's making us uncomfortable. It's probably revealing a weakness in ourselves. It's much better to take that energy away from being against somebody and trying to undermine them or get ahead of them and rather focus on ourselves. So yes, have as many as you like.
Or the idea that it's a zero-sum game, that if they get the promotion, I can't, and then it's not an infinite game.
Exactly.
Which would get back to the heart of your book. But it's not, I mean, you've been focused on leaders for a long time, right? You've looked at how they communicate effectively. So, I mean, when we're thinking about it in kind of having a healthy competition, I mean, is there anything maybe that leaders have been able to do that maybe people who aren't getting ahead have not been able to do?
Well, they ask for help. One of the things that I find remarkable about many of the great leaders that I had the chance to meet is they all recognize that as much as they know and as much as they may have accomplished, they still don't know even more things, and they need help getting to wherever they are getting. I find them sort of remarkable. They all consider themselves students of leadership. None of them consider themselves experts. You know, you walk into these people's offices and they're very accomplished.
Is there one particular that stands out when we're talking about these leaders?
I mean, it's the leaders we admire. It's all the ones we like. They lean in with curiosity. You know, whether they're generals or politicians or CEOs or whatever they are, they have curiosity for the ideas of others. There's a great definition of humility that I love. It was given by Bob Gaylor, the 5th Chief Master Sergeant of the Air Force. He said, "Don't confuse humility with meekness. Humility is being open to the ideas of others." So you can have a big ego and think you're wonderful, but if somebody says, "I have an idea," and you lean in, so let's hear it, that's humility, and I like that in a leader.
Very much so. But very interesting stuff too, because people might not think that it's good that we have such a good friendship, that we can be friends and also rivals at the same time. But Simon Sinek, thank you so much for bringing all that down.
Thanks for having me.
Appreciate it.
Appreciate it.